The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and welcome to Traders Corner's Prop Trading Special event. On our panel today, we've handpicked 7 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free educational forum. In today's Investor Summit, we're going to learn a wide range of topics regarding prop trading, from the 3 keys to passing prop trading evaluations to how to leverage AI, artificial intelligence, into an automated strategy. So let's not waste any more time. I just want to say that we at Traders Corner have handpicked, presenters, gurus, strategists, mentors, whatever it is. And I want to thank the almost 2,000 registered attendees that are already in attendance for our everything. We've brought you quality. We've heard you. You've responded to us. Thank you to everyone. Our first presenter has been a trader and trading educator for over 4 decades. He has over 1 million views of his 4-minute drills for traders found on YouTube. He's a former commodity specialist for Payne Weber and has managed extremely large trading accounts as a commodity trading advisor. Here to present the 3 keys to passing prop trading evaluations, like I did, is Mr. Norman Hallett of The Disciplined Trader. Welcome back to Traders Corner, Norman.
Thank you, Rob. Boy, I tell you, you got the end of it. They usually put me first. I'm glad I'm first today, too. I enjoy that spot. Whenever I do the live stuff, I'm running around the stage and so on. I got to get you with me. You're an exciting intro guy.
Hey, you're welcome to message me. I would happily attend one of these events.
All right. Well, thank you for having me, Rob. I want to thank everybody for being here early. I know that there's a number of speakers, some great ones today. So it's just not me, but I wanted to kick this off today, and they allow me to do this because I've been actually in the it's true of a lot of trades. A lot of traders out there are great at teaching, but when it comes to actually trading, they're not quite as successful, and that's okay. You can learn from somebody who is a great teacher and can give you the advice and so on, and then you can take that advice and win with it. But I know for me, I like to get in there, and if it works for me, I want to show you how I did it, and that's what I want to show you today. The 3 most important things. Now, I was known in the early part of my career for building trading plans for the first 15 years of my career, and when you're doing prop trading, and for those who don't know prop trading, I'm sure you know something about it, but you're trading their money, and you're getting, in most cases, 80 to 90% of the profit. I have you're looking here at a couple of Apex funding certificates, and they're 90%. And so, in fact, this Top Step. So I tried each one, was able to pass the testing period, and which is different for both. I'll show you a little bit about that. I'm going to talk about these 2 firms because there are probably 50 firms out there that are will offer you the money to trade if you can pass their qualifications. But I chose these 2 firms. They passed my criteria because they were very high on they've been around for a while measure, and that they've paid out consistently for years. So these 2 firms get through the testing, and you earn money, and you earn money with their money. They're going to pay you the 90% that they tell you. So I've already received check from them, so I know what's I've been here full circle. So I want to show you. I have a terrific trading plan that we offer our traders called Loaded Gun, and I had to adjust that plan just a little bit to cruise through these qualification positionings in these firms. And I want to show you today. I want to show you what you may want to do with your current trading plan, and the tweaks that you may want to make, that you really should make, I think, in order to breeze through passing and getting funded yourself, because it's a terrific thing. I've gone, when I first looked at this, I said, is this true? I mean, do they give you 90? Is that real? Well, it is real. And I really think that especially retired traders, retired individuals, traders who are trading what I call short money, $5,000, $10,000, $20,000. Not easy to make money when you've got your kind of cash back against the wall. Well, when you're giving these amounts of money, and it's somebody else's money, it's a lot easier to do and a lot less stressful. There still is stress, there still is pressure, but it's a lot less than having to risk your own money. So let's get into it here. I've only got 45 minutes, so I'm going to really breeze through this. First thing I want you to have is my email address. This is my personal email address. Don't abuse it, but if you have any questions about what I'm saying today, or any questions at all about the idea of prop trading, let me know, and I'll do my best to answer it. I find that being helpful to people only comes back to me in other situations where I need help and people being helpful to me. So I'm there for you, nhallett@thedisciplinedtrader.com. Probably could have picked a better URL. Discipline is not easy for some people to trade. That's my assistant barking in the background. Okay, here is the presentation proper right now. 3 keys to passing prop trading evaluation. Broken it down to 3 keys. I'm going to make you an offer at the end that's very inexpensive that I really want you to take advantage of. It was actually pre-launched. The pre-launch was this week, and I just launched yesterday. So you're getting in right in the beginning of what I'm going to offer you. But let's get into the meat of this thing. A little bit about my background. Rob was kind enough to tell you about the hits that I get on my sites and so on. But I wanted to bring out the fact again that I was all about trading plans for the early part of my career, and I think that really helps me to really approach what I'm talking about here in a very constructive way. I also believe in simple trading plans. When you see my charts in a second, I'm going to show you a few charts. You're going to see how simple my trading plan, my trading plan, or the way I look at things are. And I urge you to think simplicity. I urge you to think simplicity. So here are some things. Oh, here's Rob and I were talking about leading off. This is actually a video of me leading off a Traders Expo thing years ago. So I don't know how they got that, but they sell it. I don't get anything from that. Payne Weber. I'm going to close my door. Hang on one second. I'm sorry, that's very unprofessional, and that's not like me. My wife, that was her fault. She left the door open. All right. I did work for Payne Weber, as I mentioned. I mean, my background, you can look it up. I ran one of the largest option firms in the country for years. My focus in the last 20 years has really been the mental and emotional aspects of traders. And one of the things that I like to put into my analysis and my building of trading plans, and especially with the approach of passing these prop tests, is making sure that I build in mental and emotional capabilities, bring those out in you. Because unless you're a disciplined trader, don't even try this. Don't even try this. Don't try to be disciplined. Don't be undisciplined, do it, and then start to be disciplined after. Work on your discipline right away. I've got ways to do that. It's another discussion. But if you believe that you can be disciplined, let's keep going, okay? I want to show you first, this is Apex Trader Funding. It's the one that I've actually signed up with. It's the one I've gone to, and I originally started with Top Step. That was my original choice. But those on my list who are actually doing prop trading, they suggested that I take a look at Apex. They're both valuable firms. They both will do the job for you. I'm going, you can take your choice, I believe, of the two or any others. I'm just going to show you today some of the things that will, I'm sure, work with all. There are some positives and negatives with Apex and when you compare the two. But if you're good, you can turn those, like in life, you can turn the negatives into positive. But I want to show you one thing. The first thing I want to say is, if you're going to do this, I'm going to let you look at this screen just for about 30 seconds. Just take a look, and I'll shut up. Okay, that was a short 30 seconds, but I just want most traders that start, go with the 50, try to get the 50,000. Look at 25, they think it's small. 50, let me start with 50. It's only $167 a month. This is what Apex will charge you. They have discounts all the time, but let's just talk about the main charges. You're charged $167 a month as you're testing to pass this. And all you have to do to test is to make $3,000 before you hit the trailing threshold of 2,500. And it's the definition of the trailing threshold that's important here that I want to spend time on. But the first thing I want to show you before I do that is that look at when you're trading futures contracts, and that's what you'll be doing here. $2,500 is you know, you can get there pretty easily if you don't watch out. If you have a bad couple of days, you'll hit that. You're likely to hit that at least a lot more likely than you are to hit this right here, the $5,000. Okay, it's only going to cost you another $150, $140 a month. I know it, $130. I know it sounds like a lot, $297 a month. And again, they have specials. I think they may be running special right now. But the idea here, in fact, I have discount specials for you. If you want to use my email address, I'll email you what I have. Email specials to Apex, I can give you discounts to that. Minimum 20%, but sometimes they're more. But what I'm saying is that if you're good at this, you're only going to have to deal with 1 or 2 months of paying the monthly fee. Okay, you're only going to have to deal with 1 or 2 months to make your $9,000 before you lose 5. So don't get so caught up in the monthly. Okay, because once you pass, you're going to be making 90% of the profit that you make. Now you got to, in this particular case, when you try to qualify for $150,000, you're going to be asked to profit $9,000 before you hit the threshold of $5,000. Okay, and I want to. And here's the point I want to make. You're better off testing for this and passing this. Once you pass, you want to treat this $150,000 as a $50,000. You want to trade small, okay? And if you treat the $150,000 as if you're trading a smaller account, all of a sudden this $5,000 where you'll blow out your account and have to start over again in testing is very far to reach. So I'm just saying, test for a larger account, and then when you pass, treat it as a smaller account. Trade it as if it's a $50,000 account. Okay, I can get into more of that. In fact, what I'm going to offer you in the end gets into the detail of what I mean by that and why it's important. But I just want to tell you right now, think big here. If you're going to do this, if you've got $5,000 to $10,000 that you're trading of 20, you got to start thinking bigger. They're allowing you here to fit bigger. Now, don't worry about them making money because they're going to make plenty of money. Why? How can they pay you 90%? Well, because 90% of traders who try this lose, and then when they do get funded, it's the same rules, and they'll blow out that account there, and they have to start all over and test again. So there's, there are just, most of the people are just paying these people fees, okay? But not you. You're going to be smart about this. You're going to follow these 3 rules that I'm giving you, and you may want to go further with me. Some of the other things that we do, at least take advantage of the offer that I'm going to make you at the end. But I'm just saying to you that this is a possible thing, but you have to be disciplined, and you have to follow the keys that I'm going to tell you. Now, the one thing I want to mention is that this trailing threshold. I'm going to give you one example here. Let's say you start with $150,000. You sign up for this. You have $150,000. When the market moves higher, you put on your first trade, the market is up now. Open trade equity, $1,000. Now you have an open trade balance of $151,000. You put in a break-even stop, and you let the market come all the way down and stop you out. Okay, you still have $150,000 in your account. Okay, that you're trading. But this number right here is now 4,000 and not 5,000 because you let go of that open trade equity. Apex, the way they judge you, forces you to consider not giving away money that you've built up in an open trade. Now, most firms don't do this, and this is why a lot of traders will go to other ones instead of Apex. But Apex has a lot of other advantages that offset it. For instance, there are almost no other rules. In other places like Top Step, for instance, you can only lose $1,000 a day, or you can only, You can take on a lot less contracts than they let you take on if you're that kind of trader. But what I'm saying is that there are almost no rules really, other than don't breach the 5,000 the way they measure it. So when you count open trade equity as part of the measure, okay, then you need to do things differently. And what I mean is that you need to consider having scalping, which is something I never did much in my own personal trading. Now I'm doing it in half of what I do. Let me show you what I mean. Are you following me here? Are you ready for the 3 keys? Are you following me? I just need to, I tend to talk a lot and don't do. Somebody wants to say something in the chat, that would be great. I don't know, Rob, if you can see the chat or the questions. I just want to make sure that others are following me.
I'll double check for you.
Okay, appreciate that. I see, all good. I see an all good there. Thank you. Okay, yeah, they're coming in now. Okay, great. Okay, here are the 3 keys. I want you to get these because we have about another half hour here together. All right, you need a frequent, reliable A+ trigger. Okay, you need a frequent. I'm going to say that again. In the mini series that I'm going to offer you in the end, I go through a lot of the detail in each of these topics plus more. But you need an A+ tested trigger. You need, and when I say A+, I mean it's got to be tested to jumpstart. It's got to be the kind of trigger that gives you an immediate upside or downside, depending on whether you're long or short. Moves in your direction quickly after applied. That is an A+ trigger, okay? And an A+ trigger is where the trigger occurs in an environment that is very beneficial. I'll show you a couple of charts in a second. But what I'm saying is that an A+ trigger, it's got to pass a few hoops, okay? There are many benefits to having an A+ trigger, and you got to test for it. You got to look back, make sure that this trigger is as consistent as you're putting the label on it to be, okay? You're going to have scalp. If you have an A+ trigger, you're going to have a lot of scalping opportunities, and you need that when you're passing these prop tests, at least the way I see it and the way I've done it. And I think I've created here an easy way to do it, okay? And I'll mention why that in a second. A lot of stuff coming in a second, right? I guess these are long seconds. You have scalping opportunities. When a trigger goes in your direction early, there are many scalping opportunities. And you're not starting from a deficit. Again, the headspace thing. You know, if half the time you put on a trigger, it's going the wrong way, it starts to conjure up feelings of negativity. If the majority of times your trigger moves in the right direction, that's a positive thing. So positive expectancy when you trade is extremely important. That's part of the value of an A+ tested trigger. It's tested to jumpstart. You got to look back, make sure, test it forward. Okay, you got to have it reliable. So a frequent, reliable A+ trigger. The reliability piece is a number that I like to look at 3/4 of the time. Okay, if you have a trigger that allows you to take your scalp 3/4 of the time, and there are ways to measure the scalp that I give you in later pieces of advice and in courses, but I'm just saying to you that if you can just take a scalp, and I'm not talking about 1 or 2 ticks, I'm talking about a reasonable pop in your direction. You'll pull the trigger with confidence, knowing that 2/3 of the time you're going to have a chance to do that. You're not going to hesitate, okay? You're not going to FOMO. You're not going to chase trades. But when you know that your trigger works most of the time because you've tested it and it moves in the right direction, it is a built-in discipline. You trade with confidence. And the frequency of the trigger is also important. You don't want to have an A+ trigger that you see once in 2 weeks, once every 2 weeks in a 5-minute chart. You want a frequent trigger. You know, Rob, before we got on the air here, we talked privately about time and how important time is to traders, especially we older traders. We don't have the time. We want a trigger that is frequent. We want it to be A+, we want it to be tested, but wouldn't it be nice if it came up frequently? Well, the frequency of the trading is so that your patience is not tested. When you're waiting for your trigger and it doesn't happen, you start to talk to yourself, well, this looks pretty good, this looks fairly good, hey, this is good enough, you know, I can take that A+ trigger when I get, but here's an A- trigger that I want. And I teach you also how to prioritize the triggers that you see. Important, okay? A little bit of the pre-work, just a little bit of pre-work really puts you in the right shape to pass this with calm ease, okay? Pass the testing. So frequent, reliable trigger. Enough said. I'm a twin, so I put this up here. You want to take 2 contracts upon entrance. I want to give you just a preview of this. I go into a lot of detail in what I'm going to offer you in a second, but take at least 2 contracts upon entrance. You want to treat the first one as a scalp. Okay, for the reasons I talked about before, minimizes the drawdown. When I say that, remember my example of starting at $150,000, having $1,000 open trade equity, and then having it come back all the way to break even. The fact that you didn't take that $1,000 means that it means that the drawdown level is not the 5,000 that it was originally. They count that against you. It's now 4,000. But think about this. Let's say you put on you have the scalping contract. You put on 2 positions originally in my example. The market starts to go up, okay, and at the $250 level, where this fast moving trigger tends to take you most of the time. And again, I show you how to measure. You take a scalp at $250 on one of the 2 positions that you put on. Okay, you leave the other one on. Okay, the other one goes all the way back up to $1,000. Goes all the way to 1,000 in and then you put a break-even stop on that one. Comes all the way down. Now you gave up $1,000, but you made so now only $750 is counted against you instead of 1,000. I know that doesn't sound like much, but over the course of time, it's huge. And many times, and I also show you how to not to let go of what I call the running position. Okay, so the first contract that you put on, you put on 2 contracts. Treat one as a scalp and one as a runner. Okay, the benefit of using one as a scalp is that you minimize the drawdown as in the example. Now, you don't have to understand the example completely that I'm talking about. Sometimes it needs to be clicked. It needs to click in, but believe me, it's a huge advantage. Also, you're capitalizing on that jumpstart trigger. You've identified a trigger that gives you a nice pop in right upon application. You're going to take advantage of that. Now, that second contract is what I call a runner. You'll take it as far, and then you're going to defend your profit along the way. That's another conversation. But the idea of having one as a scalp and one as a runner really works. The benefit of the runner is, hey, listen, we're here for the big winners. We're here for the big opportunities. So don't cut that off. Don't be just a scalper or just a day trader. Okay, be both in this situation, and you'll find that you'll move through the testing with much more ease. You have the opportunity for a big winner with the scalping, and you've got to defend the growing profit. So there's several ways of doing it. You can have a stop that follows under a certain number of candles back. You can use a number of different methodologies, moving averages and so on, going to lower time frames. I show you all that, but the idea is that you don't want to let it go from $1,000 up all the way to break even. Okay, you want to do some things to defend against that. So here is really a big part of it. Okay, my suggestion to you, whether you ever take on my trading plans in the future, or my simple trading plan for this in the future, whatever it is, I want you to consider this for your own trading plan. Okay, again, this minimizes the drawdown, and there is a primary benefit here that I won't discuss other than to spit it out, and that's it eliminates the common dilemma. If you only have one position, or you treat multiple positions as one position, you're always wondering, should I just take the quick move or should I let it expand? If you by rule take on 2 positions, 2 contracts, or 5 contracts and treat it as 3 and 2, or 10 contracts and treat it as 5 and 5, or whatever. As long as you treat them as pieces, you can treat some as in the minimum 2 positions, one as a scalp and one as a runner. This takes out any thoughts of doing anything different other than following your trading plan. Okay, I hope I said that well. All right, the third key is you want to take smaller contracts and give yourself a wider range. Okay, you want to qualify for a larger amount of money to test. You want to go at least 100, 150, and the 250. You don't want to do it, I don't believe, with the 50. Yes, it's a little bit cheaper going in, but unless, you know, if you believe this is going to be tough for you, then you're looking small. If you believe this is something that can make sense, the difference between thinking small and thinking big here is it's a very small difference, but the payoff is huge. So what you want to do is go for the bigger qualification, bigger accounts, and trade them small. And this will also give yourself a wider range. So also current market volatility. So volatility demands that you allow a position to breathe. How many times have you got stopped out or whipsawed, and then the market comes right back and goes in your direction? So you've got to give some breathing room to your trading, and in order to do that, one of the best ways to do it is keep your position small. There's no problem with micros. Hey, early when I was testing for the $50,000 account from Top Step, I was 100 with Top One, from 50 with Apex. What I did was, I didn't allow it to breathe as much as I should, because I had a micro position on. I learned early to let it breathe in these tests. I put a micro position on. The market was up 50 points in the S&P. One micro. By the time the day was over, it was down 50 points, and I made $500 in a micro position. So let the leverage work for you. Don't rush this. As you build small positive money into your account while you're testing, it'll add up fast enough. Okay, you're going to prevent whipsaws, as I mentioned, by allowing the market to breathe. Okay, smaller contracts allow more contracts to be initiated and scaled out of another. But you can easily take on 3 micros in even the $50,000 account. Have some tight parameters and really do a nice job in running your trading plan with ease. It's all about, again, 90% are going to fail this. 90% of all traders fail for the same reason that they don't pass the prop test. And it's the mental and emotional capabilities of being suppressed instead of brought out. You're working against yourself mentally and emotionally. When you build into your trading plan, as I'm showing you here, the mental and emotional capabilities, bringing them out and putting them aside, not challenging them. Okay, smaller contracts, they don't challenge you as much as larger contracts. It's just by definition. And you can get where you want to go with smaller contracts if you do it the way I'm talking about, where you have where you're treating some as scalps and the other half as runners, or even less. When I put on 3 positions, when I put on 3 contracts, I treat 2 as a scalp and 1 as a running position. Okay, so I always favor the scalp, and you should too. Okay, again, it defends against the drawdown. Let's take a look at some charts. This right here is one of the triggers that we use. Look at how clean this chart is. It's an old chart, but this is from a chart when I first put together my particular trading plan. And I'm not offering you the trading plan at the end. I'm offering you the elements to put in your trading plan so that you can build one similar to this. But that's a good place to start. Okay, look here. This right here, when you have a hesitation in a market, where you have small bodies like this, small bodies. I don't pay much attention, as the Japanese don't, who created candles with the tails, unless it's something like this on the bottom, where you have this hanging man. But right here, you have hesitation, and then a strong move through some particular moving averages that we use, very simple. And when it crosses that, and I wait for the close, I go short 2 positions. Okay? In my measure, what I do is I measure the body of this trigger, this 2-part trigger. Once this closes, and I wait for the close, I go ahead and I measure this body, and I project it that same distance from the close here. This is my target for my scalp. I'll put my limit scalp to buy one of my 2 positions here, and I'll put the stop on both positions up here when I initiate the position. Well, you can see I took the scalp pretty quickly, and then I let the other one run. And I won't go through the exit rules, which are still very simple, but I need to describe what they are. I would be still in this trade the entire time, all the way down to all the way down to where I would have reversed it right here, okay? I put this in here just, you know, it's funny about trading. You wake up, you put up your charts, and this already happened. You say, ah, damn, I wish I was there. Well, if you wake up here, and here's another, the same signal, hesitation, candle on one side of the moving average, big move through that moving average. And don't go using this particular. I just want to show you a valuable trigger that I haven't given you enough of the definition of the trigger or way to use it. But look what it is, taking out the lows. This helps me with my position sizing, which is another important thing that we can't get into now. But it's your best. It's one of your best tools, if not your best tool for money management. Okay, and that drawdown again. You're always trying to stay away from that trigger to bust you out, okay? So here's a place where you would have gotten in and gotten the last part of this. Well, here's a reversal. Now, this would be a very small take. This may be my minimum. If I'm taking one day 2 to 6 contracts in an account, I may just take 2 here. Why? Even though this is a great trigger, I got to put my stop all the way down here. So you got to measure again you got to measure your risk before you take on positions. But look here, if I would have used the same measure for scalp, I would have had my scalp. But I also want to show you a losing. Here's one that's a loser. Here's another that's a loser. These didn't work out. So you must have a trigger that if it doesn't work, you're not getting killed. Okay. So here's a short situation where you had some nice big winners, a couple of losers, and you came away. You know, and this is a 60% winning trade, and this trigger does better than that. But in this example, 60%. And yes, I walked away with a lot of money here. Okay, here's another. This is fairly recent in copper. Here's another look at that signal. It took me a while to get the scalp, which would have been right around there. I'm sorry, which would have been right around this area. Okay, and then I would have been in this trade till right here. I would have been out right here. So my second position would have been from here to here. And then here's another take, but that would have been right back in, which I would have taken my scalp. Short body, short scalp. Okay, I'm sorry. Short body, short scalp. So my scalp would have been here, would have been in this, and I would have been stopped out of the other position. Okay. When I take my scalp, I move my stop to break even on the remaining position. Didn't say that. Again, there's a lot of rules I can't go through. I just want to show you the value of a frequent, reliable trigger. I'm not waiting around. This is a 5-minute chart. I'm not waiting around for a trigger. This actually is an alternate trigger. I won't discuss it. It's an engulfing pattern. But here's another trigger here that that could have been taken. So I just wanted to show you what a frequent reliable trigger is. One last, without the arrows, this from I think a few days ago. Here is a trigger here that got your scalp. This is another trigger here that took the small scalp before it stopped you out of the other. Another one here. So you can see here's a losing one. Okay, and they don't all win. Here's a winner here. This is a losing one here. So if you took this, you took a little heat, but you got it back here. So I want a frequent, reliable trigger that when it's wrong, it's wrong hopefully quickly, and I can get on to the next trade. Again, that time thing. Okay, so let me give you, I want to take some questions on this, but I want to show you my offer before we go any further, because I think you're going to want to take this. It just came out yesterday. It was just released yesterday, and I'm going to give you the pre-release price on this. This is a 5-video series on, and I'm not talking, who wants to watch videos? These are not 2-hour videos. These are, first video came out yesterday. The second video, I'm rolling them out day by day because I ask you to do a couple of short 10 or 15-minute things on your own after each of the videos. But and the second one comes out today at noon, so you're not behind. You're right in there. In fact, you didn't have to wait like a lot of people who bought the pre-release last week. Okay, you can start on this right away. Okay, the first video that's already there for you is I talk about the overview and the clear advantages of prop trading. You're going to understand how prop trading firms make their money, and what the prop trading rules are, and why it spells a huge opportunity for the disciplined trader. It's a lot in that sentence. You got to be a disciplined trader. Okay, and you want to be very confident that this dream that seems unreal, that's the only problem here. That's not one of the problems. It's almost unreal, and when you get blown out, if that happens to you, you're going to be saying, oh, see, nobody's winning. Let's do something else. This is doable. Okay, not only is it doable, but it's not that hard if you follow some of the suggestions that I'm talking to you about. And so I want to first explain what those advantages are to keep you positive as you work through. The second piece, which is going to come out today at noon, it's a short video. I already recorded it. This one was only a 20-minute video. This one was 30 minutes. This was 20 minutes. The importance of the right kind of trigger to pass an evaluation is that given evaluation with ease, you'll discover the best win ratios, and you'll discover a common trading discipline dilemma at the same time. I've talked about a little of it here, but I want to go into detail about the trigger and the kinds of triggers that you can use so that you're not wasting time, and you're not that you have that A+ reliable trigger. I'm going to show you how to test for it. I'm going to show you some examples. So I want to show you it's very important that A+ trigger is really one of those keys that I mentioned, but I go deep into it. The third piece, which comes out tomorrow at noon, is how to handle and draw the drawdown rules so that you can trade with relaxed confidence. I talked about the advantages of Apex, which, for instance, where they have literally no other rules except for watch that open trade equity. But that rule has to be honored, and it makes you a much better trader. You're going to leave, whether you stay with these things or not, and you go out on your own to get 100% of your capital, of your winnings, when you're that confident. The idea, what you're going to learn here by defending yourself against the drawdown, the way they measure it, is going to help you immensely. It's going to make you a much better trader. I'm going to show you how to handle it. I want you to understand how to keep these drawdowns low, and you'll compress the time you need to advance to pass it. I passed the 50 in 10 days. I passed the 150 in 22 days, and I can't even trade. Those are 22 trading days, and sometimes I can only put on one trade. Hey, I'm running a business. I'm making presentations. Sometimes if I put on a trade, one trade, that counts as a day of trading. If I think I could do it in 10 days or more or less, they require that you do it in it. They don't want you doing it in 2 days. They don't want you to be lucky. There's a minimum. There is a minimum, even with Apex. I believe the Apex's minimum is 10 days. You got to have 10 days of trading. They want to see a progression of a positive attitude and production from you before they'll give you the money to trade. Okay, so that's the third piece. The fourth piece, which is going to come out on Saturday, is how to run your prop trading as a business. Okay, this is the big piece. I want the retired people and those that are looking for extra, whether it's $500 every month or $5,000 every month. It's very doable here. This is the way to do it, I believe, through prop trading. How to run your prop trading as a business. Okay, whether you're trading for consistent retirement income or trading to diversify your portfolio, knowing which funding accounts to test for. I've given you a hint of that, some of that here, and when not to reset, when not to reset your account. If you have a drawdown, sometimes it looks like you may want to reset it and start from the beginning. They charge you that reset another $80 to reset and start from the beginning. Sometimes it's a good idea, sometimes it's not. I want to again, I'm doing everything to compress the time that it takes you to pass. Okay, proper positioning sizes is going to help spell a steady income for you too. There's a lot to learn about framing what you're doing here as a business. There's this piece on multiple accounts that I'm going to show you about the business. This way, if you blow out one account, okay, that you've passed 3 of these, as I have, and you blow out one account, you're still earning money from the other 2. There are tools to allow you to do that very easily. I'm going to show you how to do that in the 4th piece. On the 5th piece, I'm going to put it all together for you. I'm going to show you exactly how I got funded in the $50,000 account in 10 days. We're going to wrap it up with a blueprint of how I got funded in 10 days, $50,000, and 22 days for the $150,000 account. And here's where I put it all together, and you're going to be the next to get funded. Okay, that is where I'm going with this, and here is the offer to you. I want to, all these 5 pieces, again, your timing couldn't be perfect. The pricing I'm giving you is good for today. Why? Because it's the pre-release pricing, and okay, I promised those that bought before that others would not be getting this kind of price, and I'm sticking with that because I still haven't released everything yet. I've only released the first, so I think it's fair, and I don't think, as long as I'm not charging you less than I charge for I'm giving you the pre. I don't feel guilty about this. I'm not dishonoring anybody. Believe me, the people who are in this already after the first video, you're going to see comments underneath the video. join us. This is the way to do it. Prop trading is real, but you have to do it correctly. And I've done it. I'm going to show you how I did it. Okay. The fourth piece, the fifth piece, fifth piece, the last piece comes out, I guess, what, Sunday? So this is Wednesday, Thursday, Friday, Saturday, Sunday. Yeah. And you'll have lifetime access to all these pieces, okay? Your investment is only $497, but during the pre-release pricing, it's $197. And you'll have a lifetime access to these, to this help, this assistance on how to build your long-term income through prop trading. You just got to go to thedisciplinetrader.com/income, okay? Thedisciplinetrader.com. I'm going to leave this. I'm going to leave that up just for a second because I know I had trouble spelling discipline when I not spelling but typing it. Somehow I missed that C. The Discipline Trader, disciplinetrader.com/income, and use the coupon code income. Okay, when you get there. All right, and it's only going to be 100. This is good for today because I'm not going to feel good about doing it 2, 3. And once I start release more than just the one that was released yesterday, we're still almost in the pre-release period. Certainly for the ones I haven't released. So don't pressure me on this. If you're going to know now if you want to do this. The price is good for today. Hey, $497 is a tremendously good price for what I'm going to save you by following some of the procedures that I suggest that you do that I use to compress time and get this thing passed quickly. Okay, $197. That's all you have to do. When you press that link, or when you can actually click on that link. But if you type it out, this is the page you're going to come to. It's a very simple page, and right here is where I show. This is. I just wanted to show you here that the series got started yesterday. Okay, the page is still up, but the series got started yesterday, and you're going to have lifetime access. So I want you to take it with us one by one, just like we're doing it. And because at the end of each one of these sections, I give you a little thing, little assignment to do to have you build this business by the end of the 5th. Okay, and have the framework for you and the way it looks for you. Okay, there's going to be alternatives that you can choose. I want you to build it along the way. I'm not going to ask you to do 2 hours of homework. I'm talking 5 or 10 or 15 minutes. But I want you to work with us as we go along, and we work as a gang on this. Okay, so there it is. I just wanted to show you that it started yesterday. You're not behind. Right here is the coupon code. This is where you're going to put in the word income. Okay, you'll put it in here, and it will reflect on the price. This $497 will become, it'll show a -300, it'll be $197 to you. So you'll put your coupon code in here, and for the pre-release pricing of $60 off, okay? So there you have it. I've got about 2 minutes. Maybe I can take one question. Rob, if you see any questions there, you can read them to me. Put it in the chat box.
Let me look.
Let me put some things in the chat box here, so that you see here the entire audience.
There's someone asking if it applies to Forex, Ari.
Yes, all of this applies to Forex trading. Some of these, for instance, Apex, I don't believe allows Forex trading, and I don't believe, neither does Top Step. When I first tested them a few months ago, they did allow Forex, but for other prop trading firms that use Forex, this was originally to help somebody with Forex, to tell you the truth. And then that's how got me interested in this whole thing. I worked with them to help them with to adjust the trading plan that I had sold them, to make sure that that not only will they pass, but they'll do it in a very much shorter period of time. So yes, it applies to really every kind of testing and so on, and just to be a good trader. But certainly positioned for this. Okay, can I trade stocks in this? I don't believe, I haven't seen a prop trading firm that allows trading stocks. I may be wrong about that. Maybe I haven't looked deeply enough. But so you'll have to look on your own. But if it did, these are they're going to have the same kind of drawdown rules, the same kind of things going on. So I suggest that you consider. This will work just as well for any chart. I mean, if you're dealing with a candle chart, do this. Use this. And the concepts can actually be used for tick charts and others. I have traders that work with me that use tick charts. Same thing, as long as it spits out a candle. Let me just put here in the.
I put your link in the chat box, Norm.
Okay, I appreciate that. I got
another one just real quick is Chris asked what moving averages you use.
That I'm not going to reveal because that's a paid answer. But I will say that for you, if you want to test, go ahead and test them. Test some of the higher single-digit moving averages. I also I don't show it in that chart, but I also use a Fibonacci moving average that really can help to keep you out of whipsaws, which is really important in any kind of situation, especially kind of prop trading. So I don't mean to be evasive, but you know, this is not a forum to give you everything I have. This is a forum to give you the framework so that you can decide whether you want to really get serious about this prop trading or not. Because if you've been thinking about it, you've been staying away, do it. I wrote a piece recently, and if you want that piece, you certainly can email me. I gave you my email. It's called The Death of Simulated Trading. I believe, having worked with prop trading now for the last few months, almost exclusively, I can tell you that I believe that my feeling is that prop trading is dead, and that why would anybody, well, I'm sorry, not prop trading, but simulated trading is dead. Why practice simulated trading just to move to your own money, where you have that big gap of mental strain, where you can sim trade through the testing of prop trading, pay a little fee along the way, and then when you get done, it's not a 10-foot hurdle, it's only a 3-foot hurdle, because you're trading somebody else's money. And if you lose, yes, you screwed up in this, it is negative and you got to test again, but you're not going into your savings from retirement, okay? So it's a much shorter hurdle, lot less motion, easier to win. So I'm saying to you that, you know, if you want my white paper on the death of simulated trading, I'd be glad to send it to you. Just email me.
All right,
well,
Norm.
that is it.
Anybody that wants the white paper, I'm going to go ahead and say Norman's email has been provided. I'm going to thank you for being here, Norman. The 3 keys to passing prop valuations like I did. I must give credit where credit's due. And Norman, congrats on passing your evaluation. Great information. And I see you've done your due diligence as usual. It's always great to have you on Traders Corner. Over 1 million views on YouTube. Ladies and gentlemen, Mr. Norman Hallett. You can find him at thedisciplinetrader.com. I did put a link in the chat box. If you're interested in being mentored by a professional trader with 40+ years experience, then look no further. You can learn more by clicking the link I put in the box. Thanks again, Norman. Always a pleasure. Please come back and see us again.
Thank you, sir. And everybody, hang around. There's some great speakers following me. I'm not the only one.
No, you are a great speaker. And ladies and gentlemen, that'll bring us to our next great speaker. He's the CEO of Trade the Pool, one of the largest prop firms in Tel Aviv, where he is the head of traders. He has over 15 years experience in day trading stocks and futures, and also develops technological tools for traders. He also happens to be a vegan. Here to present how to scale into a trade, it is an honor and my pleasure to introduce Mr. Michael Katz of Trade the Pool. Welcome to Traders Corner, Michael.
Hey, buddy, how are you doing? Thanks so much for the intro.
You're very welcome.
Is it okay if
Michael,
I'll share? Is it okay if I'll share my webcam as well?
Absolutely. You can do whatever you like to do. Most presenters like to share their screen and webcam, and then when they begin speaking, they turn the webcam off.
Okay, no problem. Let me know if I'm on. And
I can see you, brother.
yeah, okay, thanks so much. I want to believe that I have a nice face to look at, so yeah. Hold on. Close the light. Yeah. All right. So we're going to great presentation, Norman, if you're still with us, and we should definitely be in touch because Trade the Pool is an online prop firm for stock traders, and we'll talk about that.
Thank you, Michael.
Yeah. And like you said, after me are going to be great speakers as well. Shout out to my buddy Michael Nauss coming after me. So guys, how are you doing? Let me, before we start, just to get a little bit to know you before we're going on. So if you can type in maybe, just to let me know, type in 1, 2, or 3 in the chat box. And if you guys are stock traders, forex or future traders, and if you want to add more information like how long you've been trading for and stuff like that, that could be very helpful to our presentation. And you know, since we're already here, let's get to know each other. The guys at home can write questions, right? not mistaken?
They can. It'll show up in the questions box. The chat's only for admin.
Okay, gotcha. Alrighty. So the chat is only for admin, sorry?
You can interact with the audience with the questions box. The last question there.
Got it.
The chat's for you, myself, and the other presenters.
Got it. Thanks. All right. Nice. Lots of questions. Okay. I see 1 and 3. Okay. People from home as well. Nice. All right. So let's start with quick introduction. I'll keep it short because we got 45 minutes to cover a lot of information today. And like my friend here said, I'm the CEO of Tradechology. We are an online prop firm that funds stock traders. So basically, if you trade in stocks and you want to get funded by us and trade our own capital, just you go to the process of the evaluation phase, pay a little fee. If you pass that, you get funded and trade real money on our capital. We take the losses, we split the profit, and of course, I'll touch that and talk about it a little bit later on and during the presentation as well. And if you have any question during that, feel free to drop them in the questions box. Besides that, as mentioned, I also been trading myself, day trading for the last 15 years, mostly stocks, also futures. I was the head of one of the prop firm, the largest prop firm in Tel Aviv back then, and we'll talk about that in a second. And also developed some software that help traders basically to manage the trade automatically and stuff like that. Live in a moshav, it's like a small village, grow my own vegetables, and I guess that's like the balance that I have between trading, involved with money, and the other side of it, nature. So that's what keeps me grounded, I guess. So let's talk about it. The reason you see the LSD here is because a story that I have to share with you today that brought me to these initials. It's not what you're thinking of, the normal LSD, but basically initials that covered 3 principles that allowed me to get to the position I'm at today. So I had, like any one of you guys that went through the path of becoming a trader and becoming a profitable trader. I walked through that, and I guess some of you will feel the same. And with those 3 principles that I'm about to share with you, basically those principles got me to where I'm at. So it's important for me, before we'll dive into the real how to manage the trade properly and how to scale in, to cover those points. So as a trader, I struggled pretty much like anyone else. For the first 6 months, I lost 30% of my account, but I traded only with a $10,000 account. That's all I had back in my early 20s. And pretty quickly, after a year and a half, 2 years, I just realized, after analyzing my performance, I actually understood that the main reason that prevented me from becoming a successful trader is not because I didn't know technical wise how to read the chart, or the mental aspect of it affected me, but rather the lack of capital. And that's the L for the LSD, because when I started to trade, when you trade on $10,000, it's not enough to play around with. And as soon as you lose money, the mental side of it start to push in and affect your decision making. And I saw tons of times when I tried to take a trade, a great setup, the perfect one, but since I didn't have enough capital, I couldn't trade it because the price of the stock was $200. Or I took one trade, tried to get to another one, couldn't because I didn't have enough money. And the second trade that I couldn't take actually made a lot more, could have made a lot more money compared to the first one that I did take. So basically, after a while, I just understood that $10,000 is not enough for me to trade with. I went to my folks, they are good guys or good folks, and basically asked them to loan me some extra money. And when I started to trade a little bit bigger with $60,000, I started to see progress, and basically it led me to that dream. You know, I was again in my 20s, so the dream is pretty simple: wake up in the morning, play FIFA or Pro Evolution on my PlayStation, and after that trade, go to sleep and repeat it. And for 4 years, everything was amazing. I literally dream. I didn't have a Lamborghini or anything like that, but I literally did what I wanted to do. And you know, back in your 20s, when you don't have kids and you don't have a wife or just a girlfriend, you actually not committing to anything, so you just do that on and on and on. That was great. But roughly around 2015, the market took a nice dip of 5 months, and I did roughly the same. And when you go into a cycle of losing streak, and you basically start losing money to your parents because it's not your money, the emotional part of you know, of the trading or the losing part is basically starting to affect your judgment and the decision making on a regular basis. So I was kind of stuck in a snowball, you may say, and couldn't get out of that. So imagine losing your parents $10,000, and the next day you meet them over dinner with your siblings, and they know that you just lost $10,000. And it was kind of a lot for me and for them at the time. So that was a crazy snowball, and I couldn't get out of it. I knew that I need to find like the second principle, basically, or the second rule that will push me back to the game, because I knew how to trade. It just, the mental side of it affected me much. So back at the time, I developed a software that managed the trade automatically or semi-automatically for the traders. And I was eager to find an institutional traders that maybe want to try to use that platform, that's our software, and basically take advantage of it. So I made a few phone calls, and I got into a prop firm in Tel Aviv. And we sat down, we spoke. I told them about the platform, and roughly 15, 20 minutes afterwards, I was interviewed in order to join the firm. So that was something I didn't expect, but was just out of the blue. And that led me to the second principle, which is the S in the LSD, someone else's money. And this is something also Norman just mentioned before. When you trade on someone else's money, you automatically detach yourself from the aspect of money in trading. And as you know, anyone that been trading for even a month or so know how effective is the money wise, or how connected is the money wise to the decision making on a regular basis. Doesn't matter if you day trading or swing trading or even as investors. And as soon as you do that, you detach yourself from that, because you don't really care about someone else's money. It's not your parents, it's not your friends and family, right? It's just a company, a random company that you don't really care about in a good way. You automatically create yourself a great path of decision making and not involving the money side of it. So that's what I did when I started to trade at. And by the way, if you think of it, all the big players in the industry, doesn't matter if it's stocks, futures, forex, options, whatever it is, the big money that in most cases will make money, right? Like banks, institutionals of any kind, they also trade on someone else's money, hedge fund, right? Or bank. A trader in a bank or in an hedge fund or a portfolio manager, it doesn't trade on his own money, or maybe he does, but the main the main account that he owns, like in a prop firm, is actually not his. He's trading on someone else's money, so we can automatically detach that aspect. And that's amazing idea when you think of it, and that's one of the main reasons why most institutional traders actually make it in the field, comparing to us as retails, that, as you know, the statistics, 90–95% losing money. So that's simply a great idea to think of. So when I understood that there's someone else's money, I started to trade, obviously, in that prop firm. 2 years later, I became the head of the traders. I saw a lot of good traders. Some of them didn't make it, but generally speaking, it was a great experience until I reached the point of that $91,000, and that was obviously a losing trade. Just to clarify it, it was, when you think of the days, you know, it wasn't just a normal day, like a Monday morning, July, sun is outside. I'm wearing shorts. I'm taking a scooter to the office. Nothing really was any different kind of way. And basically, I started to trade. I prepped myself, of course. I saw the right stock, SPCE, Virgin Galactic, owned by the British billionaire Richard Branson. And I started to trade like any other day. I was up $2,000 in the first 4 minutes. And it wasn't, I waited until I saw another push in order to start taking some partials. But instead of getting that partials, it began basically from that point a roller coaster of 3 days that led me to that loss of the $91,000. And we'll talk about that and what got me out of it. And after 6 months, I returned that loss. And this is something I want to put my focus in today and share with you, so you will have the idea first of how to get out of those situations, or maybe even not to go so deep in that loss. And we will cover that as well. So basically, just to summarize those 3 days, to keep it short on that, I started the first day, a drop, 2 hours, around 2 hours after the opening bell, I was down 25K. And the risk manager came to me, knocked on my door. I opened, he said, "Are you okay? Everything is okay?" Because he saw a crazy drop comparing to what usually I did. You know, I did have losses or drops of 10K and 15 and even 20, but it wasn't that rapidly. And in most cases, I got out of them. So, you know, he asked me if I'm okay. I told him, yeah, I'm perfectly fine. And I did believe at that time that I'm okay and I would get out of the trade, out of that loss. And you know, I started to add to my position, basically averaging down. Of course, it planted down like crazy. The sellers were really aggressive on that day, or those 3 days. And basically, they dropped the price so rapidly. So I'm finding myself after another hour or so, 30K down, adding to my position and basically covering some of my losses, so I will have enough buying power, but adding more and more to my position. So that's the first day, almost $30,000 down. One of those days as well, 21 and 29 unrealized. And again, I'm adding to my position, averaging down. So I'm putting a lot of size, like 20,000 shares, 17,000 shares and stuff like that. And as you can see, if you look at the last and the average price, I wasn't too far away from my average price. So I always kept it like it's 50 cents. That's it. That's all I needed in order to get in back to the game. And the price just melted down. So I'm covering some of my losses. I'm adding to my position. Second day, trying to get out of the mess. Couldn't do much, and believe me, I tried everything I could, everything I knew, because the sellers was too aggressive, basically. So nothing I did actually worked, and I ended up. That's the third day. Eventually ended up with the 91K. I don't know if you can see it. It's kind of small, 91,567 of that loss, and that was a very rough time for me at that moment, because I'm not used to lose that kind of money, basically. And again, I had like $10,000, $15,000, $20,000 loss or just unrealized, and I got out of. But finding myself, you know, as the head of the traders, losing 91K, everyone is looking at me. What I'm about to do next, basically, can I get out of it? I need to set an example for the other traders. New trader just came in, and you see the head of the traders losing 91K. So that was a crazy time. I took my stuff, got out of the office, and didn't come back for 2 weeks. What I did in those 2 weeks was two things. One, understand what didn't work in this situation and in this trade. And second, what do I need to do in order to not repeat it again? So of course, one thing I did is just analyze the chart, the hell out of the chart. I sat down and saw all of my executions. I had like roughly more than 100 executions in those 3 days, like in and out, adding more position, closing some of it, adding more. It was a battle war in those 3 days. And I didn't cap the like the small triangles that show exactly where you enter and getting out of. But if you looked at it, it was like crazy. All the chart was covered with like triangles, blue and red for entries and exiting. So yeah, it was a killer for me. And for those 2 weeks, one, analyzing the chart again, trying to understand what happened and what I could have done better. And as you can see, also in this case, I was like 40 something last price. My average price was 43.50. So for a stock that continue over and over to drop, that wasn't, generally speaking, in most cases, I would have seen a pop in the price, and I would have got out of it pretty nicely. But in this case, it just melted down. So I did saw some flaws in my trading, like technical wise, when I could have had in a better position, in a better place, add more to my position, and maybe cover a little bit faster or more of the size, stuff like that I could have done better. But I can, like, if I want to give myself any degree or anything like that, I can say it was like 80% good trading on my end, 75% when I'm talking about exiting and entering. So I could have improved that, but basically I did okay on that side. My main problem was, because I was the head of the traders, and because the guys came to me, the risk manager came to me and asked me if I'm okay, and the CEO at the time came to me, asked me if I'm doing okay after I was down 30 and 40 and 50. And they saw me already getting out of the mess before, although with not those numbers, but like 20,000 or 15,000. So they believed me. And also I told them I'm doing fine because I really believe that I'm okay. It wasn't about ego or anything like that. I'm not into egos and stuff like that, but it was just, I really saw the chart and I really believed that I can manage it properly and exit with a small loss or in the wildest dream with a win. So, and that was my main problem. I didn't have boundaries, basically. I didn't have this limitation until I reached that 90, and I said, okay, I'm not going all the way to the 100 because it's going to be a crazy move. And analyzing the chart, you know, big picture, I see it dropping down even more, so I gotta get out right now. So what I did is basically thought of a way that I need to manage the trade more accuracy, more properly, I guess, with boundaries. So I did two things that led me basically to where I'm at today as the CEO of Tradechology, and I have a count of $5 million, and obviously all of our traders are trading big numbers as well. And that the stuff that I learned basically gave me the tools to give it to right now to Tradechology and basically work at the right way, I guess. So first, I built some default mechanism to manage the risk, like stop from a daily loss and 30% out of the daily loss, and all those automatic mechanisms that will control my risk and not allow me to cross them. And although, again, we did have them for the junior traders that joined the firm, but it didn't apply on me, and it should have. Even today, I still have very strict rules. I'm not going to let myself cross those boundaries. And of course, because I needed to prove to myself and obviously all the traders around me that I know how to get back from that loss, I had to take those 2 weeks just to analyze everything and find those solutions, basically. So the default mechanism definitely helped me to get out of, but mostly it was the part of the risk managing, or better yet, the trade managing. And I want to take a minute or so to talk a little bit about that. If you have any questions, I see you guys, some of you guys are writing. Feel free to drop them, and I guess we'll go over it later on, just as we will finish the presentation, unless it's something really that talking specifically about the topic that we are at right now. So let's talk a little bit about risk management. Generally speaking, obviously, the notorious name, everyone is talking about risk management. And I guess the first thing we need to understand is the tolerance that you have for risk. Some of us will have a larger tolerance than others. Depends on our background, depends on our, where we at in life right now. We have kids or not, we have mortgage, we have lots of money from our family or whatever it is. That will define personality, of course, that will define our risk tolerance. And when you understand what is your risk tolerance, you can start manage it properly. It starts with understanding how much money you bring to the game of trading. So if you have an account, your own account, how much money are you willing basically to invest or to put in your broker account, and how much money out of it, how many percentage out of it you are willing to lose, and all the thing around it. Basically, when we're dropping down or zooming into a specific trade, what I like to do, and this is the way I manage my trade right now, and I will share with you some of the trades I made the last few days or so, just to get an idea, is first understanding your performance. So basically, let's say you started to trade, you've already been trading for 6 months, you have enough data to understand what you're doing good and what you're doing bad. As soon as you understand which trades were the right setups for you, you start to categorize them with basically and split them into 3 categories. The A+ setup, the top-notch setup that you want to see every day, the one that you see in the books when they telling me that when they teach you about how a bull flag should be, or a cup and handle, or whatever it is, and basically you want to take that, the A+ setup. Then you have the A setup, and then you have the B plus. Of course, as you go to the B, it will be a lower success rate. And maybe when you have like, you should, if you don't, you should have like a checklist of the reasons why you want to enter the trade, right? I want to, let's say if it's a buy the dip strategy, so you want to have a drop in the price. You want to saw the price reaching a certain level of support. You want to see increased volume at the bottom because that will give you the trigger that market makers are manipulating the price. So those kind of stuff. As soon as you have this list, the A plus setup will be a V, like a check on every parameters, and a B will miss a few check on those in this list, basically. So that's the first thing you want to do. And then if we're talking about day trading, you can obviously do the same thing for swing trading, but then go and build yourself, let's say if it's day trading, build yourself a daily loss limit. So you have, let's say $1,000 you're willing to lose on a certain day, okay? It doesn't have to be obviously 1,000. Again, depends on your risk tolerance, the size of your account, whatever it is. But let's just take it for the example, $1,000. You're willing to lose on every given day $1,000. That's given. Now that's what you decide. Now from that, you don't want to spend $1,000 for one trade. You don't want to risk $1,000 for one trade. So you want to basically take 30 to 40% of that daily loss on an A plus setup. So let's say you're risking $300 or $400, on an A plus setup, right? And then for the A setup, you want to take 20 to 30, and on a B, you want to take 10 to 20. Okay, so that's like a basic idea of how you want to decide first how much you're willing to risk, and then of course you will from it take the number of shares you need to buy. So let's say you have an A plus setup, you got $300 or $400 of risk that you want to take, and from there, most cases, and this is something that most traders I saw struggle with and lose a lot of money because of it. What they'll do, they will take the full $300 or $400 on an A plus setup and go all in at once. So they have this entry price and then the stop loss price, and that's it. When it drops to your stop loss, you are out with this loss of $300 or $400. And that's, in my opinion at least, if you guys have anything else that work better for you, so stick with that definitely. But in my opinion, that's a wrong way to look at, because in most cases, as you're probably aware, the stock will play, even if you have the right idea. Yeah, you found the great setup, the right idea, and you enter it. In most cases, it will drop to take more liquidity from the stop losses, and then maybe we'll play a little bit longer, and then we'll make the right move to your advantage, and basically will show you that you were correct on the idea. But in reality, when you trade, you will have a lot of choppiness before it will go to your favor. So instead of taking the $300 and risk it just entry and stop loss, build it in a way that you can actually add to your position, either a losing or a winning position, but add to your position as long as you keep those boundaries of the $300, right? So let's say you entered at 50 and then you have a stop loss at 49. Generally speaking, you will take a $300 loss. That means 300 shares on $1. And if it will drop, it will take you out. Instead of that, get into a position with $100 risk instead of the 300. If you see that the price goes against you and broke the 49 or the 49, and you're still in $100 loss. So you didn't lose the full amount that you plan to risk, the $300. Then it will reach another support level, then you can add more to your position. You're averaging down, but you're still in those parameters of the $300 because you didn't start with $300 risk. So you add another $100. And if it will go against you and you still understand technically, you still see that we're continue to save the same right of setup, the same idea, the same right idea that you planned ahead, and basically you add another 100. So now you are risking the full $300. And if it will go to your favor right at the beginning, you will find a pullback or anything in the price that will indicate that you can add more to your position. Let me share my screen for a second with some of the trades. Yeah, I think it is. Do you see my second screen? Let me just know that you see the one that I just shared. Okay, great, thanks. So that wasn't a good trade from yesterday, but let's take something. Okay, this is a simple one. For example, on Tesla, I'm mostly in these days, I'm mostly trade big companies like Tesla, mostly Tesla or the Qs, but you don't have to. Obviously, many years I traded stocks in place, and gapping up, gapping down, stuff like that. But these days, just because I'm managing the whole company here, I don't have enough time to trade, so I'm very quick on my trading, my entries, my exiting, and I usually do like 1, 2, top 3 trades a day, not like before when I sat down and traded for 2 hours or even more. So in this case, you start with a small amount. Obviously, your stop loss should be at the top here, right? But instead of risking, let's take the same example, instead of risking $300 right at the opening and put your stop loss here, I'm getting in with a small position. So let's say instead of the $300, $100. It goes to my favorite, fine, I'm adding more. Pulling back, a small pullback and another drop, adding more, etc. Of course, the exiting should be maybe a little bit better than what I'm showing you right now, but basically it obviously depends on the, on the list of the reasons to cover the trade. But the idea is, in this case, it was, again, went perfectly fine to my favorite, so it wasn't really the right thing, or like not a lot to learn from. But we can see, for example, on SE, I'm talking about this trade, there was a loss here, but in this case, that's a good one to learn from. I started to, that was the cover, and then I started to add to my position. It went to my favor, adding more. And again, if I would risk the full $300, in most cases, it will take me out and my success rate would have been much lower. And when you have success rate, lower success rate, your mentality also comes into play, right? Because let's say if you have 7 out of 10 trades winners or 3 out of 10 winners, in both cases you can make money, right? You can have 30% success rate, but the ratio, the average between your losing to your winning is much higher, and then you can make money also with 30% success rate. But if you have, let's say, 70% success rate, it's much easier for you first to get involved in that trade, because you know that in most cases you will be right. And on that matter, it's easier for you to trade basically and to keep it positive when it comes to this game of trading. So adding to my position, and when I start also, it's also something that helped a lot of our traders. When you start small and not risking the full $300, you feel okay to enter whenever the price is ready or not completely ready, right? Because in most cases, when you enter in with $300 risk, like the full risk, then you need to have a specific point that you enter in and a specific point that you have your stop loss. In most cases, it won't be like this. You don't give yourself enough space, enough room to play around with. And as we're very familiar with, especially in stocks these days, when they're super volatile, the price will easily go to your stop loss, take it, and then drop, you know, a lot of shakeouts and stuff like that. So when you start small, it's easier for you to commit to the trade, and you don't need really to execute it perfectly. And this is also something that worth to mention, because you know, a lot of YouTubers or whatever it is talking about the perfect strategy and, you know, the holy grail, right? But it's not really about the strategy. It's about managing the position. It doesn't really matter if I'm entering here or here or here or just a minute before or 2 minutes later. It doesn't really matter. That's not the point of trading. The point of trading is to manage that trade, to manage that risk. And that's basically what we have as traders, comparing to a casino, right? You go to a casino and you put, you go to a roulette and put red or black, and it doesn't really matter what you want to do in the middle. As soon as you put your money on the red, that's it, you're done. It's gonna win or lose. And the amount of money you're gonna lose already set. In those cases, when it comes to managing your trade, you can first scale into a position and build it as it goes to either your favor or against you, but still the idea remains the same. And you can always cut your losses, and instead of losing the full $300, you can lose $200. Let's say you're already in with the $300 risk, but it goes against you, and you see that there's nothing really much to do here, and the market shift direction or whatever it is, then you can basically cut the loss as well. Let's see some other examples here. Look at this, for example. That's buy all the way here. It dropped nicely. I didn't buy at the bottom. It doesn't really matter. I missed like 50 cents of a move if I wanted to go straight to that tail, but it doesn't really matter. I'm building my position. As soon as it break through, I'm adding more, and then started to cover my trade as it continued to my favor. That was the first trade from before what we just saw. In this case, it went again to my favor kind of quickly, but the risk, if I would put on the risk, the full risk right at the beginning, my decision-making part, the mental side of it, would have got a little bit shifted, I guess. And basically, this is why you want to start entering small. If it will go to your favor, you can add on the pullbacks, right? I entered here. It wasn't enough for me to take the full position, so I added more as it broke through and retested. And then when it moved to your favor, you can take those profits, obviously. And that's a great example on SGAN, because it dropped. Basically, if you see the green lines, that was like the scenario I planned ahead in at the pre-market. Dropped, retested. I entered right at the bottom. I mean, in most cases, that's a perfect example for what we're talking about right now. In most cases, no one wants to enter here right at the bottom. It doesn't make sense. But if you manage the trade correctly, if you manage the risk, you can easily go ahead and enter right at the low and still be okay if the idea goes to your favor. So this is what you need to remember here. You want obviously after you created this scenario and you understand what you're looking for, as long as the idea remains in the same way what you're thinking of, that's fine, that's good. It doesn't matter if you enter right at the bottom. I mean, that's probably the worst execution to the short side I had in many days. So so it doesn't really matter because you enter small, and when you enter small, you have enough space to add another chunk and another chunk and another chunk, as long as the idea remains, and then cover when it drops or goes to a favor, basically. So that's really a great example, and I hope you guys can take this one, really save it, because you don't need to be accurate on your execution. You need to be accurate on the managing trade and managing risk part. And I guess if I'll continue here, you will see that's also a great example. I'll finish with that. So basically, as you can see here, I bought on the first candle. It went up, straight up, but I couldn't get out of the trade because it was just like 10% out of the 30%, right? So it dropped again, added more to the position, added more, and everything here, all the buys around it was basically in my risk parameters. I didn't cross those numbers that I'm risking. So if you're risking $300, that's $20, that's $100, that's $70 risk, 80, and so on until you reach that number, the big number of the 300 or the whatever it is that you're risking. Only then you can actually start and say, okay, that's it, I'm done. I reached the point that I'm risking $300. Now that's my stop loss. Whatever it is that's going to happen, I'm good with. I took some partial out. It dropped again, basically pulling back to those levels, adding more, and then covered when it popped up again. But that's also a great example to understand that if you're not being accurate with your execution, and if the price goes against you, and just take some stop losses out, you can still be profitable. And I guess that's the only way, in my opinion at least. Maybe someone else will tell you otherwise, and that's, again, totally fine. In my opinion, that's the only real way that you can make profit in the market when you're trading. And I also see it with a lot of our traders that took that time to develop their own way of managing the trade, but similar to what I'm showing you right now. And basically that led them to success. So hopefully you take some of the things that I shared with you today, and that will give you another push in your trading career. Maybe just to summarize things, or talk a little bit about Tradechology. As I mentioned before, basically we are an online prop firm, fund stock traders. If you go to our website, tradechology.com, first of all, you have 14 days free trial. You just sign up for free. You go ahead and download the platform that we're using, the platform called Trader Evolution. That's our proprietary platform. And you have 12,000 symbols, stocks, and ETFs. You can short any penny stocks, even hard to borrow. And basically, this is the place you want to be if you are a trader, a stock trader. We're just about to, for this moment, we are only for day traders. But in the next 2 weeks or 3 weeks, we are going to launch a swing trading program as well. So for those of you guys who like to, for some reason, hold position for overnight, definitely check us out. We have plenty of materials. When you sign in, you get trade, either Trend Spider or trade ideas, subscriber, also great other partners that we will collaborate with in the near future as well. So check us out.
Michael, I want to
Yep.
thank you for the great story presentation, and I will absolutely put my seal of approval on scaling in as a proven mathematical strategy to really increase someone's profitability. Trade management is so crucial. That was an incredibly valuable story and valuable information. We appreciate you taking your time out of your day and joining us on Traders Corner. Ladies and gentlemen, this is Mr. Michael Katz, who's the CEO of Trade the Pool, the largest prop firm in Tel Aviv, where they do fund stock traders. If you'd like to learn more about Michael's special offer, I put a link to his website in the chat box. You can find him at tradethepool.com. Thank you so much for being here today, Michael. We hope you come back, and I hope you have a great end of your week.
Thanks so much. Yeah, highly
Be well,
appreciate it.
sir. Ladies and gentlemen, as I mentioned at the top of the show, we have a great lineup, and I hope everyone is listening closely because our next presenter has crucial information to share with us today. He started helping traders and firms find growth and consistency in 2010. His trading journey began in 2006, trading firm money while attending the University for Finance and Math. After that, he became completely hooked on trading the market, working for hedge funds, prop firms, technology companies, and individual traders. As a chartered market technician, he uses his technical knowledge in combination with years of quantitative and algorithmic trading to combine the best of these two worlds to create a unique trading style. Here to present You're Using RSI Wrong is Mr. Michael Nauss of Trade Ideas. Welcome back to Traders Corner, Mr. Nauss.
Hey, how's it going?
There you go. I was going to say check your mute button.
Oh, I'm a trained professional at this point. Is all
Welcome,
this
brother.
working? Is the camera coming through correctly and all of that?
I can see your screen. I've got link up on the daily and weekly, and looks like some orders on the right, and I got your webcam up top. I don't know if you want to leave it on or turn it off at a point.
No, that's cool. Yeah, and actually, the reason I'm starting with the screen, we'll go to my presentation in a second, but this is Trade the Pool, just as Michael was talking about. So I am using this myself, and as he mentioned, there is a partnership with Trade Ideas and Trade the Pool. So if you like what I have to say, I also will encourage you to check out Trade the Pool, and if you buy a couple of their plans, you get a little bit of Trade Ideas in with that. So it's always good to see collaboration in the space, and I've spoken to Michael many times, and I can vouch for him being a good guy. So yeah, I just wanted to say, hey, these things aren't happening in a vacuum. We're all friends out there, and it's a really good thing. I watched his presentation, and I totally agree with the risk management side of things. Like as my intro said, I started trading at the prop firm many years ago, and I actually point to the prop firm is where I've learned by far the most about trading, and simple things like they stop you from doing craziness, right? So as much as you may curse the risk management that's going to be forced upon you at a prop firm from time to time, in the long run it will save your bacon, it will teach you good practices, and we can go from there. And the cool thing is all the positions that you're seeing right here, these are all my day trades currently for the day, are going to be entered with this RSI concept that we're going to talk about. So all comes full circle. I just thought it was cool. I actually didn't realize Michael was before me until I tuned in. So probably wasn't done on purpose, but worked out really well. Now, how do I change what I'm presenting? You know what? I don't even have to.
On the bottom right in the control box, you get to pick which screen you're sharing.
Bottom right. I'll just do it this way. I'll just look at the presentation over here. That'll be good. Yeah, so as always, what I like to do with my presentations is I want to give you guys a little bit of content, give you some education, maybe a different way to think about the markets first, and then we'll go in and we'll start talking about trade ideas and everything that we can do and how it relates to the topic I'm talking about second. So I've attended enough of these webinars, and I hang out a lot of these webinars, so I enjoy them, but I just always want to make sure that there's some education going on. So if when I get to the point where I talk about how awesome Trade Ideas is, if you kind of gloss over, at least you've had some sort of takeaway we have here. So yeah, the title, the "You are using RSI wrong" is funny. When we were sending out these invites and in with collaboration that we're doing here, there was a couple people who were almost offended by the title. It's not my RSI, but I do believe that the majority of people are using RSI wrong, and that's kind of what we're going to talk about. And when I say RSI, just you can replace MACD, Williams R, whatever overbought, oversold, TTM squeeze, whatever oscillator you use. I hope that this presentation gives you at least some idea of maybe how you could rethink this a little bit, and maybe some new ways to get a little bit more out of the market. So first of all, right, we got to do this. You'll see this a lot every time, I'm sure, everyone before me and everyone after. We got to keep the compliance people happy. We got to keep the lawyers happy. What Trade Ideas is a software provider. So we sell the picks and the shovels. You say, I want to scan for stocks that are gapping today and that are doing a lot of volume, and they're gapping over, into new multi-year highs or something. We can find that for you. Or, hey, I want to just know when 1 minute volume spikes kick in. So all day I just want to sit there and I want you to say, hey, there's a big volume spike on this stock or a big volume spike on this stock. We do all that. We do that in real time. What we're not is investment advisors, right? So everything you hear me say today is educational purposes. And again, I'm sure you've seen a lot of that. So I think that was leaving that up long enough that I'll keep everyone happy. So who am I? It always makes sense to introduce myself. So my name's Michael Nauss. I'm a chartered market technician. I have a chartered alternative investment analyst, and I have a certificate in derivatives market strategies. So a whole bunch of letters after my name. It basically just means I've been in this game to kind of earn the gray, long enough to earn the gray in my beard. I've spent 10 years working in different hedge fund space. We did risk management, talked to different hedge funds, some that were structured, like we were talking about with Trade the Pool, with a variety of different traders. This was all around the Bernie Madoff time. If you guys have seen that Netflix documentary, that's a good one to check out, and you'll know why my position existed soon after that. And now I'm consult with Trade Ideas. I help build a lot of their quantitative tools, start to try to figure out the math with the, I try to combine my CMT, which is technical analyst, and then I try to combine that with mathematics just to make sure that everything I'm doing makes sense mathematically. And then I use my eye as a technician to kind of hammer that point home. So that's kind of a little bit about me. And then at Michael Nauss CMT is my Twitter, if you want to follow me on Twitter. 99% trading related, and then a picture of some dogs every now and then. So we are going to talk about, that got cut off when I shrunk this, but that's fine. So we're going to talk about the relative strength index today. And it's interesting because when I took my CMT, this is by far the most used technical indicator from the entire market. And you'll see it all the time. If you're on social media, you're following other traders, quite often, if they've got a little squiggly line under their chart, that's the RSI. Most people, I believe, are using it wrong, and I think it's kind of been shown, and I will show a bit mathematically why that doesn't make a lot of sense to use it the way it is. So this is the indicator. There's nothing special just looking at it, but what we're taught is that when an indicator or any sort of overbought, oversold indicator, when it gets into the overbought area, that's the time to sell, and when it gets into the oversold area, that's the time to buy. And it seems so simplistic that it doesn't shock me that actually a lot of people end up kind of falling and gravitating towards this. We wish trading was that simplistic, but I'm going to first dismantle this idea, and then I'm going to show you some cool ways to do it, and then we'll hop into Trade Ideas, and I'll show you some scanning tools that we have to help you with what I'm going to teach you in this lesson. So first of all, don't worry about it. I've got 2 slides with math equations on them, but we won't be tested at the end. I know there's not many math nerds like me who really care about this kind of stuff, but how is the RSI calculated? And there's so many people out there using all types of indicators, whether again RSI, MACD, anchored VWAPs, volume shelves, all kinds of craziness that you'll see, and they don't even know what the root of it is. They don't know the mathematics behind it. They don't even know what the indicator is trying to tell them, right? So this is the first step, and you can see, you know, just ignore all this plus 100, negative 100 divided by 1. Let's just ignore all that kind of crazy algebra stuff. And let's just look at this part right here, where it's just the average gain over the average loss. That's at its core what we're trying to tell you here when we look at the RSI. If it's moving up, it means the average gain over time is increasing over the average loss over time. If it's moving down, it's the other way around. We're having larger average losses than we are average gains. And then this is just kind of the smoothing part of it. So it just creates the line, right? So if I go into a chart and I say, okay, well, now that we know that all this indicator is doing, and I'm really trying to boil it down to the brass tacks to kind of demystify it, but if all that's happening is it saying, hey, here's the average gain versus the average loss, now does it make any sense to go back to how we're always taught about RSI and all of these indicators, which is to say, when it gets over 70, that's when we have to sell our securities, and when it gets under 20, that's how we have to buy our securities? Or maybe we're going to flip that on our head now. Maybe we're going to look at it. We're going to say, okay, the average gain, if that's increasing, wouldn't that be a good thing? And if that's decreasing, maybe wouldn't that be a bad thing? So maybe we should look at this a little bit differently. So, right, first of all is Zoom. Could you imagine if you were holding Zoom and the pandemic hits, Zoom's still holding up, and then we hit right here? That's when it gets oversold. It reaches over 70. That's the first time kind of in this area right here. And we say, okay, well, that's it. My indicator told me to get out of Zoom. I hit the mystical oversold area. It's time to go. And then you miss the move from 100 to 450 on this name, simply because, again, it says overbought, it says oversold. That's what I read in my book. Away we go. And then let's look at the other side of Zoom. And that's when it got oversold right here. So you're like, okay, it's time to buy Zoom. It's hit the oversold mark for the first time in, you know, pretty much 2 years, right? This is an amazing thing. Again, I was told to buy when indicators become oversold. So let me just buy right here, and then it immediately falls at a bit, right? Now, I'm giving some empirical examples because it's better than numbers, but you can just, in a little trust me bro moment, where the buying oversold in any kind of indicator and selling overbought in any kind of indicator has been studied ad nauseum by large institutions, hedge fund managers. Believe me, if there was some sort of hack with this, it would have been found and someone else would have been using it. But now I've done the statistics on myself on the S&P 500 going back as long as the spider sector existed, or the ETF, which was, I believe, 2004. And over time, what happens is if you buy things that are oversold and you sell things that are overbought, you are capping your gain and you are experiencing all the drawdown. So if we take a look at just the SPY, let's just go to this. If we were to take a look right away and just look at the SPY and go back as far as our charts will let us here, what you're doing when you're playing with these indicators is you're basically saying, well, I want to always be out when the security is doing well, and I want to make sure that I'm always in when the security is doing poorly. So even for long periods of drawdown where the market's doing nothing, you're buying at relatively bad prices and then just holding for incredibly long periods of time. So you're getting all of the drawdown of the security and you're capping the upside of the security. So the whole let your winners run and keep your losers short, with the traditional way that we're taught to use these indicators, it's actually telling us the complete opposite. So it's no wonder why most investors and most traders end up failing, if by just the nature of the tools that we're taught to use are telling us to do the opposite things of what it is that we would like to use, right? Every time this thing gets into this overbought area up here at 70, you're exiting your position right here, and you're waiting for it to get oversold, which doesn't happen until about this area, right? And then you're hanging out through all this time, and then you're selling again right here. So you sat through all of this drawdown just to get a little bit of money, and then in through here, same kind of thing. You get a little bit of money, and then you miss the entire up move. And so just looking at these charts, just sitting back and going, okay, now what's this really telling me, right? So we get oversold right in this area. So I have to sit through all of this drawdown just to then sell when it's right here, right? So if conventional wisdom's wrong, then what do, right? So math, right? Let's go back to what that math was telling us when it came to this indicator. And again, I can extrapolate this out to any indicator. If you're talking about Williams R, it's the same kind of thing. Bollinger Bands, it's the same kind of thing. You know, people buying when it's under the lower Bollinger Band is just saying this thing's moved, had a price shock in a negative direction. Now it's time to buy it, and I'm going to sell when it has a price shock in a positive direction. But if we just look at it and we say, okay, well, wait a second. If the average up moves and I'm comparing that to the average down moves, shouldn't I then just say, hey, if it can't actually get to that oversold position, if it can't get oversold because the average down moves aren't very much and they're being overpowered by the average up moves, maybe that's a strong stock, right? Maybe I flip this entirely on my head and say, okay, let me just completely rethink about this indicator. So let's look at the same chart here on Zoom. So again, before, using these indicators the way they're taught had us buy Zoom right here. But you can see to the date that I took this, which was only a few days ago, all the way from kind of the top of Zoom, we never reached that oversold area. So going back to the math, now what's the indicator telling us? The average up move on this isn't very much versus the average down move. So in this case, now I can take this indicator that really wasn't telling us what we wanted to do as an entry and exit point, and now something that's not even designed as a trend indicator is turning out to be an awesome trend indicator. In this scenario, you can say, hey, I'm just going to stay at a Zoom, because every time it tries to get to around the 70 area, it just can't do it. It can't get to that oversold area. Therefore, it's not something that I actually want to participate in. And maybe I should look at this from the short side. And you can see that, you know, pretty much on Zoom at any period of time after 2020, if you had looked at it on the short side, you would have been having a good time. If you looked at it on the long side, you've been having a little bit less fun. And then here's another one. Here's one that I'm actually looking to get involved in if this thing can get going. It's actually, you know, I may have taken the screenshot 2 weeks ago and it's boring me. But you can see with something like Stitch Fix, where this thing used to be, I believe, like $150 stock in 2020 and just completely fell out. So if you had just ignored it the entire time, but now you've noticed that during this period of time, this RSI is unable to get oversold, right? It's unable to breach this $30 or 30% or 30 area, which we're told is the oversold area and time to buy. It hasn't been able to do it for over a year. So again, going back to the math of the indicator, and that's really the takeaway I want to give you guys here. If you're using an indicator and you don't understand what the math is telling you, take a minute, right? Go into Investopedia is a great example for this. There's lots of resources out there. And just say, okay, what is the math telling me? So on this particular stock, what is the math telling us? Well, the average up move for a year hasn't been able to really get going enough to change price, but it's been able to outpace the average down move to a respect that the RSI hasn't been able to get oversold. So now I can say, okay, well, instead of me trying to just pick the bottom and buy it every time it got oversold, which it did here at, I believe it was 65, and then it did it again at 35, and now it's at 5, right? So all of those positions would have been a bad time. Let me just see, and let me just find stocks in which the RSI has never been able to get into this oversold zone. Also, if you take a look at ELF, right, it had a few dips back here, and this one's actually still on a run since I did the screenshot. But you can see, again, for an entire year period, not able to get oversold at all. And if you had bought ELF anywhere in this period of time, even if it took you the first 6 months to notice it hasn't been getting oversold in a while, you know, that's kind of probably in this area right here. You had a massive run and then a little pullback and then a massive run. But even on this pullback, you can see it was just met with buyers so quickly that again, that RSI wasn't be able to get oversold. So when I discovered this, and this is something, there's a man, Andrew Caldwell, who kind of talked about this a lot. My good friend at All Star Charts, JC Pretz, mentions this as well all the time. It kind of was an eye-opening moment for me as a trader and investor, just saying, oh, I had always just completely dismissed indicators because of the fact that I had studied RSI, and I said, hey, you know, if you use it the way the textbook says, you lose a lot of money. But that doesn't mean it's useless. Maybe you can take something that you're already doing or something that you've done in the past that maybe didn't work for you, flip the concept on its head and say, okay, what is actually going on here? And what is this actually telling me? So something that's not meant to be a trend indicator could turn into a pretty good trend indicator. Now, also from the short side, this ARLP, you can see the RSI up here not able to get over 70 for a long period of time. And this could be on this name, just telling us that we may have this, you know, call it a rounded top, or, you know, you could see maybe shoulder, head, shoulder, whatever you want to call it. But the indicator is telling us that, hey, on these up moves, there is sellers just coming in every time. That we're not able to reach this overbought area where the average up move is really beating the pants off the average down move. So maybe if I was in this stock and I noticed that, hey, we got this choppy price action and we're not able to get, you know, going here on the indicator, maybe it's time to go. And if you had taken profits kind of anywhere in this area, you'd be happy, not because it's down a whole bunch, but just because, you know, imagine the boring action and what you could be assigning your capital to in something like this. Now, another way to look at this, and again, I'm going to show you scans for both of these, is with divergences, right? So I leave this to the end because it's a little bit more complicated to explain. But simply put, the force, you know, think of RSI as measuring, again, I keep saying average up move and average down move, but you could also replace that with what is the force of the up move versus the force of the down move. So the force that created this down move is now greater than the force that created this down move. So although price made a lower low, the RSI indicator was not able to make a lower low. So as we pushed down here really hard, there was a lot of sellers. But then as we pushed down and we made this second low, there was a lot less sellers. And when I talked about right in the beginning, and I showed you my the pool trades for today, they were done with the reverse of this. A lot of those stocks were making new highs, but the RSI was not able to make new highs, showing me that, hey, maybe these things are going to come in a bit. Let me take little short day trade positions and see what happens. And again, on this chart, you can see, you know, you don't just buy it because this is occurring, but if you stack that on top of different analyses, you can say, hey, we may be close to a bottom here, because what generally may happen is that all of the force of the sellers were used up to make this low, so that when they came to make a second low, the momentum indicator is saying, hey, they might be running out of steam, might be time to take the other direction. So, right, a couple of these charts, this BHVN, same, you can see the same thing happening here in practice, where the RSI is making higher lows and the stock's making lower lows. So maybe combine this with the fact of just basic technical analysis. Say, okay, we're at a support zone right here. The RSI is getting, you know, it's not able to make a new low with price. So if this thing's going to push higher, then I know I can lean off this level, and I can lean off the fact that there's some exhaustion to the sellers. This is an equity chart of an analysis that I put forward, and for basically a system that we have that uses this indicator combined with a bunch of others to find relatively strong names in the overall market. And again, I just wanted to show by flipping this indicator on its head and not buying the stuff that's, you know, tanking and creating these oversold conditions, but by buying the stuff that's failing to make these oversold conditions and combining that with other points of technical analysis, this back test that I was able to do on this system, and this is a system that you can find with Trade Ideas with the link that I'll show you at the end here, is able to outperform the market. So just by simply saying, hey, I'm going to take what everyone else is doing, and I'm going to reverse that. You know, this is what's going on. And just for 2022, you can see the market, when I took this, was down like 25% at that point. And again, by taking the stuff and saying, I'm not going to buy the dip, I'm going to buy the stuff that refuses to dip, how you're able to squeak out a positive gain there. So tradeadeas.com/Nauss, my last name, should take you to a page which you can sign up and get access to 1 month of that algorithm for free. If you're interested in more of the software, which is what I'll get into with my final 15 minutes here, again, we'll go through, and that's going to be at that website as well. You'll be able to find out more information about that. And thank you, Rob. I see that. And as I'm going through this is a great time if anyone has any questions on this. But let's take this. So this is Trade Ideas. And again, we are a scanning and alerting, back testing. You can auto trade systems once you develop them through Interactive Brokers and E-Trade, and very soon also with Alpaca. And we can scan for a lot, right? So again, I want to spend most of my time teaching, and I want to show you guys a little bit about what the software can do. But just so I always do this demonstration, it's so wild. I'm just going to scroll down. These are all of the different filter types and, you know, things that you can customize. You don't need to understand programming, thankfully, because I don't. You know, this is all either built for you, which is some of the scans that I'll show you in a second, or this kind of nice GUI interface. And again, I'm just at the halfway point, but everything here you can add to scans. We focus a lot on the intraday to swing time frame, but a lot of the stuff, like I just mentioned, is applicable for these longer time frames as well. And yeah, it's just barely reaching the bottom here. So again, I just want to preface that I'm going to show you the stuff that had to do a lot with what I talked about, but there's just so much more that we can do. Let me load these up. That is kind of on top of everything else that I'm showing you here. So let's do the RSI divergence long. So yeah, so this scan is one, and you can see that with this scan, every time I click on it, my chart updates. I have a nice, what we call a single stock window up here, which just has, you know, again, all of those filters that I showed you can be added to this, but I have this kind of customized in a way that I like. I'm interested in who's holding the securities. Is it institutions? Is it insiders? Is it neither? I just want to know, you know, cash to debt ratio. I'm a technician, so I don't spend too much time on this, but hey, if they have more cash than debt, that's probably a good thing. Is their earnings growing or shrinking, right? Do we want, you know, I want to buy a stock that has growing earnings. So this one has growing quarterly growth, and it has growing quarterly earnings, which is great. You know, you can look at EPS. There's also short float. Yeah, up here, short float as well. But again, you can customize this to your liking if you want to fix all of these kind of things right here. But this scan, you can see it just updated a minute ago. So these scans will update every 30 seconds, give or take. And they'll be able just to go through, and they're doing exactly this. They're showing, if I scroll back out in this RSI, for 6 months, it's not able to get under the 30 level, which is just right here where I'm showing. Let me load up my Epic pen so I can mark up a little bit. But yeah, so here's the 30 level. And this is where technically we're told, hey, if it reaches that level, that's a good buy. Now, if the stock's in an uptrend, maybe that's the case. Move that right there. So this is the 30 right here. Maybe that's the case, right? In this scenario, right, you would have bought probably somewhere around here. Again, you would have had to suffer a whole bunch of drawdown. And then when it broke 70 right here, you would have sold. So that would have been your profit. But by simply, again, like I talked about, just flipping it on its head and saying, this RSI or this indicator, the RSI that is available everywhere, you know, again, we hope you come over and use trade ideas, but even if you don't, you can find this indicator all over the place. If this is unable to get oversold, then, well, maybe I should look for breakouts, right? So I actually own a little bit of Rambus because I saw this in this scan yesterday. I have it sorted by, which you can sort it by a lot of things, but I have it sorted by stocks that are in the high end of its range. So I took a little bit yesterday as it broke out. It's some great continuation today. The semiconductors have just, as an industry, have just been on fire. I think it probably has a lot to do with a lot of the AI stuff going on. But what I love about this scan is just all day long, I can just sit through, or at the end of the day, and I can scan through things that are, at least for the last 6 months, unable to reach this oversold territory. So what I find a lot of is scans, stocks that are either in awesome uptrends, because my job as a trader is to find something in an uptrend, hop onto that trend and ride it for as long as I can. When the trend reverses, get out. Also, you can find a lot of stuff, like I mentioned, SFIX, which I'm watching here. This one's been an entire year of the RSI not being able to get oversold, right? So eventually, if this thing ever wants to break out of this range with a 19% short float, nearly 20%, so 1 in 5 shares that exist on this name are short, you know, you might be in a recipe for a nice little push. Now, do I think a condition like this would get us back to $100, which this was before? Absolutely not. But hey, if I can get a little bit of 5 and that can go to 8, if it can go to 10, that's that's all I want. So those are the two scans that you'll find with this one right here. Again, either long bottoms, or I prefer things that are pushing up. You'll also notice that when you go through this, there can be a lot of themes that you pick up. So we have Rambus, which is a semiconductor. We also have STM, which is a semiconductor. And when you start to go through these scans and you start to say, hey, there's a whole sector that's acting like this, well, maybe that's then a sector I want to look at. So maybe I don't want to buy Rambus, and maybe I don't want to buy STM, but maybe I notice there's a lot of things in there where, hey, these computer manufacturing companies and semiconductors are doing great. So maybe I just want to go to like some names that I know. And I just want to look at like NVIDIA and say, okay, well, if the whole semiconductor industry is doing well, then I could probably buy NVIDIA and make some money off that. So that's one way to use it. And again, it's one of my favorite ways. You can just all day long, basically, just gives you a list of stocks to go through that are just looking fantastic. And it really takes a lot of time and energy away from me, where I no longer need to look at individual. I don't need to hunt as much, right? So this booking BKG. Now this is a little bit too expensive for me to trade at $2,500 a share. But I can just take the fact that I know that, hey, if it's in this scan, that RSI is over 30 for at least 6 months, and we have a nice little ascending triangle right here, I know my trade plan, right? I've studied enough of these triangles to know that if the stock is strong, they have more of a chance of breaking out than they do failing. And, if this occurs, then I know, hey, if it's on this list, I know it's strong. So I know if it breaks out, then I have a very simple trade. Doesn't mean it's always going to work magic here, but you can see a lot of really cool names. It's FTAI, same thing, breaking out of a range. This was on this list yesterday as well, for the same reason. Now, the other example that I gave as a way to trade this for people who don't want to be like me and are still in the buy low, sell high. They're still in kind of the bottom picking mind frame. We have that other way around with this RSI divergence. So again, if we look at the math and we focus on what the math is telling us about this indicator, it's basically saying that this low right here, it took less overall energy or force. The sellers had to fight less to make this low than they did this low right here. And that's just told to us by the RSI making a higher low. Well, maybe for plug power, we're reaching some sort of a short-term bottom. Again, I would never trust an indicator to make a decision on its own, but maybe I look at plug, maybe I zoom out a bit, I look for, I can't really see anything here, but I guess you could say there's maybe some support back here at 11. Maybe you want to take a shot. So there are ways to use this, and that's what I think the main appeal for these type of people who want to buy kind of beaten up stocks. There is a way to use RSI for that. I just think that it's not necessarily the way that you're taught, in which there's another, the examples are everywhere. And we've all suffered this as well, right? If I started to buy RSI when RSI reached under 20, right in through here, that was $20 a share, and this mattress company is now at 2. So again, we have access to tons of different scans. We have day trading stuff, we have artificial intelligence, we have back testing, we have the whole gambit. I just wanted to maybe shake up a little bit of the way that you may be thinking about using indicators in your trading. See if there's a way that I can say, hey, maybe don't look at it like that. Maybe don't abandon it entirely. Maybe come over to Trade Ideas and look at it the way we're looking at it and see if you can find some advantage. So I've got my 5-minute reminder, so I want to make sure that if there were any questions that I'm able to answer them. Oh, there we go. So I have the questions panel open. Is it sorted highest to lowest or lowest to highest? I don't know here. But if there are any questions, certainly let me know. Oh, hello. I heard something.
That was me. I was going to tell you they're sorted chronologically, and if you pay attention to the time, only the ones asked while you were presenting are for you.
Okay. I don't see a timestamp. I just see 2 columns here.
If you pull the questions box out of the control box, you can make it bigger, and there's more columns.
There we go. Perfect. Let me take a look at some of these while we still have time. Futures, currently not. We are actually expanding out into crypto very soon. We have a partnership with a broker called Alpaca, and we're going to be using their data, and we're going to get some future or some crypto and FX, and then we're going to look at futures after that. The problem with futures, I would say, is the data cost, right? Because they come from the CME and they charge a lot, and our product sits around the $100 area. So we want to keep this, we want to keep this retail focused, and to do that, right, we want to keep the prices low. So that's why we don't really look at the future side of things. So there's a couple other questions. Do you look at time frames only on higher time frames, daily, weekly charts? No, you can use this same concept for a lot of different time frames. You can look at a shorter term chart. The beauty of trading is its fractal nature, which means that often you'll notice if something works or doesn't work on a daily chart, then it will either work or not work on the longer term chart. Like I showed you guys right when I started, I am using this RSI divergence concept in conjunction with the higher time frame in order to take day trades. So I'm looking at this RSI divergence on 15-minute charts, and when I notice it, I'm taking basically that on saying, okay, the longer term chart's in a downtrend, and we're getting a bearish divergence on the intraday chart. So maybe I will take a trade based off of that. So some issues about the to apply futures. Everyone's asking about futures. I will actually pass my future, all of this comments on futures back to the company for sure. It's one of the reasons that we love doing this is we're talking to our audience. Do you know a score that I can look at to review what you're speaking with about RSI? I'm not too sure here. Do I have any proprietary indicators? We do. We're developing a bunch of them within the system, but they're used like other indicators as well, where yes, they're proprietary, but just like a lot of things, it should be used to assist trade ideas or your trading, right? It shouldn't be used to replace your trading. So, you know, I didn't mean to tear down anyone who's using RSI right now. I meant to kind of redirect you and say, hey, maybe just look at it like this, see if it helps your trading. If you want a scanner that does this for you, you can check out Trade Ideas.
Awesome, Mike. I think that's a great place to end things. I want to compliment that I've never thought of using RSI in that way. And obviously in the examples, it works great, but I looked at it in a few other places and I think I'm going to add that to my trading, box of tools. Great presentation in the current trading environment. It's extremely relevant. Ladies and gentlemen, if you're interested in compounding your portfolio by always rotating into the strongest names and having the ability to exit trades that have lost momentum, then look no further. Mr. Michael Nauss, who is a chartered market technician, has your solution. You can learn more by clicking on the link in the chat box, or you can find Michael at www.trade-ideas.com. Thank you so much for taking the time out of your week to join us today, Mike. It's always an honor to have you on the show. We hope you come back and see us at a future presentation.
Oh, I'm sure I will. It's always fun doing these, and I'll talk to you guys soon.
No, I really enjoyed it. I believe it's one of the first times I've sat for it, and it was eye-opening for me. So thank you for that.
Thank you.
Ladies and gentlemen, I again want to thank the almost 2,000 registered attendees that are with us today, and that'll bring us to our next presenter, who became interested in day trading during college and has perused various entrepreneurial paths. He started out using NinjaTrader out of curiosity to test his ideas and now has over 14 years of experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on NQ. Joel is the most passionate about futures trading, but remains committed to building and developing the best tools for day trading. He enjoys connecting with his customers and is building a tremendous community of successful traders. Ladies and gentlemen, here to present Futures Trading Plan, Daily Discipline with Dad, it's my pleasure to introduce Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel. Check your mute button, brother. Here, Joel, let me unmute you for my... Joel, you're still on mute.
My fault.
There you go.
How we doing? Is this good?
You're good. I got your screen coming up.
All right, amazing. Thanks for the patience there, guys. Forgot to unmute. I do feel like I am organized and ready. I can see all the questions on my screen over here. But yeah, really excited to be here. Thanks, Rob, for having me. Appreciate you, man.
Hey, thank you for being here.
And it is my first time presenting with you guys. So hopefully there's some new folks in here. I'm going to get started. We only have so much time, so I want to get rolling. Want to actually show you my chart windows here, hopefully in about 10 minutes. But first, we're just going to get moving on some stuff. I just want to say hi on the webcam. I am going to turn that off for now. If I can even figure out how to turn it off. There we go. All right, cool. So I have a PowerPoint here. Title of my talk today is Daily Disciplines with Dad, a Futures Trading Plan. And so I'm just going to go through a little bit about me to get started. I want you guys to know I'm 37 years old. I'm single. Like Michael said, I've been doing this for a while. I've lost my hair. His beard is gray, but in the same way, like I've been doing this long enough to lose my hair. So ever since college, I've been doing this. I went to Taylor University, graduated with a business management degree with a finance minor. So I thought that was important to include. I moved to Atlanta, Georgia in 2009, come from Ohio. It's where I grew up. So I also wanted to say, like, if anyone's here in Atlanta, hope that you'll email me. Again, my email is over here on the left side, like what Norm Hallett said. It's joel@affordableindicators.com. So with any questions, any feedback, I really do want to hear from you guys, get back to every single person. It's really important to me. So hit me up. I would love to hear from you guys. So again, especially if you're in Atlanta, please reach out and let me know about that, because I'd love to connect with people locally and start doing some in-person events. Full-time NinjaTrader software developer since 2011. So again, shortly after college, this is what I've been doing. Trading futures on and off since 2011. Again, wanting to be completely honest and transparent today. Haven't been the most successful trader to this point, but I think I'm taking some steps in an amazingly positive direction on that. In 2021, so recently, I purchased an office condo, which was a big step for me. If you guys have been entrepreneurs or know what it's like to run your own company, it's hard, right? So working from home, day trading from home, and I've been there too, even like hearing Norm Hallett's dog in the background. I think it's hilarious, right? We work from home and there's all these other distractions that we have. And so for me, like a professional step was to buy an office condo and physically have a place to go work. So if you Google my company, Affordable Indicators, you're going to see a Google Map link to my office. You can look at pictures of my office. I've actually got a few guys that rent from me here at the office. I have some spare space at this point. So when you Google my company, Affordable Indicators, maybe put Atlanta or Georgia with that Google, you're going to see my office condo. And I'm a big Tesla guy. So here's a picture of my car. There's a picture of the condo in the background where I work. So just wanted to throw that out there if anyone can relate to that. Big thing for me lately is the sauna and cold plunge. A lot of guys today have talked about risk management, emotions. So for me, part of my trading success recently, I think, is just being the healthiest, wholest person I can be. And so part of that is taking these, some would say, extreme steps to install a sauna in my house, right? Because I'm going to sit out there most evenings and meditate, clear my mind, think about the next trading day, things like that. So I want to keep moving here. So this presentation is about my trading, but also my relationship with my dad. And so my parents did move to Atlanta at the beginning of this year, right? And so there's a few reasons that happened. One, I'm so proud of them. Like this picture, they just finished a time at Miracle Camp where they basically spent 8 years like on staff, doing maintenance, construction, really bettering the camp in so many ways. But then it was time to move on, move out of the snow, as you can see. So they moved to Atlanta. I would like to think it's to come hang with me. But my sister also lives here and has 2 grandkids. And so really the grandkids drew them to Atlanta. Someone said I'm still on slide 2. Can you guys not see slides changing? Let's see here.
I still have your introductory one. The Tesla's up now.
Can you guys see the picture of mom and dad and I in the snow? Your slides are not advancing. All right, so let's, this is not fun. Let me.
Still looking at your Tesla.
How's this? Play. There we go. Is that good?
I'm waiting for an update. Still got the black Tesla up.
Okay, hold on. I'm just going to do stop sharing. I don't know why it's doing this. And then we'll just do reshare the PowerPoint. It says on air. Crimes in Atlanta are through the roof. I love it. That's hilarious.
I'm looking at an office with, it looks like 2 freezers in it.
Yeah, so that's the sauna and cold plunge. So we'll just keep moving. Sorry, guys, it's not really about me, but I do want you guys to get to know me and some of the reasons behind this stuff. So is this cool? Do you guys see the picture of my parents now? And then moving forward. I mean, I don't know how to, so I'm on slide 6. Not yet, not yet. Guys, I mean, this is really out of my control, honestly. Like, I don't know. Pause. Now it says paused. And then if I hit play, it says on air. Should be seeing lessons with Larry. Daily discipline.
I still got your sauna up. You don't have bandwidth issues, do you?
I wouldn't say so, man.
I see it now. We're on slide 4.
Yep.
There's your parents.
Yeah, I mean, dude, I'm just hitting pause and play on the thing. All right. We need to keep moving though, because we don't have a lot of time here. I mean, it's some time gone there. But anyways, can you guys see slide 6 now?
We've caught up to 6 lessons with Larry.
Okay. So anyways, just thinking about like having my dad here at the office every day, a lot has changed and it's been really helpful for my discipline, right? So what I'm thinking about here, my dad's name is Larry, just gonna give you guys some things that I've picked up on the time with him. So first of all, I'm just gonna skip through all these because it seems like PowerPoint's not working. We should have 3 points on the screen now. Hopefully, so if someone can chime in, I don't really need you guys to ask questions anymore, but if maybe, yeah, Al, I mean, I would love to send it to Rob, but at this point it's too late. I don't know why it's not coming through. But anyways,
Try
my
toggling
dad
a pause and play.
presenting. Rob, go
Change
ahead.
slides.
Huh? What's up, Rob?
I think you're having an issue with pause and play. Try toggling, pause play after you change slides.
Okay, so I paused it. Now I hit play. And we should see 3 points on the slideshow.
We're still stuck on 6.
No worries. So if you guys could just listen, I'm going to breeze through this and then we'll just go straight to my charts, okay? So with my dad, he's been excited and optimistic from the beginning. I don't know if some of you guys can relate, but like, do you ever feel like this isn't possible? Do you ever feel like you're just ready to give up, throw in the towel? My dad has a different mindset, right? He's believed that from the beginning that this is possible and that we can succeed at this, right? And so he also brings a fresh perspective. I understand, Steve, but I mean, I just don't know what to do, man. Like there's nothing, this is out of my control. We even did a practice session with Rob, where I showed my screen. It says, I'm sharing my screen. It says on air. So I'm just not sure what to do. You should see a picture of my dad now, looking at his screens in the office condo. But we're not going to be able to see that stuff. I have a point here. He was inquisitive and willing to learn with a positive mindset, believes it is possible. And then we also read Trading in the Zone with Mark Douglas. Have you guys read this? So yeah, anyways, this is tough, man. This is tough not having this on here. I'm gonna try and pause this again because you guys really have to see what I'm showing on my screen. And then I'm gonna hit play. And now it says on air.
Right before you did it, it changed to the picture of your parents in front of a little stone thing.
Yeah, so okay, now it says on air. Can you guys see it since February 1st slide 7 of 12?
Yes.
My dad says yes. Okay, he's out in the other room. All right, so I just want you guys to know I'm just fully transparent. Since February 1st, my account is up $16,000, all right? This is mostly one contract trades in the NASDAQ, a few one contract trades in the ES and YM, which I sort of tossed that because I'm not familiar with it. I want to stick with something that I'm best and most comfortable with. And then Dad has been trading the ES and YM, the micros, which I'll give him credit to be about break even. He'll probably laugh, but that's where that's at. And then the current challenges, okay, is managing the emotions in trading, right? I still notice, even after reading Trading in the Zone again, is that, and even some of the presenters commented earlier on this, like, I do not want to feel great about a winning trade, and I don't want to feel bad about a losing trade. I want to be centered, and it's not about winning or losing, or being right or being wrong, but about ending in the positive. And so that's just throwing that out there, balancing various responsibilities. Again, my company is just me. I haven't got help with the website, but I did build the website. And so I'm a programmer, I'm customer support. Anytime someone emails with an issue, I get on TeamViewer calls, I handle new sales, I take phone calls, I do everything. And so the transition between being a full-time trader, having a software company, doing both, but anyways, and then also the slow market conditions. The last week or so, it's been slow. We all know this, right? No one else mentioned it today, but I'll mention it. Since Friday, Monday, Tuesday, Wednesday, today's Thursday, it's been slow. The market changed all of a sudden. It's been a slow market. So let me go to the next slide. Can you guys see now? I hate having to ask this. Dad, can you hear me? Can you see a picture of my office now? Nothing. All right, so pause, play. I pause it and I play it.
There it is.
There it is. After pausing it 3 times and playing it, there's a picture of my screen. So again, this is in my condo. Just wanted you guys to see that. This is extremely distracting. So hopefully everyone's hanging in there. I appreciate you guys being patient through this. Now we should be on slide 8. Still says the office. Okay, slide 8. Okay, guys, here are 2 huge losing days. And why 10 grand? Probably because I thought, you know what, I give up. As long as I don't lose more than 10 grand, I'm okay, but whatever. This was October 4th, 2022 and November 3rd, 2022. Both days we can see the totals, $10,000, 900 and change, $10,000, about even. Again, the largest position size in either day was 5 contracts of the NASDAQ. And stop loss orders were either widened, which I'll talk about later, or eliminated in these cases. So again, the account today, this is my account today. So I'm going to pause and play again. Dad, if you could let me know when you can see this.
Came right up.
Okay. So you can see February 1st, this is the new NinjaTrader portal. My account was at 6,696. Today it's at 22,774. It was up to 27,000 before. Sorry, now I can hear an echo. Who's turned the mic on? Mark Miller.
We're sitting at $2,344. All right, so let's pull this out of the way.
Mark, if you could leave your mic off, thanks. All right, I'm going to keep moving here. So I believe risk management is the most important part. I'm going to pause this and hit replay. It's the most important part of trading. I don't really care about the trade setups as much. And even the previous presenter talked about RSI. Some people trade RSI where they're trading it oversold. Some people take the buy when it's oversold, and some people want to sell when it's oversold because when it's oversold, the trend can continue. So it's less about the trade setup. And my joke has been, I don't care what it does. Dad, can we see slide 10? Still see the account. And this is. It must be something with the way I'm using PowerPoint. I mean, who still uses PowerPoint anyways? I need to switch over to slides like the last presenter, but can we see slide 10 now?
Not yet. Try clicking the button once. I think you're pausing yourself by accident.
Okay. Well, that's going to be it for this risk management part, but I'm just going to say that I'm going to stop sharing this because I'm done with this PowerPoint. This is not gonna fly for me. I'm gonna start sharing my chart now. We're just gonna go straight to some trade setups and some other things. So give me a second, guys. Really, really appreciate you hanging in there. It's very frustrating for me. I want to give you guys the best value during this time, and these are things that I really couldn't be totally prepared for, even trying. We met yesterday. So now, can you guys see my chart? Nothing yet. Okay.
I have loading your screen too. I really feel like it's a bandwidth issue on your end.
Yeah, I don't know, brother. I'm looking at a download of 500 meg right now, and I was going to upload. We'll test in a second, but anyways, I don't know how, I'm going to try and gather myself and keep moving here. It's really frustrating. But first, I'm going to talk about risk management. So this is how I've been managing my risk. Hopefully, you guys have heard of something called the ATR. That is down here. And I just want you guys to know before we look at these charts that I really care about providing value for my customers. Okay, I want to be completely truthful, honest, and transparent in everything that I do. All the indicators in my chart, nothing's proprietary. Everything is public knowledge. Even like the other previous presenter with RSI, Michael, said, we should really understand the mathematics and the reasoning behind every single trade that we take, right? I don't want to trade some phony Renko chart with some colorful bar type and some lines that I don't understand what's going on, right? Like I want to know what's going on. Like right now, I know that the NASDAQ is hitting the 20 EMA on a 1 minute chart. I know a lot of traders watch the 1 minute chart. You know, it's a popular chart choice. I can see that we've finally started picking up some steam to the downside. And I love Norm Hallett's language of triggers, right? A trigger for me is the 20 EMA. This is a trigger, and it's either going to stop at the 20 or it's not. And I can get in this trade with very, very low risk, right? So that being said, what we're going to talk about first is risk, right? So on my trades, this is the chart trader here. If I hit sell, I can line up. This is all of my software that I've wrote. I can line up this trade, right? So let's say that I want to sell the 50. I can hover my mouse over the 50 EMA and click. My trade is attached to the 50 EMA, okay? Now, let's stay on the subject of risk management. So if I turn on the ATR, I'm going to cancel this trade and just hit sell again. I can see that I'm having a 14-point stop and a 14-point target. And I apologize, guys, if it's delayed. I don't know if you guys can see these things as I'm doing this. I certainly hope you can. But what I'm risking on this trade then is going to be 14 points, meaning 2 times the ATR, right? So with a predetermined risk, I'm looking at this trade and I'm saying, if I want to sell the 50, why would I sell the 50? Okay. Expecting a bit of a deeper pullback. I know that if it gets to the 50, I can also pre-plan this. Can you see how I'm moving this around? So as it gets to the 50 and then approaches the low, I'm going to be making 24 points on this trade if I just get a move down to the previous low. All right. So determining risk is the most important thing. Even more important than the trade setup in my mind is just having a predefined target and a predefined stop, and then I don't really care what it does, right? Because trade setups, as we know, there's a bunch of them, but it's more important to manage your risk. Looking on a daily perspective, right? Just sticking with the ATR real quick, risking 2 times the ATR at most, and a lot of times I'll risk less than that, but at most 2 times the ATR. Now looking at a daily chart, one thing I've been working on with my own trading plan, which is obviously still in influx, but I'm looking at 1/2 of the daily ATR. Okay, so the daily ATR is 264 points. So my daily goal would be 132 points on the NASDAQ. Now, I'm sure some of you are thinking, man, that's crazy, 132 points, but I have done that. I've done that twice where I did 150 points. I stopped at 3 grand on one contract. Okay, so I really believe that, still trying to figure out, okay, what's my loss? Right now I'm toying with 1/4. So 1/4 of 260, you're looking at 130, you're looking at 65 points. You're risking 65 points in a day. So if I'm down 65 points, I'm done for the day, right? So I just wanted to talk some risk management, and now we'll continue through and look at some trade setups. So some things that I'm offering you guys today is this chart trader, where you can attach orders to plots. So like with this, I can hit sell, and I can hover my mouse and see 5-minute 20 EMA, order flow VWAP, 5-minute 50 EMA. Do you see how I'm moving my mouse? And as I do, it tells me there's the 50 EMA, here's the 20 EMA, all right? So you can attach these orders, and then you can just wait and watch the market approach your order, get filled, you're in the trade. All right, let's see, looking at a few other things. So yeah, I was just gonna go through, I'm just a little thrown off by the PowerPoint, it's so frustrating. But I'm just gonna go through my chart in general as to what's on here, okay? This is a 20 EMA, 50 EMA. Up here we have 5-minute 20 EMA, and then up here we have 5-minute 50 EMA. This line here that's almost white is a 200 EMA 1-minute chart. Down here is a 200 EMA from the 5-minute chart. So we know, and I have 5-minute charts that I watch, not showing those today, that we know that the market has been in an uptrend all morning. You know, we've been bouncing out of, this is the 5-minute cloud, right? 5-minute 20 and 50, 5-minute 20 and 15 VWAP this morning. So the VWAP is also on the chart. And then my key levels indicator. So the key levels indicator is plotting daily, key important daily levels in the market. So, and then down here is this volume. It's just coloring up bars green and down bars red. Nothing secretive here. It's up down volume in NinjaTrader. Oh man. Anyways, so continuing on here, I want you guys to see this chart trader here. These buy and sell click buttons right here, I think have a ton of value if you're on the NinjaTrader platform. Be able to click, sell, click, buy, close all. This is on my live account right here that I'm just placing, canceling orders, all right? In here, I built a P&L display. So you can see I'm down $200 today, 10 points. That's minimal damage when I'm talking about a daily goal of 100 points, daily loss with 60 points. It's nothing, right? So as we click through here, you can see NQ and all. So all is showing 405. Those are some micros trades that my dad's been taking. NASDAQ, all, I can toggle between. I think it's so cool because I can go to the ES chart and see I'm at 0. I can go to the YM chart and see I'm at 0. And then I develop this where I can see each instrument, how much we are down or up in each instrument. So today we're down $405. Dad's long the ES right now. All right, so back to, so I just want to show you the chart trader, that this part of the chart trader that you can separate your P&L for each instrument. I think it has a ton of value. Up here you can click to change ATM. So I've got a 10-point, 15-point target and stop, 20-point target and stop, 30-point target and stop. And then as I said before, if you turn on the ATR, you're automatically configuring ATR. So with that being on, if I'm to sell here, I can see a 15-point stop, 15-point target, which is 2 times the ATR of 7.5. Everything is delayed. Yeah, I wish I understood why. Thanks for texting me, Rob. I'm not sure how to change it, but I hope that we can really do a test next time, because yeah, it's really disappointing to go through this. So anyway, So let's see. So yeah, I showed you guys how you can set your ATR automatically with the chart trader. I showed you how you can attach orders to indicated plots. Let's go through a little bit more of the key levels. And then I'm just going to open it up for questions. So let's take a look at the ES today. Same exact indicators here, nothing different, same indicators on a 1 minute chart. The ES was really, really tough today, in my opinion. One of the trade setups that I really like is when these cross over. So let's look at like the Dow, okay? The Dow opened at 930 and tanked, and it just kept bouncing off 20, 20, 20, 20. Right here, you get a move up into the VWAP. Again, the 5 minutes bearish. It's moved down all day from a touch of the 5 minute 20. Now, it's always easier, guys, to point out trades after the fact. So nobody here on this webinar is claiming to be an expert. No one here is making false promises. None of that going on, okay? I showed you guys I'm up 16 grand since February 1st. Been very, very straightforward. My dream is to trade for a living, right? I'm gonna trade for a living. I was just sitting around with my friends last night in a church group I'm part of that I lead. Like, it's the God-given dream. And there's nothing that I'm gonna let stop this from happening and being successful. So I want you guys to see the key levels here on the Dow, okay? The key levels plot yesterday's high, low, open, and close. They plot the pivot points along with a few other things, but you can see here R1 was very important this morning as support over here, as resistance over here, resistance when this weird news or some kind of a spike came out. We had resistance here with the VWAP and the 5 minute 20 EMA. And the Dow has just been trending down out of this 2050 area on the 1 minute consistently. Okay, yesterday's high in the Dow, yesterday's close in the Dow, both significant areas to look at. All right, the ES, same kind of thing, sort of been trending down. Right now is kind of a key area that we could short. So again, I think the ATR has a lot of value no matter what market you trade. Take a look at the 1 minute ATR. It's 1.6, right? So the most I would risk on any trade right now is 3 points, maybe 3 points and a tick. If you're gonna get short here, you can look at taking your profits at 3 points or taking a stop at 3 points. End of story, right? It doesn't really matter what happens. You have a target, you have a stop. Can you get the trigger, like Norm said, can you get the A+ trigger to react here at the 200 EMA from the 5 minute combined with the 20 EMA from the 5 minute? I don't see a lot of other reasons to take this trade. Like here you got some lows from this morning right here and then some highs from here. So this area at 71 is obviously really important. But anyways, so unfortunately, like I'm gonna flip back to the PowerPoint just because I've been so distracted by everything that happened with the quality of the audio and video here. So let me pause my sharing and get back to the PowerPoint so I can show you what I want to offer today. And then I want to have 10 minutes to answer some questions. And we're wrapping up at 2:15. We got 12 minutes left. So I'd love to just be able to hang out with you guys and scroll down here. If you guys have already asked a question, I don't know if I'm gonna be able to get to those, but what we'll do is, thanks, Jim. Jim says, my enhanced structure is awesome. You're a disadvantage if you don't own it. Really appreciate that, man. I mean, yeah, it's a frustrating presentation for me today, but you know what? We're gonna do this again and we're gonna get it right, or we're gonna get it better next time. All right, so I'm gonna go to my offers slide and we're gonna pause play until this thing displays and somebody confirms that it's displaying. So I'm gonna pause, play.
We got chart up.
Pause,
Exclusive
play.
offer.
What's that?
Exclusive offer.
Great, and thanks, Rob. And Rob, I know it's not your fault, man. I really know it hurts for you to see this happening too, man. So nothing you did, nothing I think either one of us could have avoided here. So we just keep moving, man, and stay positive.
Keep it going.
I love the opportunity to be here, man. I love what I get to do. Like the opportunity to trade for a living. I mean, are you kidding me? There's nothing as good as this. And so it's just been awesome. Like I said, having dad here, and like it's a whole different game when you're disciplined, when you're accountable, right? Like I was so pissed off yesterday, down $800 in the NASDAQ, just 40 points. But down, I was like, I told him, I was like, if you weren't here, I probably would be trading 2 contracts, and then I'd trade 3, and then I'd trade 5. So I think that's so important, right? We have to be able to trade the same size, okay? We can't. You have to earn the right to move up in contracts. And there's different theories on this, right? Because other presenters have said, oh, I'm going to trade 2 and take 1 off. I don't do that. You saw my chart, right? It's like I have 1 target and 1 stop based on the HER, right? Because I think if you scalp off 1 contract, you're taking a small gain. And then what happens if you don't even get the first target? You take a loss on 2 or 3 contracts. That's a big loss on 3 contracts compared to when you're winning. I might get a tiny win on 1 or 2 contracts, and then maybe I'll get a bigger win on the 3rd contract. Maybe I won't. So, I mean, again, I'm going to read that later, Don, but thanks for the feedback. So he says, use simple PowerPoint without the build feature. I love it. I was trying to use the fades. I did anyways. So what I have for you guys today is anyone that purchases anything from me, and this goes from anywhere from $95 all the way up to $19.95. So lots of different options here today. Anyone that makes any purchase is going to get an HER indicator and the EMA indicator for free. Now the EMA indicator is what's forming that cloud that you saw with the coloring. And the HER is something I'm still working on launching. It's going to actually allows you, if you guys saw, there were 2 lines. The second line was yesterday's HER. So I'm able to compare, hey, what kind of movement am I getting today versus what kind of movement did I have at this time yesterday? You can also go back a week. So I could say, what kind of movement am I getting today, Thursday, versus last Thursday? So it's actually really cool stuff. But any purchase, I'm going to give you that indicator, the HER, and the EMA trend, or the MA trend indicator for free. The MA trend allows you to plot like those 5-minute moving averages on a 1-minute chart. Sure, yeah, and I'm not comparing Norman for sure. Thanks for that, Eric. I'll look at that, and feel free to email me if you want to talk about it. So anyways, I'm going to give that away for free, but basically the basic chart trader tools today for $95 gets you the functionality of attaching orders to indicator plots, the separated P&L for instrument, a bunch of other features in there just for $95. The advanced exit orders management is going to get you the ability to see your ATM strategies in the chart window, to pre-plan your trade, and to base your targets and your stops on the HER. So I showed you guys that. Hopefully you saw that. I know that the presentation was a little bit questionable with either the bandwidth or some issue. The key levels confluence indicator for $4.95 is what plots the daily high, low, open, and close. It plots pivot points. Again, high, open, low, and close from like 2 days ago, 3 days ago, 5 days ago, 10 days ago. It's customizable. So I could see the high from 10 days ago, which is super cool on the chart. And then lastly, the professional chart trader tools. I'm going to do this for 3 people. I'm going to give away the key levels confluence indicator for free if you purchase this, and it's discounted from $29.95 to $19.95. So that includes like the ability to enter on a bar close, the ability to set up a bracket trade. So I was using this to trade news recently at 8:30. I could submit the order 2 seconds before the news event at 8:30. 2 or 3 seconds, you can configure it. You submit the bracket, buy above, sell below, boom, you're in the trade. So bracket entry orders, closed bar entry orders, there's some position sizing features. I didn't even show today because I don't position size. Like I told you guys, I'm trading 1 contract. I'm not adjusting my position size at this point, but I built that for other traders. So there's a ton of features in that professional chart trader tools. Again, it's all on my website. Go check it out. especially the key level confluence indicator, which I did not get to talk about much today. There is a video on that on the product page of my website. You can check that out. The page that summarizes all of this, the discount codes are ready and working, is affordableindicators.com/offer. So now with 6 minutes to go here, I would love to hear some questions from you guys in the chat. And I'm going to take a look at what you guys have said in the chat, and we'll go from there. Jim says if people tried your chart trader for a week, they would easily buy. Look, Jim, I've debated that. I've said, hey, let's do free trials. But at the one-man show, there's a lot of technical support challenges that come with free trials, question and answer. I would say for $95 today, it's an awesome, awesome opportunity and value for everybody. I don't plan to start a trading room. I plan to provide awesome, awesome software and trade for a living. Like, that's it. Like, if I can trade for a living, no brainer for 95. Thanks, Andrew Clark. I mean, I think the buy click and sell click is incredible. Like, I think it's a huge value. Also, like when Dad and I started trading, right, I didn't want to see his profit and loss on my chart. So that's why I developed that. So I can only see my NASDAQ P&L. I can only see it. So yeah, for 95 bucks, you get that where you can separate. I can see I'm up this much in NASDAQ, I'm up or down this much in ES, the buy and sell click, attaching orders to indicator plots. Yeah. So intrabar entries on a 6-range chart. Aaron, what would be the context of that? Are you talking about on a bar close with a signal? Thanks, Brian. John, we can't unmute, I don't think, today, but I'm hoping to do like some Saturday morning sessions where I can interact with my customers more. So that's kind of been an idea I've had. Paul, one of my customers, comes in and talks about buying the closed bar entry orders. Thanks, Paul. BN says, why would you guys have this scammer presenting here today? He spent half the presentation on his Tinder bio, admitting he can't trade for a living, overpriced indicator system. That's great. I mean, if that's how you feel, man, that's awesome. I showed you my P&L and I'm up $16,000 in the last 2 months. So I do have a company, I sell software, but I would say you're right. You're pretty accurate. Most guys that run trading rooms and sell indicators don't trade for a living. That's for sure accurate. It's great, but you may also want to check your attitude, because that's one of the things I've found too. If I'm negative about these things, it's never going to work out for me. Thanks, John, about the buy and sell click. Aaron Crawford, I didn't see. I would love to talk to you and answer your questions. Just send me an email. I don't fully understand what you're saying there. Robert, we can learn more before you purchase on the offer page. Check out the offer page. I've spent some time laying that out for you guys to see what I'm offering. Everything's good till Sunday. Yeah, thanks, Aaron. Awesome. Yeah, this is fun. It's unfortunate that for some reason the presentation, I did not mean to spend 10 minutes talking about myself either, but I'm telling you, man, like all of you should find someone to trade with, like someone to walk through this with. I think even in person, because it's a game changer. You can I mean, I've talked about this all day, but yeah, it's hard to stay disciplined and manage your risk well and stay positive in these things. It's very, very difficult. You know, just like the other percentage I talked about, 95% of people fail. Robert, I have 1 and 2 PC license. So yeah, you can do that. Add the trade setup. Look, man, I get it. With that chart, there are a lot of different ways to enter trades. It's almost can be over analysis, and I'm still trying to figure that out. But I see almost like Norm Hallett. I mean, he's been doing this for 40 years, right? He called it the A+ trigger. I see lots of great triggers on there, and I really think it just comes down to managing risk more than it does making the decisions to enter the trade. Will the chart trader fade the trade, enter long following X ticks as the market drops? Michael, I think you're talking about a stop entry, potentially like a Renko, if you're getting down bars and you want to trail it, and then when you get the up bar, you're long. But not sure I'm understanding that question, but would love to come up with a solution for you if you want to shoot me an email. Andrew says, I love the transparency. You are for real. Thanks, man. I mean, I feel like the presentation sucked because I was just so frustrated with the slides not working and everything else, but it is what it is. Raj, chart trader's best I've ever seen. Thanks, brother. Jason Vino, worked with Joel for 8 years. We did a custom project recently. Thanks, Jason. Real deal. And there's been some other comments. If I haven't read your comments, I'm sorry, but really appreciate all you guys coming in here. I think we need to wrap up in the next minute or two. Is there any last question before we wrap it up?
Joel, I'm going to go ahead and ask if anybody has any further questions to go ahead and shoot you an email. I'd like to apologize to you and our audience about the little bit of tech difficulty you had outside of broadcast times. If you'd like to set up a GoToWebinar with you and I and just double check things to make sure they flow smooth, we will. And I will give you the compliment of everything you mentioned about multiple time frame, higher time frame trend lines and stuff like that being used on lower time frame charts to help you trade, and the use of ATR falls right in line with everything that the pros say. So you're on point, brother. And after listening to your presentation, I see why you've been so successful during your 14 years. I love the family values you bring. I'm curious to check out your tools on a personal level, and I'm kind of captivated by the enhanced chart trader, order flow plot products, entry signal indicators, support and resistance. Your online reviews are phenomenal. Obviously, those that work with you love your systems and stuff. Ladies and gentlemen, if you want an edge in trading the markets, Joel has a solution for you. To learn more, please visit Joel at affordableindicators.com. You can gain instant access to a special offer, and you can click on the link in the chat box. Thanks again, Joel, for being with us today. We hope to have you back.
Wow, thank you so much, Rob. What an honor. Thanks, Robert. Thanks, Paul. Thanks, Juan, on the chat here. Really enjoyed it. Again, wish we didn't have the technical issues, but we'll get it right next time. And again, if you guys want to call me or shoot me an email, I would love to answer any additional questions. Thanks.
Have a great end of your week, sir.
All right.
Ladies and gentlemen, at the top of the show, I mentioned we have a great lineup, and I hope everyone is listening closely, because our next Prevent Center is here to deliver an opportunity to secure $1 million in trading capital. He's a hedge fund manager, author, and trading psychology coach. And as a trading psychology coach, he enjoys helping other traders discover and overcome the #1 obstacle keeping them from being a consistently profitable or multiplying their return trader. His challenges have helped traders transform their trading psychology based on Nobel Prize winning research. Ladies and gentlemen, here to present how to secure $1 million in funded trading capital is Mr. Marcus Howard of Tradechology. Welcome back to Traders Corner, Marcus.
Rob, how are you, sir?
A little rough at the moment, but we keep things going, and
Yeah.
we know I love your presentation and the things that you present in it and preach about. So take it away, my friend.
For sure. So I know we started just a couple of minutes late with the technical difficulties before. Rob, if I can just ask for just a few minutes of grace at the end of the presentation, just to make sure I get through everything.
When the previous guy runs a few over, feel free to run a few over.
All right. So you can see my screen now. It has the live workshop, $1 million in funded accounts.
Absolutely, and it looks like the
Beautiful.
Capitol or the CME building in there.
Yep, beautiful. So when I click this button, right, we go to a new slide. We don't have any of that funny business. All right. So
Uh-oh.
no, don't tell me that.
I'm still, oh, there we go. What we
Okay.
will cover.
All right, beautiful. So hopefully it's not going to be too much of a delay, and we'll be able to move on. So thank you so much, everyone, for being here today. This is going to be a fun presentation. It's going to be an engaging presentation. I want to just start from the beginning and let everyone know that it's been this way my entire life. A lot of people tell me that I try to put like a lot of information in a short amount of time. So this presentation does have that, but I promise you, if you just stick with me over these 45 minutes, what I'm going to be covering in this presentation today can truly change the trajectory of your trading in 2023. So if you're on Facebook right now, if you're text messaging, if you've got your email up, we can see who's paying attention. Like they've got the stats to show attentiveness on the actual GoToWebinar itself. So I'm telling you, please lock into this presentation. It will genuinely help you. I don't take my presentations as pitch fest. I do as much as I can to provide hard-hitting content that you can use almost immediately to go ahead and get started. So let's talk about what we're going to be covering today. We will be talking about how just 30 days of proper execution can change your trading career in 2023. And I genuinely mean this. With just 30 days of proper execution for what I'm saying here, you can do a lot to change your entire trading life. I'll go through my $1 million funded account cheat sheet. Then I'm going to go into the top 3 reasons that traders lose their funded accounts, okay? And then what you can do to keep your funded account for the long term. And then finally, I'm going to cover some top tips to keep your funded account. And just for Rob and the folks at Traders Corner today, I'm actually going to be debuting for the first time ever that I've ever publicly talked about a new tool that's going to make passing combines the easiest it has ever been. If nothing else, if you just stick for that one slide where I'm going to introduce this new tool to you, it will truly revolutionize how you think about taking combines, how you think about even approaching your trading in the first place. That's not a small promise. I promise you that. All right. So let's jump into the quick risk disclosure. Again, MLH Capital, which is the parent company of Tradechology. We are not financial advisors or broker dealers. Any securities that I use in here should be used as an example. Please don't take anything I'm saying here. Go to your brokerage account and go to your funded account, risk the maximum number of contracts, and then say, well, market said do this, and then you end up losing money, okay? Investing carries risk. So trading securities involves high risk and a loss of funds. You can lose some, all, or even more money than you invested in the first place. And no part of this presentation may be recorded or rebroadcast in any form without the prior written consent of us. But I'm also recording this thing, and I will be sending you all a copy anyway, so no need to record it. Just wait for the 2 or 3 hours when I send you an email saying, hey, here's a recording of the presentation. So let's go ahead and dive right in now that we've got the disclosures out of the way. A little bit about me. I'm Marcus Howard. I'm the guy in the middle there. What you're seeing is an interview that I did a few months back for Pix 11 New York, where we talked about a lot of fun things like what we do, IRAs. We talked about trading in the stock market. We talked about Nadex. We talked about my book that I wrote. It was a pretty cool and interesting, fun interview to help people to maximize their money. But for me, my full-time job is I'm a hedge fund manager, run my own shop. I'm an author, and I'm a founder of Tradechology. So a little bit about how I got consistent, which is important for people to understand how the people who you're listening to got to where they got to. So in 2017, I had started with a $25,000 paper money account on Nadex. And if you don't know what Nadex is, it's the North American Derivatives Exchange. It's a binary options exchange. It's a simplified version of options, basically. Do you believe the S&P 500 is going to be above whatever it is right now? If you do, buy a contract. If you don't, sell a contract. All the contracts are worth $100, so you're basically risking $50 to make another $50. That sort of thing. So it was pretty simple, but it was a good introduction for me, at least, to futures and options. I've been trading stocks for the better part of like a year, but it was mainly, 10 years. So it was mainly like just buy and hold sort of things. It wasn't really active investing. But I took that $25,000 paper money account on Nadex and I grew it in 18 months to over $13 million. And then from there, I took $5,000 of my own money. And in about 4.5 years, I've taken that $5,000 and grown it to a full-fledged hedge fund. So the things that I'm talking about here genuinely work. Okay, I use them in my own life, but not only do I use them in my own life, in my own trading, but at this point, I've helped thousands of traders to be able to do the same thing. So I enjoy helping traders discover and overcome the number one obstacle that keeps them from being consistently profitable or multiplying their returns. My challenges have been have helped, again, thousands of traders at this point. In my coaching program, I've worked with hundreds of other traders. I mean, specifically helping them to get $1 million in funding, to be able to get to their first payout, to be able to do all the things that they need to do in order to become a full-time trader. So a lot of things that I'm going to be covering with them, that I have covered with them, I'm going to cover in this presentation. So just one quick slide. This is my book, Preparing to Manage Millions. I'm not saying this to go out and go to Amazon and buy the book. It was actually written for college students anyway, so it doesn't necessarily apply to a lot of people here. But I just put this here because, one, they featured it in that Pix 11 interview, which I thought was great. But then, two, I wrote this book when I was 19 years old. I'm 37 now. So to think that even just 18 years later, that book is still being sold, I'm still being put on the news, I'm still getting speaking engagements for it, has just really, truly been a blessing for where I am in my life, because I'm a kid that grew up on the south side of Chicago, and now I run a hedge fund with an office on the 42nd floor of the Sears Tower in Chicago, Illinois. Like, really a truly magnificent journey that I've had, and I want to be able to share some of these takeaways that I've gotten from my experiences and my success with you all today. So let's go ahead and dive in. Who's this going to help most today? This will help you if you struggle with passing evaluations, okay? If you're someone who has passed them, but don't know how you can necessarily keep them, so you've gotten them, but you don't know how to keep them long enough to get your first payout, this will also help you. This will help you if you struggle with establishing or sticking to your high probability trading setups. Also, if you struggle with discipline, over trading, and other trading issues, these things will help you. But even if some of these things don't apply to you, please, please, please stick around during this presentation. If nothing else, I share at least 5 to 10 golden nuggets in here. If you just took one of those golden nuggets and applied it to your trading, it can genuinely help you for the rest of the year. So don't tune out, maybe even if you don't use funded accounts at this moment. Like, just pay attention to the principles that are being talked about in this presentation. I promise you it's going to help you. So let me pause for a brief second and just talk to the folks here about some perspective on getting funded. So I got this data from, I don't even know if I can still publicly say the name of the company, so I'm not going to publicly say the name of the proprietary trading firm that I got it from, but this is data that they got on their traders from just 1 month worth of traders that went, new traders that have come and they tried to qualify for their accounts. So in 1 month, in terms of how many people joined to qualify for a new account, they had 5,718 new traders, okay? Of those 5,718 new traders, only 10% of them passed phase 1 of the evaluation, meaning that they had to make XYZ amount of money before they lost XYZ amount of money. So we immediately go from 90% failure rate, okay? So from 5,718 to just 572. But then this one had 2 phases. So if you know anything about the funded account industry, there's only a couple of companies that have multiple phases. So you're probably going to be able to deduce who this company might be, but I can't say anything. But of that phase 2, only 24% of the 10% actually got to actually get in the account. So we went down from 5,000, almost 6,000 people to 137. Now my question for you is, of those people, of the 137 that actually got the funded accounts, how many people do you think had the account long enough to be able to receive their first payout? 4. So out of 5,718 people that started this trading journey, only 4 people were ever able to make money. That is 7 1,000ths of 1%. That is a staggering number to truly think about. So what you must understand here is that getting and keeping a funded account is hard on purpose, okay? And I get it coming from the perspective of a funded account provider. Why would I want to give you my money to trade with if you're just essentially going to lose it? So they do make these presentations, or they do make these exams difficult in order for you to be able to prove that you're able to have some consistency. But if you find that it is something that is extremely difficult for you, or you've been having trouble with being able to be successful at it, let me show you how we can make it easier. And that's what I'm going to focus this rest of this presentation on. So if you just take the principles behind what's in this one slide today, just this one slide, and there's 3 or 4 different slides that I have that are like this, but just this one slide, this will truly help you. So 30 days of proper execution can truly change your trading career for the better. What do I mean by this? So Apex Trader Funding, and John is going to, from Apex Trader Funding, is going to be the next presenter on here. So I'm talking about his exact company and the information that they provide on their funded accounts, right? So their new account rules have made it easier than ever to trade full time. You can receive 100% of the first $25,000 per account, and then 90% up beyond that. So they've changed it where it used to be one payout every, I think it's either 20 or 30 trading days, but now you can get 1 payout every 10 trading days. So that's 2 payouts that you can have per month, which is great. They went from qualifying in as little as 10 trading days to 7 trading days. And again, you can do payouts in just 10 trading days. So they've had it where for a while now, but they've added it where you can trade with up to 20 accounts. So think about this. It takes you 7 days to qualify. It takes you 10 days to get your first payout. That's like 17 total trading days. There's only 20 trading days in a month. So we'll round up and just say in a month or 30 calendar days. If you have the 20 accounts, that would mean that you can withdraw as much as $40,000 in the first 30 days if you can just execute properly to be able to get yourself to the point where you have multiple funded accounts and you can actually get to a payout. So this doesn't have to be a 6-month endeavor, a 12-month endeavor, or some of those Forex ones where you have to trade consistently for like 6 to 8 months before you ever get an opportunity to get an account in the first place. Just 30 solid days of execution can really change this around. And I want to show you how we can do that right now. So I'm going to go through my $1 million funded account cheat sheet. What I'm going to do is go through the bullet points of the principles now, and then I'm going to go into each one of these in detail. So when it comes to my funded account cheat sheet, when it comes to funded accounts, it's not about how much money you make, but how much money you lose per trade. That makes a difference. And as I'm looking at the attentiveness factor, I'm seeing that it's continuing to grow. Good on you for that. I'm telling you, the information I'm going to be providing here is really going to help you. Keep paying attention to this presentation. Get off email, get off Twitter, get off of whatever else you want, and keep paying attention here. The second point, multiple funded accounts is always going to be better than just having one large funded account. The third pillar that I'm going to talk about is that the most popular instruments aren't always the most profitable, okay? Trading is more, futures trading is more than just NQ and ES. I'm going to demonstrate that to you with proof. Then my fourth principle is that discipline and trading psychology is going to be paramount to any tool or any entry and exit signal that you have. If you don't have your discipline and you don't have your psychology in order, you're going to be in trouble. So I want to go over these 4 pillars in detail right now, and I'm going to be providing you a plethora of resources. So in the first pillar, we're going to talk about, it's not about how much money you make, okay? But it's about how much money you lose per trade that genuinely makes a difference. Trading exams are hard because the win-loss ratio is not always proportional. Okay, in most cases, you can only lose about half as much as you need to make in order to qualify for the exam. Let me give you an example of this so that we can bring it home and it makes sense. I pulled this from the Apex Trader Funding website a couple weeks back, maybe about a month or so ago now, but these numbers should pretty much be accurate. So what I'm showing you are 4 different account levels that exist at Apex Trader Funding. You got a $50,000 account, you've got a $100,000 account, you've got the $150,000 account, you've got the $250,000 account. And so what I want you to see here is that when you look at the $50,000 account, you have a profit goal of, let's say, $3,000 before you can lose $2,500 of it. But then if you go to the $100,000 account, you now have to make twice as much money. So you have to literally make $6,000 before you can lose $3,000 of it. So your profit target in terms of how much money you have to make has doubled. But how much money you can lose has only gone up $500. That's not in proportion, right? If it was proportional, you would have to make $6,000 before you lost $5,000 of it, or even if you want to be fair, $4,000 of it. But instead, it's only $500 more. Once you get to the $150,000 and the $250,000 account level, the numbers grow even higher still. Okay, and notice that it's more expensive also to get some of these larger accounts when it's just as simple for you to go ahead and just do, let's say, even a $50,000 account, or try to get multiple $50,000 accounts where your profit goal is $3,000, where you only need to lose $2,500. As close as you can get to like a 1-to-1 relationship, which is pretty fair. Now we teach at Tradechology in our funded account program, you could either go for $50,000 or $100,000 accounts. We don't care either way because our win rates are pretty high, where you can pretty much qualify for either one of them. But I can tell you with the way that we structure our program, you can do everything you want to do with a $50,000 account. I mean, $10,000, $20,000, $30,000 a month if you wanted to, simply with a $50K account. And I'm going to show you how that's possible. So again, it's not about how much money you make, but how much money you lose per trade. And trailing drawdowns also eat away at your profits if you choose to trail. So what I mean by this is most of the funded providers today, they use something called a trailing drawdown, okay, or a trailing loss limit, meaning that it's based on your unrealized profit. So give you an example. Let's say you're in an ES trade and you're in the trade and you go up $500. But then for whatever reason, the market's choppy, it turns around, and now you close your trade at break even. Well, if you look at your P&L, okay, you're basically still at the same amount of money that you started with, $50,000 minus the fees. So let's say the fees is $5. So you're $50,000 minus $5. But if you actually go into your brokerage account and you look at how much money you have available to lose now, you'll notice that that number has grown $500. So you no longer have $2,500 to lose at the 50K account. You have $2,000 because it's based on your unrealized profit, which went up $500, even though you closed the trade at break even. So what I find a lot of times when I'm working with traders is they'll have a positive return in their exam. So they'll be like, but I'm making money. How did I end up losing this exam? It's because they weren't truly paying attention to the fact that they went up so much money and they gave so much money back to the market. And then when they started losing, they had less money than they could lose the last time. So it's really important, especially if you're taking these exams, to pick the amount of money that you want to make and just go there. The idea that you want to continue to trail and have a $1,500, $2,000, $2,500 trade that you're going to have, if you gave $2,000 back to the market because you were being silly, you essentially failed that exam. So we really want to be smart and strategic about, especially when we're taking these exams, what it is that you're doing. So you want to make sure that you design your risk profile around your loss limit and not your profit goal. I want to say that one more time because it's incredibly important for you to understand. You should design your risk profile around your loss limit, not your profit goal. So how much money you can lose versus how much money you're going to make. Because if you can manage your losses, the wins will begin to take care of themselves. But if you don't take the time to manage your losses, there's not enough winning you're going to be able to do that's going to get you out of trouble in the long term. So a hard and fast rule for us here at Tradechology is that you don't want to risk more than 10% of your available drawdown on any single trade. So when we go back to that $50,000 account example, what we're saying is you have a $2,500 limit in terms of how much money you can lose before you fail the exam. No trade that you take should be more than $250. So your stop loss should be set at whatever it's going to be, but it should be at about $250. This will allow you to be able to stay in the game for the long term. It's hard to lose 10 trades in a row. But if you're over leveraging yourself, it's easy to lose 1 or 2 trades that get you into an emotional and psychological tailwind that then get you to the point where now you need to take another trade because you feel like you need to make that money back. So if you just keep it to around 10%, you're usually in pretty good shape. Okay. Here's another biggie. If you do nothing else but just take a screenshot of this, this will help you out a lot. This is the actual risk profile that we use at Tradechology when we're looking to qualify for a $50,000 account. This is the one that we use that helps us to do a lot better at being able to qualify for these accounts, pass rate 60% or higher. So I can't go through the entire thing because this slide alone, I usually spend about a half hour, 45 minutes on, and I only got 45 minutes in this presentation. So I'll just go through it briefly. On the left side is the actual trade rules. On the right side is the risk management side of it. So we have different tiers of instruments at Tradechology. So tier 1 are instruments that are $25 and more per tick. So think silver, think the bonds, think palladium. If you trade palladium, most people don't because there's not a lot of liquidity there. Tier 2 would be anyone that's $10 or more. So think gold, crude oil, ES, those sorts of instruments. And then tier 3 are just the regular indices. So think YM, NQ, RTY, those sorts of ones that are $5 or more per tick. So on that side, I've got it broken down by tiers and how much we risk per trade. On the left side of the actual rules. So I invest a maximum of 3 contracts per trade. I take a maximum of 5 discretionary trades per day. That excludes the auto trader, which I'm going to show you in a little bit. I use a stop loss of no more than $250 per trade. Again, I'm only risking 10% of my available drawdown. Okay, I have a maximum trailing drawdown, meaning based on my highest point, I only allow myself to ever give $150 back to the market so that I can stay in the game for the long term. I stop trading if I have a cumulative net drawdown of $750. Meaning if I go down $750 on a day, I'm done trading, okay? I don't ever lose a funded account in a single day. That isn't what we do here. I participate in the market less than 4 hours per day. I do not hold trades overnight, and I do not take discretionary trades during times of high volatility. If you just incorporated some of these rules into what you're doing now, it will exponentially increase the probability that you're going to be able to pass your next combine. But break any of these rules or over leverage yourself, and you're going to find it's going to be a difficult time. I'm not saying you won't pass a combine, but I am saying that you probably aren't going to get to the point where you can get to a payout. I mean, it's just simple math. Sooner or later, your luck is going to reverse. And if you don't know how to manage your losses, you're going to find that you're just going to be doing things that are going to get you in trouble in the long term. So again, take a screenshot of this if you haven't already, because even if you just use this one thing alone, it would help you out a lot to be able to pass your next trading combine. All right. So pillar number 2. Multiple funded accounts is always going to be better than one large funded account. Why do I say this? So multiple accounts allow you to multiply your earnings. Duh, right? So if you use a trade copier, which Apex has, Replicanto is another one. There are plenty of trade copiers out there. You can qualify for multiple trading accounts at once, okay? So you can qualify, if you use Apex's, I think to up to 10 accounts. If you use Replicanto, it's up to 20 trading accounts at one time. But really only do that if you've got your risk profile, you've got your stuff locked in, right? Don't just haphazardly take 10 trading combines at once, but if you are at a point where you're comfortable, you can. So what that does is each winning trade now can be multiplied up to 20x if you use Replicanto, but I'm just using Apex's for an example because I know John's here. So 10x, okay? So what that also does though, on top of just multiplying how much you make, is that you spread the risk of how much you lose across several accounts. So here's an important principle for you to understand. I know most traders, because I talk to, at least 5 or 6 new traders a day during discovery calls for my funded account program. Most guys are trying to make $10,000, $15,000 per month, right? But in order to get to the point where you're making about $10,000 to $15,000 per month, it's hard to do that with just one single trading account if you're trying to qualify with, let's say, a $50,000 or a $100,000 account, because it usually isn't enough risk there, okay, or enough risk available for you, $2,500 to $3,000 for you to be able to put $10,000 in profit in there. So you're usually going to be over leveraging yourself, and you'll lose $3,000 before you can actually get to the point where you can get to that 10,000 point. So when you have multiple accounts, what ends up happening is you can now spread that risk across multiple accounts. So if you had it across 10 accounts, you don't have to put 5 contracts on the one account, or the maximum number 10 contracts on the one account. You can just risk 1 contract or 2 contracts across all of those accounts. So each time you lose a trade, you're only losing about $150, $200 per account, which allows you to be able to stay in the game so much longer. Again, controlling your risk is going to be the most important thing you can do here. The wins will take care of themselves. The number one account killer is going to be too much risk per trade, per contract. I'll say that again because it's so important. The number one account killer is too much risk per trade, per account. So if you have multiple accounts and you keep your risk low in each account, you can be able to stay in the game for the long term. Because you always want to be in a position where you can trade again tomorrow. It's okay to lose a trade. It's not okay for the loss that you took to put you into some emotional or psychological spiral where you lose the account, which could mitigate weeks, sometimes months worth of work that you've been doing in order to get to the point where you're trying to qualify for an account or even get your first payout, okay? So I'll give you some tools and resources to make sure that you never really blow account in a day again in this presentation, but I just wanted to get this information out to you because this is important. All right, so then let's move here to our funded account calculator. So what I'm going to do is I'll full screen this here. Let me just make this larger so that everyone can see it. Apologize. Okay, here we go. All right, so what I'm going to do, actually, I don't have to do it this way because I've already got it. I'm going to, actually, no, I don't. Sorry. I'm going to share, copy this link. I'm going to drop it in the chat for everyone here, okay? So here, this is my gift, my first gift to you in this presentation is this funded account calculator. So what this is going to show you is 2 very important things. One, it's going to give you a way to be able to calculate based on the instrument tier how many net profitable trades you have to make in order for you to be able to qualify for an account. So right now I've got 5,600, which is actually not even one of these. So let's just say for a $50,000 account here. So you have to make $3,000, okay? So this is showing you if you're doing, let's say, so the way we do it is we just do a 1-to-1 risk reward ratio, okay? So at $25 per tick, you're talking silver, so we're risking 10 ticks to either make 10 ticks or lose 10 ticks. ES, the same thing. We're either gonna make 10 ticks or lose 10 ticks. With the indices, we're either gonna make 20 ticks or lose 20 ticks. We're not trailing, we're not doing any of that other funny business. And so what we're doing here is going by the number of contracts. Going by the risk, okay? So knowing that you should no longer risk more than, let's say, $250, that puts you firmly in the 2 contract range if you're doing ES, 1 contract if you're doing silver, about 2 contracts if you're doing the regular indices. So what this is saying is in order to qualify for an account, what you need to do is to be net positive, so not win, but in terms of the number of trades you win versus lose, you need to be up 6 trades in order to be able to qualify for an account. I'm sorry, 12 trades if you're doing silver, 12 trades if you're doing ES, and 16 if you're trying to do the indices. So Apex, you can qualify in as little as 7 days, 16 trades. That takes you in a little bit over 7 days if you win 2 trades per day kind of thing. So this would be able to easily allow you to do the math in terms of how many net profitable trades you have to be in order to be able to qualify for an account. If you want to make a copy of this, again, go to File here, and then go to Make a Copy, wherever that is, make a copy. And you can have it on your own Google Drive. If you don't use Google, because I know some people use Yahoo, Bing, or whatever else, you can download it as an Excel file. Please do not request access to this file. I will not give it to you. Okay, so this is the way you get access to it. Now, the second version to this, or the second page, is the actual P&L calculator. So this is me assuming now that we've gotten to the point of our end goal, which is to get you 10 funded accounts. Okay, so if you have 10 funded accounts, which is this line here with the same amount of risk, okay, so 10 ticks, 10 ticks, and 20 ticks. Now we're wanting to see how many net positive trades does it take with the 10 accounts to get to $15,000 a month, which for some people, $150,000 a year or more is the ideal. You know what I mean? 100. So what is that actually going to take? So when you see the economy of scale, and now we're doing it with 10 accounts, notice that in order to get to, even if we're just doing, let's say, the same 2 contracts on ES, okay, in order to get to net positive $15,000 per month, you just need to win or go up 6 trades per month. For a lot of traders here, that's feasible to do because we're able to have the economy of scale. Okay, so 6 trades, or if we're doing the indices, that's 8 trades. There's 20 trading days in a month. Okay, so if you went up less than 1 trade a day, you'll still be able to get to this $15,000 per month goal. This is why things like this are so important. This is why it's important to have multiple funded accounts, as opposed to just trying to stick to the one. Okay, so that's going to be my first gift to you. Please use this calculator because it will help you a lot to get you to understand what it is that you need to do to be able to qualify for these accounts in the long term. I wish I can go into more detail, but I don't have enough time to even go through all the stuff that I'm presenting in this presentation today. So let me go ahead and move on with that skip number 1. Number 2, well, this is point 3. Popular instruments aren't always the most profitable. So what I mean by this is futures is more than just NQ and ES. If you follow the guys online, if you're part of a trade room, they're almost exclusively talking about NQ and ES. The most popular instruments, though, are always and most often traded by high-frequency trading bots. So if you're an individual operator, meaning you're the person that's going and clicking the buttons trying to get in and out of trades, usually by the time your brain goes to, okay, this is where I need to get in, let me press the button, should it be a limit order, market order, what's my entry, all those little things you take, it usually takes anywhere between 7 to 10 seconds. By that time, you're usually late when you're talking about high-frequency trading bots. So it's important for you to sometimes trade instruments that are still traded by human beings because they move more predictably. My first $100,000 was made trading RTY. I started with, I think it was NQ because that's what everybody was telling me NQ was the way that it needed to be. But then when I got to RTY and I looked at RTY and I noticed how it moved, I was like, wait a minute, this gels a lot more with me. And so I listened to my own internal guidance and didn't just look at the conventional wisdom online, and I stayed with RTY and was able to make the money that I need to make in order to be able to transition to trading it full time. So I want to put the proof to the pudding. I want to put my money where my mouth is. So what I'm going to show you right now is a video of me actually using an automated system to qualify for a funded account. I'm actually using Brightline system. I don't show their charts because I didn't know if I had permission to it, but Brightline is running in the background, but it's taking the automated trade. So I'm going to show you here essentially what's happening. So I'm fast forwarding to the point where like I qualify for the thing because I don't have enough time. I was up about 4,000 and some change, had some automated trades going on. We got to 5,000 and some change here, got to 6,000 and some change and more. Hold on, it's gonna go here, boom, boom. So that number right there, $6,085, I qualify for that account. Again, was trading 3 contracts, take value of 5. So this is the Russell 2000. Was trying to get $600 per trade and lose 300. So what I was doing was a 2-to-1 risk reward ratio, risking 40 ticks to make 20 ticks kind of thing. Now, I also, before I go to that, I want to give you this proof because I realize that, scamming and whatever is in abundance here. You don't have to review this now, but I'm going to drop the YouTube link to that actual video in this presentation. Go back and review it yourself, okay? So I'm not lying, not scamming you. You'll see every single trade that I took and was able to qualify for an account completely automated with RTY. But it's not just me that does that. I have several traders, so many traders in my group that are able to do the same thing. So I'll just give you a couple of examples here. Adam is one trader. So Adam came to us in our funded account program because he was trading without a solid strategy. So he was struggling with overtrading, and he worked with us to help to fix his psychology-based issues, his habits, as well as his system. And so in less than 30 days, I think it was like 28 or 29 days, he was able to qualify for 10 Bullonox accounts to get over just about $500,000 in funding. And so this is the actual factual, his like the screenshot that he sent me where he had qualified for these accounts completely automated. Okay. So these are his 10 Bullonox certificates that he got. I'm really proud of Adam and the work that he's been able to do, but he's not the only one. So this is in our private Discord channel for our funded account program. This is one of the automated strategies that we use, which I won't get into detail because I know not everybody uses the right line system, but it was a, it was a customized strategy that we had developed in the right line system because we do customized automated strategies. And so we had Johnny, who's in our Discord channel, he qualified for 3 exams or 3 funded accounts. I think this is for Tick Trader. And then literally the next day, using the same strategy, okay, he not only passed the exam the day before, the next day, he went in and made $900 on 2 of his accounts and $1,800 on another one. So he's not the only one that has these sorts of success and these sorts of things. You'll see, I mean, it's not enough screen space here for me to put all the certificates that we have, but I did want to drop in a couple of them. But what I want you to notice here is most of these are not just one combine being passed. There are multiple combines being passed by the same person with different companies: UProfit, Bullonox, Apex Trader Funding, True Forex Funds, Tick Trader, Earn to Trade. There are so many, Lilu, there are so many different ones here because we're really agnostic to, now, don't get me wrong, we like Apex, but we're really agnostic to which exam it is that you ultimately take because the principles are still the same, okay? So we've got a lot of traders that are doing a lot of successful things using the methods that we teach. Not just the entries and the exits and the strategies and things like that, but the psychology is paramount important. The discipline is important. Having an adequate risk profile. Those sorts of things are incredibly important. All right. So I only got a couple of minutes left. So let me go into this, the top 3 reasons that traders lose their funded accounts. And then we'll go ahead and we'll have some time maybe for Q&A. I hope I'll be able to get to this. So let's talk about the top 3 reasons traders lose their funded accounts. Reason number 1 is always going to be contract size. Okay. This is the #1 contributor to you losing your account. If you do nothing else but just reduce your contract size, you're going to be in better shape because large losses usually lead to a dangerous cycle of triggering the emotional desire to want to get back into the market. Not that you can't take another trade, but usually you're adding more contracts. So if you were 1 contract and you lost, now you're going to put on 2 contracts because not only do you need to get that money back, but you need to get the money you were trying to get the first time. Those sorts of things happen all the time. So reducing contract size drastically reduces your anxiety, your analysis paralysis, and your desire to want to revenge trade. So #1 contributor, contract size. Number 2 is going to be systems confidence. So this comes into play when you feel you aren't completely confident in your trading system. So your analysis feels right, but you've lost trades in the past that now lead you to question your analysis, especially on weeks like this one where things were choppy since last Friday, where things that had worked a week ago aren't working now, and you begin to question yourself. Am I a good trader? Maybe. But it also could just be that the market conditions have changed, those sorts of things. So if you don't truly have confidence in your system and you trust your numbers, you're going to find that you're going to be starting to do things that are uncharacteristic to what you truly should be doing simply because you don't have confidence in that system. The big thing that traders do when they don't have systems confidence is they think in terms of individual trade outcomes versus a series of trades. So what do I mean by this? When you don't know if the next trade is going to win, you usually put too much risk on that next trade because you're trying to make all your money in that next trade because you don't know 5 trades from now if the next 5 ones are going to be losers. But what most professional traders do is they think in terms of series of trades. So I don't know if the next trade that I'm going to take is going to win, but I know that over the next 50 to 100 trades, if the math and the statistics that I have on my trading system holds up, I should be at about this amount. So any individual trade outcome doesn't make that big of a difference to them because they know that over a series of trades, they're going to be fine. That's what professional traders do. Most day traders, amateur traders, folks that are trying to qualify for these funded accounts don't. They put all of their eggs in one basket. This next trade has to work. And then if it doesn't work, they find themselves getting in trouble. So systems confidence is a huge one. The third one is an emotional trigger after a loss. So most traders set an arbitrary amount of money that they're looking to make per day, per trade. Every time I talk to a trader, when I'm having one of these calls for my funded account programs, it's always, if I can make $500 a day, if I can make $1,000 a day. I can tell you that most traders don't make money every day. So before I started Tradechology in this coaching program, I had a private podcast where I interviewed maybe about 100 or so $1 million traders, And each one of those $1 million traders said the same thing. They didn't make money every day, but again, they trusted their system and they knew that over time they were going to be able to make this amount of money. Okay, so if you start the day with, okay, I need to make this much money per day, what happens when you don't? They usually lead to overtrading, revenge trading, and all those other things. So traders routinely abandon their trading plan after they lose just 1 or 2 trades in a row. Okay, that's not a lot of trades, but it happens every single day with traders. So it's allowing you to get triggered emotionally, and that's the thing that's going to lead to trouble. It happens most often when you're close to your profit target and then you lose a trade. So you would think that, okay, if I'm just in the middle or whatever, but it's usually I'm $200, I'm $300 away from hitting my profit target for qualifying for the account. I lose that one trade before that was going to get me to qualify, and that leads to a spiral of me losing the account. How many people here have done that? I know I've done it myself in the past, so I'm guilty of it too. So that's exactly the sorts of things that happen when we got these emotional triggers that are coming after a loss, okay? So let's talk about some quick tips to save your funded accounts, and then I'll go into the resource that I want to premiere in this particular presentation today for the first time. So number 1, reduce your contract size, okay? I put this in capitalization for a reason. I don't mean to yell at you, but I do mean to yell at you because this is the number 1 thing that you can do to help to save your account. Number 2, stop trading for the day if you lose 3 trades in a row. I know that 3 trades in a row doesn't sound like a lot, but 3 trades in a row is enough to trigger you emotionally to want to start to do dumb things like over leveraging, adding more contracts, and all this over trading, revenge trading, these sorts of things. If you go down 3 trades, it's just not your day. That's okay. Okay, well, let's go ahead and move on. You want to set up an automated loss limit in your brokerage account. So if you're taking these funded accounts, what you want to do is set up an automated, you want to set it up at the rhythmic level. And what I'm going to do is drop you another link. So this is my second gift to you, or third, I don't remember how many at this point, but another gift that I want to give to you, which is a video that shows you how to set up an automated loss limit at the rhythmic level. So even if you set it to $750 or $1,000 per day, rhythmic will cut you off, so that if you lose that much, you can't take any more trades for the day, okay? So that's going to stop you from blowing your account in a single day. You can just go, move on with the rest of the day, take a walk, do something, and come back fresh again tomorrow. You don't want to let your emotions get the best of you in these sorts of moments. Using trading psychology exercises to reduce anxiety and fear of missing out will also help you with your trade setups. And then 4th and finally, this is the most important one, okay? Sorry, it's one more. So use trading psychology exercises to install more discipline. This is a huge one, okay? And we have a series of exercises that we include, which I won't really have time to get into because I've only got about 5 or so minutes left. But here's the most important one, okay? Reduce your contract size, guys, okay? I can't stress this enough. Just simply doing this one thing will help you so much more because it will stop triggering you and will keep you in the game for the long term. If you do nothing else or take nothing else from this presentation, then reduce your damn contract size. It will help you in the long term. All right, so now let's get into the one thing that I wanted to premiere in today's presentation, which I haven't ever showed publicly before. This is going to be the first time that I publicly talk about it. So this is a tool that I'm going to be introduced, well, that I've had in private beta, which has been helping traders to pass their combines even easier. And it's a tool that I've developed here internally at Tradechology called Trade Copier Pro. So what is Trade Copier Pro? Trade Copier Pro is a reverse trade copier that enables traders to turn any losing NinjaTrader strategy, so this is a NinjaTrader add-on, into a winning one. So what do I mean by this? And hold on, Mark, seems like he unmuted himself. Okay, so this is a reverse trade copier that enables traders to turn any losing strategy into a winning one, because what it does is it's the only trade copier, at least that I know of for futures now, that has a reverse position feature, meaning that in this moment, it takes the other side of your trades. So if you're someone who doesn't have a winning strategy, or you've been trying to qualify for these accounts and for whatever reason you always end up blowing them, what happens here is you will have up to 10 accounts that will be taking the opposite side of your trades. So keep losing the trades that you normally have done. Keep, blowing these funded exams in your sim account, but you'll have another tool that's taking the opposite side of your trades that ultimately take these losing strategies that they've been using for the longest time and turn them into winners, right? So when we've been testing it, there's a couple of use cases that make a lot of sense for what we want to do with this. So the first one is, use case number 1 is just reverse your normal trading strategy. So whatever strategy you normally have, and I mean, maybe there's 3 to 5 guys on here because you're at this investment summit that can tell me that you qualify for accounts and you're making money consistently, but I know the numbers. 99 out of 100 people fail these exams, okay? So just keep trading the way you normally trade, but just have this thing taking the opposite side of your trades, and boom, you're qualified for accounts, because you're gonna fail the exam. I already know it. I see it happen every day. But now with the opposite side of the trade being taken, all those losses actually are turned into gains. So that's number 1. Number two, which I think is a more intricate, nuanced way of doing it, is that most traders don't lose money all the time every day. Because usually if you look at your analysis, you'll see that you only lose money during certain times of the day or during certain days of the week. So if you know when those times are and you just turn on the reverse trade copier to take the opposite side of your trades during the times when you're losing the most money, now those times become profitable for you. So let's say you can make pretty good money between 8 and 10, but after 11 o'clock, you're losing money. Well, guess what? Just turn on the reverse trade copier after 11, and now it's taking the opposite side of your trades, and those losses usually become winners for you, that sort of thing. So that's probably the most popular use case that we have. Not that everything is wrong, but just focus on the times when things are going wrong and then make those things right using the reverse trade copier. And so this third use case is probably going to be the most controversial one, but it is one that you can use for sure, which is to hedge multiple combines. So think about it this way. Let's say let's say you got a deal or whatever the Apex is going to offer. I'm pretty sure John's going to offer you a pretty good deal today because those are good guys there at Apex, right? To get you 10 funded accounts, okay? You take 5 and you trade them the way you normally would. You take the other 5 and you hedge it with the trade copier. Typically, you're going to fail one of them, right? So you're either going to pass yours and then fail the other 5, or you're going to fail yours and you're going to pass the other 5 with the reverse trade copier. But either way, you've passed 5 combines. Does that make sense? So you can actually take this as an opportunity to be able to hedge what you're doing to be able to get multiple funded accounts. Now, I know for a lot of people, it's like, well, why would I do that? But at the same time, you're not passing these accounts now. So at least we're giving you the opportunity at this point to be able to at least get some of these funded accounts to get to these payouts and do the things that you need to do, okay? So what I've been doing here, this trade copy is only available to my funded account program clients in private beta. We've been testing in private beta. I'm not sure when it's going to be publicly available yet, but I can tell you this one thing alone, okay, has truly changed the game for a lot of traders, because if I can be completely honest, most traders have sucky strategies. You can keep your sucky strategy, but just have a tool that's taking the opposite side of the trade. There, you're making money. Does that make sense? So that's the thing that I'm premiering today. Okay, so I've only got 2 minutes left because I know the other guy went 3 minutes long, so I won't take John's time. I will just go into, okay, so the last slide I want to have, and then I'll go into, if you're interested in more about Tradechology, which is the same slide I had before, right? Which 30 days of proper execution can truly change your career for the better. With Apex's new account rules, okay, you can receive $25,000, 100% yours, and 90% beyond that. So that means you can take home almost as much as $500,000 if you're trading 20 accounts before Apex gets their split. What would $500,000 extra do for you this year? Really think about that. So of the stuff that I put in this presentation for you, there's enough here for you to be able to go ahead and get started. But what about those people that, there's some people that want to do it on your own, and there's other people that are like, well, what if we wanted to enlist your help? So let me just take the last 2 minutes here to just go into Tradechology and what we do. So with Tradechology, we have $1 million funded account guarantee. We help you to fix your trading issues, and then we help you to master your trading psychology and emotions, to establish discipline, to stick to your take profit or your stop loss, and to establish the discipline to stick to your A+ setups. If you don't have A+ setups, which we know most traders don't, okay, we help you with establishing them, and we even show you how you can automate these A+ setups so that you can win money more consistently. We also include now, because we've just released it to our folks in private beta, we have the Trade Copier Pro. So even if you don't have a good strategy, guess what? Just take the opposite side of that strategy and you'll be able to make money. It really doesn't get too much more simpler than that. Okay, so what's included in our funded account program? We have our $1 million funded account checklist, which helps you to establish and optimize risk profile, backtest and optimize a quantifiable edge, give you a proven combine strategy with 70+% pass rate, a behavior change protocol based on Nobel Prize winning research, our trading psychology mastery course, and how to stop overtrading and revenge trading for good. In that, you get a dedicated trading coach, which in most instances is going to be me, where I meet with you one-on-one, and we talk about all things related to trading, and you have an accountability partner. We also do small group workshops every Monday, Wednesday, and Friday. On Monday, we do trading psychology. On Wednesday, we do trading systems optimization, auto trading, all that good stuff. And on Friday, we have a resident psychologist on staff, Dr. Sandra, who comes in and does group therapy sessions for traders, because we know a lot of traders need them, and they don't have a professional that they can talk to about the things that are going on with them. You get lifetime access to our $1 million funded account trainings, our private Discord channel, our full library of behavior change protocols, and our automated trading system and proven combine strategies and our algorithms that we use to help you to pass these combines more consistently. We do our best to help you to be able to get to where it is that you're trying to go. Okay, and our full satisfaction guarantee, I promise you I'm almost done, 45 seconds more, Rob. If you haven't secured $1 million in funded trading accounts and made it to your first payout by the end of our formal program, which lasts 12 weeks, the Tradechology team will continue to work with you free of charge until your goal is hit. because for us, it's not about the arbitrary amount of time. We want to get you to the goal. We want to get you to the funding. We want to get you to the payout. Okay. So in order to get started, go to the link below here, which is tradechology.co/traders corner. I'm also going to drop it in the chat for folks here. Okay. So tradechology.co/traders corner. Go to that link, fill out the application because I don't work with everyone. Okay. I disqualify more people than I ever choose to work with because I don't need the headache at this point. I run a hedge fund. I'm busy. Meet with me one-on-one. And if the vibe is right, you pass the vibe check. I'll also give you a discount on enrollment. So usually somewhere in and around 20 or 30% of enrollment just for the folks here at Traders Corner. So as a special bonus for the people that are here today, every trader that signs up for the funded account program will get access to the private beta for the new Trade Copier Pro to let you take the opposite side of your trades. Every trader that joins the program, I'll give you my RTY and silver trading strategy that has a 70+% combined passing rate. And because my program has been closed for several months now with a waiting list, I'm including every time I do these Traders Corner events, 5 additional spots that I open up. So even if you try to go to my website today, you won't be able to sign up for it because I'm sold out. So I'm only making 5 spots available for the folks that are here. With that, thank you all so much for this presentation today. I hope that you got some value from it, and I hope that you can take one of these things away in order to revolutionize your 2023. Thanks so much.
Thank you, Marcus. And on a personal level, congrats on the launch of the new product. I remember you saying something about it. Every time I listen to your presentation, I learn something new. And if you don't mind me sharing something personal, I have taken the reduce your contract size. And granted, my winners aren't as big, but the fact that my losers are much smaller and protect my capital allow me to take more profitable trades and has really improved my bottom line. So thank you for that on a personal level, Marcus.
Of course.
But incredible information. Ladies and gentlemen, Marcus is absolutely the real deal. If you're interested in securing $1 million in funded trading capital and have a professional step-by-step guide you to manage your finances, the hedge fund manager, look no further. You can learn more by clicking on one of the links in the chat box and find Marcus at tradechology.co, or is it .com?
It's .co.
.co. I apologize. For more information. Marcus, thank you so much for being here again. We hope to see you again. Thank you for the incredible offer. Have a great end of your week, brother.
You too. Thanks, Rob.
Oh, ladies and gentlemen, we are down to our last 2 presentations of the day, and I assure you that you do not want to miss them. Our next presenter is the head of operations with Apex Trader Funding. He himself is a trader as well and trade educator with a focus on high probability setups and trading mentality. With a background in the banking and as a licensed stockbroker, he's here to shed some light on how to qualify for funded futures trading accounts and how to have funded account has provided psychological advantages to thousands of traders. Ladies and gentlemen, here to present what is trader funding is Mr. John Skelton of Apex Trader Funding. Welcome back to Traders Corner, John.
Thank you very much. I appreciate that. Thank you for having me. So if I can just do a quick audio video check here. Am I coming through loud and clear? Can you guys hear me and see my screen?
I see something with some nice columns. It's not quite big enough for me to read, and some nice big mountains with a water view on the right.
Oh boy, okay. I must be having
sharing the wrong screen?
A screen issue here. Okay. Well, let's see here. It's showing that I'm sharing the proper screen.
I believe you're sharing 2 because I can see the time at the halfway point, and now I notice that it's the graphic twice.
Oh boy. Well, give me just 1 second here.
It's all right. Do your thing. Marcus had some great things to say about you if you didn't notice.
Yeah, I was I listened into most of it here. I am picking my screen here. I'm not sure what is going on.
The one on the left has ASIS in Search of Incredible, and the one on the right is some mountains with a little snow between them and the water at the bottom.
Yeah, that's my background here on all of them. I'm not sure why it's not picking up. choosing my screen like I usually would here for.
We got a fresh one loading. I just got a black screen now. Oh, there we go. Loading John's screen.
Sorry about this, guys. I've never had this issue before with GoToWebinar. I'm choosing the screen. It pops up on my screen saying this is the screen we're sharing. What are you seeing now?
I've got all black, and I'll apologize. I'm wondering if there's something going wrong with GoToWebinar because the presenter before Marcus also had some issues.
Yeah, I've never had an issue here. Let me just try one. Let me switch to a different screen. I mean, you know, it pops here on the screen and shows you which one it is you're showing, you know.
I got a black one on the left and your mountains on the right. Is it possible for the interest of keeping things moving that you can move your presentation across these two screens?
I'm not sure which two we're seeing.
I've got the mouse cursor across one, and the other one's the one on the right.
Well, I am very sorry here, guys. I'm not sure why two screens would be coming through. That's very odd. What are we seeing now? I have no idea why you're seeing two screens. I've got multiple different screens here.
Same thing. Black left half, mountains on the right half. I can see your toolbar at the bottom of the right half. I noticed you got PowerPoint picked on it.
Yeah.
Looks like you also got Google Chrome, Skype, and GoToWebinar open.
I put the new stuff in on slide 11, right?
Yeah.
I can see them both again.
All right.
Your cursor going back and forth between the two.
You see the right half or the left half of the PowerPoint?
I don't see either half of the PowerPoint. I see the time on the left half and just the mountains on the right half.
Yeah, that's making no sense here. Huh. Okay, well.
Forgive me for saying so, but you want me to kick you out and have you rejoin?
I can.
Oh, I see the presentation coming. The left half of the presentation's on the right-hand screen.
The left half is on the right-hand screen. Oh, boy. How about now? Same?
It's disappeared.
Well,
oh,
guys,
now I see it coming over. Now I see it right in the middle. I got you dead centered across the two screens, so if you want to take it and run with it from here, that's probably a great idea.
Well, is it split in the middle?
No, it's not split in the middle. It's across two screens beautifully.
Okay, well, if you guys can see it, then we'll move forward. So I'm sorry about that. I have no idea what's going on. Yeah, it must be something going on with GoTo. I've never seen that issue before. So
John and ladies and gentlemen in attendance, you know, our apologies. Something's got to be up with GoToWebinar right now. But John, please take it away. And just for argument's sake, you have a full hour, not 45, right?
Yep, got it. Okay.
Cool. If you run a few over, don't worry about it. I'm pretty sure our last presenter will be okay with it.
All righty. Well, guys, I appreciate it. Thank you so much for having me. So much for bearing with us there. I'm not sure what that was all about, but welcome. As you're already aware, my name is John Skelton with Apex Trader Funding, and wanted to talk to you a little bit today about trader funding. Let me just kind of pop up our disclosures here as usual. And trade involves risk. Make sure you know what you're doing before you do it. But let me ask you a question here. We've got quite a few people on here, and I did catch some of Marcus's presentation before this, talking about trader funding and some of his advice there. But how many of you here is everybody here familiar with what trader funding is? Is there anyone here that is not familiar with what trading funding is, or what trader funding is, or you've never heard of it, or you're not really sure about it? How many here are not familiar with trader funding, or have never been involved with one? I'm kind of just getting an idea, sense of the audience here. Most of you involved with trader funding, or how many are with Apex? Okay, quite a few saying, yep, Apex guy, Apex, okay. So most of you here are familiar with it, right? A couple of you are not familiar with it. So let me just run through, I'm gonna change up a little bit here what I'd planned to cover with you. Let me run through some basics here of setting the stage of what is trader funding, because there's a few people here that aren't really sure what it is. So let me set a little bit of foundation here, okay? So as a trader, let me set the foundation this way from the trader's standpoint to help you understand what trader funding is and what it's all about. As a trader, and guys, yeah, if you hold off till the end here, hold your questions. I'll answer most of them as I go along. But as a trader, how many of you have ever subscribed to like a trading newsletter or a day trading plan or auto trading systems? What about signals? Anybody here ever subscribed to signals, or been involved in a trading room where you're following a guru, right? Basically, as you're learning to trade and as you're growing as a trader, you're looking for somebody out there legitimate, right? Like that you can entrust your trading decisions to, right? That you can entrust your money to, somebody you can follow along, right? We've all been there and done that. We've all looked for that as a trader. And you'll go to some website and they'll have a spreadsheet up there showing all these historical stats, right? BN just said, hey, I've been burned with a lot of scammers by signals, right? BN, because you can go to some website, they tell you all these stats of, oh, I'm so great, but are they legit? I mean, you and I could sit here and make up whatever stats we want for a spreadsheet, right? Are they legit? Like, can you trust these people? Can you trust these signals? Can you trust your money to follow someone? But what if you could watch this person trade in front of you day after day in a demo account and see for yourself, right? Let them prove it that they can actually trade. And you could watch their trades. You can see how they trade day to day, see how they trade on different days, see how they trade in different market volatilities. And after you saw how they handled that and saw their results, you would then probably feel a lot more comfortable giving them your money, right? Or you feel a lot more comfortable using your own money to follow their trades if you could see it. Not just what they claim they've done in the past, but if you watched them for a couple of weeks trade day to day and you saw the results, you would feel better about that, right? About signing up to follow them or take their signals. That just makes sense, right? You'd be willing to follow them. You might be willing to do a profit split with them, right? Well, it's no different from a trader funding company, all right? Trader funding company is simply looking for talent, looking for someone that can trade, that they can get behind, allow them access to an account to trade, and do a profit split, okay? It's no different than how a trader looks at it. Does that make sense? Okay. So what is trader funding? And guys, hang tight. Don't run off to our website and start signing up for accounts, because I'm going to give you a discount code at the end here to save you some money. So hang tight on doing that. Someone asked earlier, can we trade regular stocks? Well, our funding that we offer is only for futures accounts. Okay. It's only for futures traders. And it's very simple. Prove that you can trade consistently and profitably without these massive losses or drawdowns like Marcus was talking about, and then qualify for a paid performance account. And we do a profit split of 90-10. The trader keeps 90%, The funding company keeps 10%. That's how a funding company makes money off of funded traders, okay? Now, why would a company do that? Why would a company want to fund traders? Well, it's no different than, like I said, you as a trader looking to follow someone, right? But from a funding company, you know, you've got a whole diverse army of traders out there, consistent traders bringing in consistent profits that can be split. You've got people trading different markets. Some people are trading indices, some are trading Forex futures, others are trading, you know, gold, metals. You've got diversity of systems. Some people say, well, hey, okay, as a funding company, you and your partners have this money. Why are you trying to give it out access to traders? Why don't you just trade it yourself, right? Well, there's a big difference of putting all of someone's money or a firm's money into one strategy, one system, one trader, one, you know, instrument, right? You've got a diverse, because with our funding, all you have to do is prove that you can qualify, and I'll show you how that works. You're not required to trade our strategy or our system or any particular strategy or system. You can trade your own, and that creates a basically a whole army of diversity out there. Different types of traders, traders that trade different times of day, different times of night. It spreads out risk, okay? And basically that's what a trader funding company is looking for. They're looking for talent. They're seeking out talent to get behind someone that can trade profitably, okay? So that's what it is. Now, why would you as a trader be interested in that? Why would you be interested in being with a company that would fund you? Why not just go trade on your own? Well, there's a lot of people that are interested in trading, or they're learning how to trade, or they think, hey, I've been trading a demo account, I've got a pretty good strategy or system, but I don't have enough funds to trade. I don't have enough money to go and open an account. Or some people might have an account, but they don't have a big enough account to trade the size that they want to trade. They want to trade more contracts. Other people are just nervous about it, nervous about risking their own savings, their retirement, their kids' college funds, especially in these market environments that we're in now, right? Random news, random volatility comes out, and it can literally blow your account. How many of you guys have ever been in a trade and the market just, bam, out of nowhere? You didn't know that news was coming, or some announcement came out, or, you know, back in the Trump days, Trump decided it's time to go tweet, right? And out of nowhere, boom, that market can go crazy against you, and instantly so much can be lost. And a lot of people are scared of that, right? Your hard-earned money, your savings, your retirement, risking that on the markets that could in an instant take such a huge hit. Or what about these days when the market is volatile and your broker doubles the margin, right? Then you can't trade, you know, you can only trade half the contracts that you could have before. You know, guys, think about the top traders you hear about, and, you know, these institutional traders and hedge fund traders. They don't trade their own money. They're trading someone else's money, right? It also creates a whole new mental outlook. Any of you that have been trading long enough, and I use this example a lot, right? Tell me if this was you. Remember when you first started trading, or you first got into trading or learning how to trade, right? And it consumed your life, didn't it? Nights, evenings, weekends, you had charts up in front of you, you were back testing everything, you were slapping another indicator on and another indicator on, and ooh, that looks good, that looks good. Oh man, I lost a couple. Well, I don't want to lose a couple. Let me go add a few more indicators. Everything was about finding that holy grail strategy, right? Or that holy grail indicator. Who's been there? Looking for that perfect thing that doesn't lose, right? Anybody been there, done that, especially in the beginning? Then you run across like these videos online about trading psychology and trading mentality. Did you want to watch those in the beginning? No, you know you didn't. You were like, I don't need that psychobabble. I'm better than that. I can do this. I don't need that. I just got to conquer and master this and figure out the secret sauce no one else has ever figured out. I don't need the psychobabble, right? You didn't want to spend any time watching that mentality crap. You wanted to go back to that chart, adding more and more to it, right? Well, now that you've traded for a while, now that you've blown a few accounts, now that you've realized you're your own worst enemy, how many of you now realize, hey, there's this whole other discipline mentality side of things? Anybody feel differently now? Yeah, you go through it, right? Well, can you understand how when you're not risking your own money, your own savings, your own retirement, your own home, your own all that, you're trading someone else's money. You're risking someone else's money, not yours. How that can really change and take away a lot of that fear, a lot of those bad decisions, a lot of that revenge trading. It's a whole huge edge that you have.
Mine are identical. I mean, just like we, when we did the.
I think somebody's not muted out there, but it can take away a huge edge, or it adds a huge edge, takes away a lot of obstacles and fear, and bad behaviors. So now, some of you, like we said before, are familiar with trader funding. Some of you aren't. Some of you have tried other companies. Let's just be honest here. How many of you have tried other funding companies and there were super tight rules that knocked you out, forced you to, fail the test? It basically felt impossible to ever pass the test, and you had a bad taste in your mouth. And you felt like the only reason they were there was to get the fees from you, to pay for the test, and to reset the test, and you really had no chance of ever getting anywhere. Not just because of your own issues or discipline or strategy, but because of their rules. Anybody been there, done that? Had a not so great experience somewhere? It felt that way? Look, Apex Trader Funding, we're not the only game in town. We're not the only ones out there offering trader funding, okay? And you need to know that up front. There's some other good companies out there. There's some other not so great companies out there, okay? So what I'd like to do is help educate you a little bit. Like, that gives you an idea of what trader funding is, okay? But there's a lot of companies out there that are set up where you literally have no chance of ever passing it due to all the rules, due to the fine print. They have these long, unrealistic goals, unrealistic rules to work around, and it's literally, there's no real funding involved. There's no payouts ever involved. It's literally just set up to make you take a test and fail, pay for another one and fail, pay for another one and fail, okay? That's what they're out there for. And you've got to be careful for that. And we're going to talk quite a bit about that. I want to talk just real quick here before we do that. I want you to take a step back and think about something. I want to talk to you a little bit about investing versus trading, okay? And what do I mean by that? And I'm not a financial advisor. I'm not telling you what you should or shouldn't do, but I want you to think about investing your money and savings. That's your money. That's your savings. That's your retirement. That's your hard-earned money. Think about investing that, okay? When it comes to trading, day trading can be risky, yeah? It can be volatile, yeah? It can be up and down. Invest your money. Hang on to your hard-earned money. Trade and risk someone else's money. I want you to think about that, especially in today's volatile markets and economic environment, all this banking stuff going on. It can be a little scary to trade. And when you're a little scared to trade, and you have limited funds of your own to trade, and all this weird news is coming out and it's messing with your head, do you think that's going to mess with you a little bit, being consistent in your strategy? Taking trades you shouldn't take, not taking trades you should have taken because you were hesitant, and that just snowballs, right? Are any of you experiencing that right now? Like just over the past few weeks in the market, where you're trading your own money, you may not have a whole lot to trade, and it's a little scary, right? A little hesitant. So keep that in mind and think about that, okay? So I want to talk to you a little bit about fees versus funding, okay? And what I want you to do is think about this. Like I said, we're not the only rodeo in town, okay? I want you to have the understanding to know what to look for out there. Which funding companies are good, which funding companies are not as good, okay? This is not going to be a whole sales pitch just about how Apex is the best on the planet. Do I think we are? Well, of course I do. But I want to help educate you for you to see for yourself and you to be able to know what to compare for yourself, right? So it's simply about this. With Apex, we're not just here to get fees from you. We have, and I think Marcus even talked about it before me. By the way, I don't know Marcus. I had no idea he was speaking before me or even going to speak about us. But Apex is the biggest funding company out there. We've paid out more money to traders than any other funding company out there. I'll show you in a minute where you can go and check all that out yourself. You can go see tons of testimonials. And I don't mean testimonials that we typed out on a website. Anybody could do that. I'm talking about on social media. I'm talking about video submissions direct from traders. Look, if you're a trader, let's just be smart here, drop all the BS and all the sales pitch stuff, right? You're a trader. You're thinking about getting funding. Do you want me to tell you how great I am and how great Apex is? Or do you want to hear it from hundreds of other traders just like you that were in your position, that tried other companies, that have been with Apex, have gotten funded, are getting payouts? That means more. Seeing that from other actual real traders should mean more to you than anything I could ever sit here and try to sell you on. Does everybody agree with that? Everybody understand that? Like, you want to hear it from the traders, not for some made up crap, testimonial on a website, okay? And I want to show you, I'll show you, you can go right to our YouTube channel and just see them over and over and over. Video submissions from interviews of traders talking about their journey and how they traded and how they got funded. And that's one of the first things I would say that you want to look for. Would you agree? Can you see that? Is what do other traders say about it? Are other traders being funded? Are other traders getting paid out? Okay. So Apex has some of the easiest rules out there compared to all the other trading companies. It's one of the reasons we're the biggest. It's one of the reasons that most traders come to us, because it's the easiest rules to get funded. It's the highest probability of chance to get funded, okay? We're looking to fund profitable and consistent traders for a profit split. We're looking for a long-term relationship versus just a short-term quick relationship to get some fees out of you to pay for a test, okay? And like I said, hear it from other traders that have had these payouts, that have had success, that have been funded. You can go straight to our website. I'm gonna pull it up here and hope I can get it on the screen, since we're having this screen issue here. So let me just pop this up here. I just want to show you where you can get some more information from. Okay, you go over to our website, apextraderfunding.com. Can everybody see? Can everybody see my screen here? Can everybody see the website I just pulled up?
Absolutely.
Okay. All right, perfect. Candy says, Candy MM, Apex funded, got my payout today. Oh, awesome. Great. Those are supposed to come by the end of the month, which is tomorrow. You got it a day early. Congratulations on that payout there. So, yeah, if you go to our website, apextraderfunding.com, I'll walk you through some of this here in just a minute. But I just want you to go right here to testimonials, okay? And you can scroll down through here, watch some videos, see some posts from, social media. This is a great video right here from Vince. Many of you have seen this. We paid out Vince over $1 million last year. And Vince goes through talking about his journey, talking about some of his struggles, talking about what he learned, how he fixed it, how he changed his trading. Sergio Santos got my payout yesterday. Awesome. Congrats, Sergio. But you can right here see a list of payouts. You can check us out on Trustpilot. Right here, YouTube channel. Check this out. Just go here to our YouTube channel and it's everywhere. Right here. These are videos from traders. These are interviews with traders. Jessica got funded. He got a payout. Over and over and over again. Traders submit these themselves. There's some trading interviews in here where one of our guys, Gates Adams, talks to funded traders that have been funded, had payout with us. Hey, tell us your story, share it with other traders. What were your struggles? How'd you get there? On and on and on and on, okay? Anyone can tell you, any company can make up anything they want to tell you and put it on a website, right? You're a trader, you're looking for funding, hear it from other traders. Where are they going? Where are they getting this funding from? Where are they getting the payouts from? This keeps going and going and going. It's one of the first things I want to tell you to look for. I mean, that's just kind of common sense, right? Hear it from other traders like you. Go check that out, guys. Check that out for yourself and take a look at that, okay? But what you also want to do is look at the rules, okay? What are the rules for getting funded? So how does this work? How does this actually work, this whole funding thing? All right, well, you start off with an evaluation account, all right? That's where we evaluate you. Can you trade? Can you get an evaluation account? Can you meet a profit goal, meaning can you make X amount of dollars without losing X amount of dollars? Okay, simple enough, right? Let's just be real here for a minute. Let's say that you yourself had an extra $100,000 sitting in your bank and you wanted to invest it. And you said, hey, I want to use this 100 grand to fund a trader, someone that can actually trade. I'm going to give them access to the 100 grand. They're going to trade it and we're going to do a profit split. Everybody with me? Well, if I come to you and say, I'm just going to pick a name here, Stephen Milan. If I come to you, Stephen, and say, oh, I can trade. I'm a good trader. Are you going to say, okay, cool, John, here's 100 grand. Go trade it? Probably not, right? You don't know me from Adam. You have no idea whether I could trade or not. But if I come to you and say, hey, I'm interested in this, Stephen, and Stephen says, okay, cool. Let's open a demo account. Let's have you trade for a couple of weeks. Can you make, just for number's sake, can you make $5,000 without losing $4,000? And can you do it over 10 days? Or if he just says that, can you make $5,000? Prove that to me. I say, okay, cool. I run home and I call Stephen in an hour and say, Stephen, I made 5 grand. Give me the 100,000. Is he going to do it? Well, of course not. Because I went home and made 5 grand in an hour. Maybe I lucked out, right? Maybe I happened to press buy. My kid can do that. It's 50-50, right? That means nothing. But if Stephen says, okay, here's what we want you to do. We're going to set a goal. Can you hit this profit goal without hitting the max drawdown? Meaning, can you make X amount without losing X amount?
I'm at, I think it's 25 ticks.
Okay.
And then I think the other two at
And,
50 ticks.
You know,
So
don't give out the password to someone else. If I'm going to fund you, I want you to be trading it. And I want you to trade for 7 days minimum. Why do you think Stephen might want me to trade for 7 individual separate days? Because anyone could go luck out and happen to make X amount in one trade, right? That doesn't mean anything, does it? But if Stephen can see me trade over 7 different distinct individual trading days with different market environments, see how I react to that, how I respond to that, that I'm consistent, he's going to feel a lot better about giving me access to his live money, right? Does that make sense? Does that sound fair? Right? Okay, let's try it out. Here's a demo account. Can you meet this profit goal without meeting this loss? And you trade it. Don't let someone else do it. Trade for like 7 days. Follow a code of conduct, like be professional. And that's it. That is the rules of the evaluation account. That is how you pass an evaluation test to be able to move over to a paid performance account with a profit split. Do any of those rules listed right there on the screen sound unreasonable? Do they sound like they're just out to get you, just to get another fee? Anybody have any issue with those rules listed right there? If you do, tell me. There's a lot of other companies that have a whole long list of rules, okay, that literally make it impossible for you to ever pass, okay? Now, so Dennis said 7 days to make 5K. That was just an example there, Dennis. Let me just show you here. I'm going to pull up our website again, okay? Let's see here. Can everybody see that now? I'm worried about my screen. If you pull up our website and you scroll down here, you can check out these videos here, a lot of information, some more information here. Now, when you get down right here, this shows you the different evaluation packages that we have, okay? We've got anywhere from a $25,000 account up to a $300,000 account and everything in between, okay? Oh, Dennis is saying, hey, it may take you longer than 7 days because the market might not give that to you. Absolutely. You don't have to pass this in 7 days. Let me clarify that. You could take 7 months if you want, 7 weeks if you want. It's just when you come back and say, hey, I hit the profit goal. We just want to see that that profit goal was hit along with 7 different individual trading days, not just in one quick afternoon lucked out. Does that make sense? You can trade as long as you need to hit the profit goal. We just want to see at least 7 individual trading days, okay? But again, accounts anywhere from 25,000 up to 300,000 and everything in between. I know Marcus talked a little bit about some of this. He talked a little bit about the 50K account, which is our most popular account. How do you pass this one right here? What does all this mean? Well, for example, on this 50K account, you can trade up to 10 micro contracts, mini contracts, I'm sorry, or 100 micros, okay? Same thing, right? How do you pass it? The profit goal is $3,000, to make $3,000 and not hit the trailing threshold of $2,500. We'll talk about that. There's no daily drawdowns or scaling on these plans, okay? So literally, that's what this means, okay? On this particular size account here, can you make $3,000, trading at least 7 days, you pass the test, okay? That's it. Now, let's talk a little bit about something here. Is there any questions so far about what I'm showing you here? Does everybody understand these right here? So let's say you signed up for one of these $50,000 test accounts. You traded for more than 7 days. You reached the profit goal. Okay, at that point is when this evaluation account converts into what we call a PA account, or a paid performance account. And that's the account that you get paid out of. That's the account we do the 90-10 split out of. Okay, it's that simple. This particular account right here is at $167 a month for the evaluation account. Okay, once you pass the evaluation account, some people don't even ever need it the next month. For example, you sign up today, it's on an auto bill every 30 days. But if you pass the test before that 30 days, then you don't have another bill. It converts over to the funded account. The funded account is $85 a month to cover the fees. Okay. Now, maybe it takes some people a few months to do it. That's fine. All right. And I'm going to let the cat out of the bag here right now. At the end of this webinar, I'm going to give you an 80% off coupon. Okay. That makes this account like $34 to take the test. Okay. But you can't go sign up right now because I haven't given you the coupon yet. So pay attention. Okay. Danu says, what if you make 1K per day? Is that too much? No, it's not too much. Let's say you sign up for this evaluation account, and let's say you make the $3,000 in the first day. That's fine, but you still have to trade 6 more trading days. There has to be 7 traded days along with hitting this profit goal to pass the test. Does that make sense, Danu? Why would we put that rule in there? Because you might go out and you might sign up for this, and within an hour you've made $3,000. But then what happens tomorrow? Do you lose $3,000? And the next day you lose $3,000? 7 days is just some consistency. There are some companies out there that make you trade for months. They make you go through and pass an evaluation account under a certain set of rules. Then you got to take a step 2 evaluation account under a different set of rules. And maybe in a few months, you might pass. Why do you think they do that? Why do you think they drag it out as long as they can to get you into a funded account? And if you happen to get through the obstacle course number 1, they're going to throw you into obstacle course number 2 with a different set of rules for the obstacles. They say it's, well, we got to see if you can handle this. We're going to mix it up a little bit. We're going to make sure you can handle these different set of rules and work around it. That sounds good. And there's some valid points to that. But yeah, y'all all just said it, right? Luis, John, failure rate. So you can fail over and over again. Yes, the harder you make it, the longer you drag it out, the more likely you're going to have one bad day and fail the account. And then have to do what? Start all over again and pay again. Okay? And yes, if you fail the account, are you screwed? Are you out? No. You can go in, like let's say you sign up for this account and in a couple of days you failed it. You hit the trailing drawdown. You can go in, pay an $80 fee, reset the account and start back over. Okay? That is available for you. Okay? But that's available for you as a benefit. You got to be careful because other companies that have these ridiculous rules, it's there because what? Because they want you to fail and pay a reset fee today and then fail again tomorrow and pay a reset fee tomorrow and tomorrow and tomorrow and tomorrow. You see the difference here? The more rules I put on you, the harder it is for you to pass. More likely it is that you're going to have to pay me more and more and more money. Do you understand what I'm saying now of fees versus funding? There's a difference. Fees versus funding. And it's all about this right here. What are the rules? How hard do we make it for you to make it? Understand? It's this simple. Here's the transparency test, guys. Okay, like I said, I'm not trying to give you a big sales pitch here. I'm trying to educate you a little bit. So I apologize if I'm going on and on, but I hope you guys can at least appreciate the education side of it. It goes back to the example I said earlier, okay? If you have $100,000 in your account, in your bank account, and you're gonna fund another trader, what rules would you put on your money? What rules would you put to protect your money, to protect the profits, to protect the partnership? If you see a company, if you see a funding company out there that has a rule that doesn't make sense to you, meaning that you wouldn't put on your own money, then there's a problem. If you see a company that has a rule that's like, that rule actually would hurt a trader, why is it there? Ding, ding, ding. You got it? That's it. That's how you figure out who's good, who's bad, okay? These are our rules. This is how you pass an evaluation account. This is how you move into a funded account and start getting a profit split. There's no fine print or complicated rules making it hard. It's very simple. We don't need to put somebody through the ringer. What we need to know is, are you a disciplined, consistent trader that has a consistent day-to-day strategy that you can trade and follow through? Can you be a consistently profitable trader, stay within certain guidelines? It's that simple. Either you can or you can't. All the extra rules aren't needed, okay? That's it. So that's literally the process. You can qualify in as little as 7 days. Some of these other companies want you to go through months and months. We offer a one-step evaluation plan, not multiples like all these others, okay? So that's it. Like, that's how it works. You go to the website, you sign up for an account, and you get started, okay? Dennis just asked, once we get funded, are there any more fees? Okay, well, whatever size evaluation account you choose here has a different price on it, as you see, okay? The bigger the account, the higher the price. Again, this is for an evaluation account. As soon as you pass this evaluation, then you're no longer paying for this evaluation account. Once you pass it, you then move to right here, what's called a paid or funded account, okay? The fee for that is $85 a month, or we have some one-time option fees like $150 lifetime, all right? That fee is there to cover the monthly data feed and the Rhythmic Trader, okay? That's it. Those are your fees. There's no other hidden fees here, guys. By the way, we've got two different accounts. We've got accounts through, that provide data through Rhythmic. We have accounts that provide data through Tradevate, depending on what platform you want to trade on. But for example, if you sign up for this $50,000 account here through Rhythmic, you get the Rhythmic license key that gives you the data feed. You get a free license key to NinjaTrader. There's nothing else you need. There's no other fees or hidden fees. It gives you everything you need, okay? So let me just look at a couple of these questions here real quick. So for those of you that weren't familiar with trader funding, does that help you understand what it's all about? It's very simple. A true trader funding company is looking for traders that can trade, that they can get behind and do a profit split. Trader gets 90%, the company gets 10%. Why would a trader want to give up 10%? Well, we kind of went through all that. You're not risking your own funds, you're risking someone else's funds. You have a lot more to trade. That's it. Like that's really it. That's what it's all about. Okay. From there, if that's something you're interested in, again, make sure when you're comparing these different companies that you go with a company that has an easy, simple, clear path to getting funded. Make sure the rules make sense. and check their reputation. Just like I showed you there. Go to Trustpilot, go to Google, go to YouTube, watch the videos yourself from other traders. Okay. Yeah, currently we are just a futures trading. Currently we only provide funding for futures. Some of you are asking, hey, in the future, you know, later on we'll be able to do stocks, we'll be able to do this. We're looking into it, considering it. You know, when you get into equity options or stocks, you got a whole other world of things to deal with, such as certain licensing, but also some of the day trading margin rules. Okay, so currently right now we just do futures. Okay, let me just take a quick look at a couple of these questions here. I think we kind of helped establish there what is trader funding. Let's see here. Apex has the fastest quality, fastest payout twice a month. Yep, we do pay out twice a month. Fewest rules. Yep, thank you, Lewis. Can I take 3 months to make 3,000? Yes, absolutely. You can take as long as you want or as long as you need to meet this profit goal. Okay. You just have to have at least traded for 7 days. Okay. Let's see here. Pete says, do we need to provide an invoice as self-employed? No, any payouts to, so the account, all the accounts are owned by Apex, right? It's our money, it's our account. Any payouts to the trader is paid out as 1099 income, okay? Let's see here. Apex has that. So, okay, so somebody asks, what is the sweet spot in here? What is the best account? Okay, Marcus touched on this a little bit, comparing some of the profit goal requirements to the threshold, okay? Meaning, and we'll talk about the threshold, of, hey, you know, to pass this, I have to make X amount without losing X amount, okay? So which account do you choose, right? That's part of your question, right? You've got 50K account, 100K account. I mean, on this 50K account, you can do 10 contracts. Up here on this 300K account, you can do 35 contracts. That's a big difference, right? And on the 300K account, though, you got to make $20,000 to pass. Up here, you only got to make $3,000 to pass. So that's a pretty big difference, right? But on this account, your max trailing loss is 2,500. Up here, it's 7,500, right? So it's as simple as this. And this is where so many people go wrong, okay? It's called the wrong tool for the wrong job, right? A Lamborghini is not doing me any good in 5 o'clock traffic in LA, is it? Can't build a house just with a screwdriver, right? Right tool for the right job. So, ooh, I got to make $20,000. I don't want that one. Ooh, this one is a lot cheaper. I just want that one. Do not choose an account because of the price, especially when I'm going to give you 80% off. Do not choose the account because, oh man, 50K, but ooh, that seems cool. 300K account, I want that. That seems cool. You don't pick an account on that. Okay, this one you only got to make $9,000. This one you got to make 20. Ooh, I want to do it quick. I want to pass quicker. I don't want this one. Who cares if it takes you a little extra time? The number that you need to worry about is this number right here. The trailing threshold, meaning that your maximum loss, okay? Your maximum loss. So, anybody here a scalper? And when I say scalper, I'm like, you risk 20 ticks to make 20 ticks. Like a scalper. If you're risking 20 ticks at a time, you're risking $100, and you've got a $2,500 drawdown, that'll get you through a lot of trades, won't it? Right? So if you're a scalper, your particular strategy or system doesn't have a huge loss per trade, then you might be okay with this account that allows a $1,500 trailing threshold, or this one with a $2,500. Does that make sense? And if you're a scalper doing small trades at a time, then you might not want to deal with an account that you got to make 20 grand to pass it. That might not be the best fit, right? But what if your trading strategy is you like to focus on the high and low of the days, and you like to get in when, you know, when the market's way up here, and you want to put a stop loss way up there, and you want to be able to ride the trend, and you want to be able to ride the big day. And what can happen when you try to ride those big days? You can have the market come way back against you a lot, right? Everybody agree that can happen? If that's your trading strategy, where you need a big amount of room for market fluctuation, is this the account for you? Especially if you want to do multiple contracts? No, those probably aren't the right accounts for you. You probably want an account that's got a bigger trailing loss threshold. Does that make sense? So many people go for, oh, well, the 50K seems cool and it's cheaper, I'll just do that. But they have this crazy strategy and they want to use a lot of contracts on these strategies that need big stops. And then what do you think happens? They hit their drawdown, start over. They hit their drawdown, start over. They hit their drawdown, start over. Okay, does that make sense? That's how you choose the account. You don't choose it because of a number or price. You choose it based on what your strategy is. You have to choose the right tools for the right job. Make sense? Okay. And I know I'm running out of time here, so let me kind of move forward here. I'm going to try to get your questions answered, and I'm going to show you where to get them all answered from. Okay, so that's how it works. You pick the evaluation account that you want, you sign up, you immediately get your username and password sent to you. You can start trading right away. Everything's included there, all the data fees, everything. Okay, what platforms we work on? We work on a ton of different platforms. NinjaTrader is our preferred platform and the one we provide support on and provide a free license key for, but you can use this on multiple different platforms. Like I said, once you sign up, you can start trading. You have a minimum of 7 trading days. Doesn't have to be, you know, consecutive. You can take as long as you want. Once you hit your profit target, you've passed the evaluation, you move to the funded account, okay? Again, if you fail the evaluation, you can reset it. What are the payouts? We actually pay out 100% of the first $25,000 that's paid out to the trader. Then after that, we do a 90% split. 90% to the trader, 10% to us, okay? There's 2 payout times per month. And if you go to our website, because we got very limited time here, I'm going to show you a couple things. If you go to our website, and everything you could possibly want to know is in here, guys. Every question that you have. If you'll go to the site, check out these videos, but just go right here to this FAQ, okay? How do the payouts work? Literally type in payout, boom, how do the payouts work? I literally make a video for you right here, and I walk you through exactly how the payouts work. I have it written out as well, how the payouts work, the percentages, the days you request the payout, when they're paid out, exactly how to request the payout. Every single thing is in here. Minimum account, everything you could possibly want to know about how the payouts work is right there, okay? It's all right here. Some of you are asking about, hey, what does this mean, this trailing threshold stop? How does that work? How does the trailing stop work? Right there. Type in trailing, pops up. How does trailing stop work? I literally go through it right here for you. And there's a video about it. Actually, there's more than one area. Right here, I walk through and I explain how the threshold works. I give you examples of how it works. I give you another example of how it works. And then I made a video about it. And in the video, I show you on a PowerPoint how it works. Then I do it again differently on a spreadsheet. Then I show you with live trading. It's very, very clear here exactly how the trailing stop works. You have our trader right in front of you that always shows you live to the minute, to the dollar, exactly where you are and how much room you have to your trailing stop. It's never a question. It's never hidden. It's never a mystery. It's right in front of you. Okay. Everything is right in front of you there. Very clear. Okay. Anything else you could possibly want to know is literally all right here in this FAQ. Okay. Anything from taxes to payouts to how the threshold works. Let's see here. Just looking at a couple of these quick questions here. With the multiple accounts, yes. So if you are on our website right here and you go right here to tools, okay, you click tools, very first thing right here is trade copier. Click it, you watch a quick video, it'll show you exactly how the trade copier works. Basically, let's say you have 10 different accounts, okay? All you have to do is have one chart up in front of you on one account, and you trade that account, and it copies what you trade on that account into your other 9 accounts. That's it. You're not jumping back and forth between 10 charts and 10 entries. And that is how you can use that to duplicate your efforts and to spread out your risk as well. Okay, so that is all right there. Again, guys, go through here, check this out, look over the different size evaluation accounts, compare the drawdown to your strategy to find out how much room you need to give yourself. Okay, but everything is all on here. Everything you could possibly need to know. Like I said, we've got limited time here. I showed you right there where to find information about the drawdown. Talked a lot about how we're different. We have some of the highest payouts in the industry, the easiest rules in the industry. We allow multiple accounts, which a lot don't. You know, we provide the free Ninja Trader key. You can trade on holidays. What instruments can you trade? We've got all the different equity futures, the interest rate futures, energy, ags, and everything. Okay. Multiple accounts. Just showed you there where you can watch the video on the trade copier to learn how to trade multiple accounts and learn why you would want to. Okay. So for today's special offer, I definitely appreciate you know, Rob and the guys having me on here today. I appreciate you guys being on here. I hope this was, you know, like I said, this wasn't meant to be a big long sales pitch for you. Wanted to make sure that you understand what trader funding is about and how it works. Each company has different rules. Okay, so I just want to clarify that with you. Make sure and compare the rules. You know, a couple of Apex's rules. I appreciated everything that Marcus had to say earlier about Apex. I fully back him when it comes to him talking about risk management, taking it slower. Don't overtrade. Don't do too many contracts. That is the killer. That's what makes you hit your stop when you're in too deep. I back him 100% on that. Okay. You also saw in Marcus's presentation that he talked about a few other trading companies that are out there, and he trades with different ones. We all have a little bit different rules. You know, for example, at Apex, we don't allow fully automated trading strategies. Okay, meaning we don't allow auto bots that just, you know, set and go and walk away. We don't mind if traders are using like semi-auto strategies, meaning they've got software that helps them enter trades quickly and look for trades, but we want our traders, they're trading our money. We want them there, live, in person, managing those trades, managing the software they're using to help them enter those trades, seeing if it should be going long or should be going short. We do not allow fully automated strategies, okay? Other companies may or may not do that. We don't, just throwing that out there. The other thing that, you know, we don't allow, which some companies might, is, you know, something Marcus mentioned, even though I fully back him on his risk management, he was talking to you about, you know, as far as, oh, get 10 accounts and just go 5 long and 5 short. We don't allow that. We don't allow that at all. Because why? Well, a couple things. For one, is that really showing us disciplined, consistent strategy? Or is that, could be right, could be wrong? Right? Or let me ask you this, back to my example. You got 100 grand in your bank account. You're gonna give it to a trader. Trader says, hey, can we split that up into 10 accounts? Sure. And what do they do on day one? Half long, half short. What does that mean? That means they're purposely, willingly, intentionally planning to what? Lose half your money. That's not what we're looking for. I don't think you would either, right? So just keep that in mind. But special offer, appreciate you guys being here today. Go to our website, choose your evaluation account and sign up. And during checkout, there is a section for a coupon code. Use coupon code CORNER80. That will give you 80% off of your first month and any recurring months, okay? If you need it longer than a month, no problem. Guys, again, what does that mean? On that $50,000 evaluation account, it's like 34 bucks. Try it out, okay? So this is just for you guys here on the webinar. Coupon code CORNER80 for 80% off. And we just finished up a big sale at Apex, so you guys are the only ones around here getting this 80% off. You use it for up to 10 accounts, and I'll leave the coupon at 80% off. It'll be good now until Monday, April 3rd at 11:59 p.m. So take advantage of that. Hop on and use that. Guys, hop on over to the website, check out the videos, go into the FAQ. Any question you would have is answered in there. If there's any questions that aren't, feel free to go to the top, submit a help desk ticket. We're more than happy to answer any questions that we can. I'm sorry we couldn't get to more here. We had limited time. There's so many things we could have kept going over and over. You know, I hope this helped you understand a little more what trader funding's about, what you want to look for, what you want and don't want. So guys, thank you so much for the time. Sorry about the screen issues here. Thank you for having me. Rob, guys, Traders Corner, Marie, thank you everyone for having me on here again.
John, thank you for being here. Apologize about the screen issue, but I think we worked through it pretty well. We love having you on Traders Corner. John, you'd be amazed at how many of our members have joined Apex and went on to trade funded accounts with your simple one-step evaluation process. It's absolutely turned their trading results around completely. It proves that there's a psychological difference when our own money's not at risk, and it releases all of those bad trading habits and allows us to enjoy trading and get the results we always knew we could achieve. I also want to thank you on behalf of the trading community for providing a pathway for so many traders who couldn't otherwise afford to trade without someone else's funding. We've had so many requests to have you on the show. We love having you on it. We hope you come back and see us again. Ladies and gentlemen, Mr. John Skelton of Apex Trader Funding. We love him.
Too kind. Thank you so much, guys. Have a great one and happy trading.
Hey, have a great end of your week and a great everything too, sir.
Thank you.
Oh, John, would you also put a link, or I know I can put the coupon code, but I don't know if there's a URL that'll bring somebody directly there with the coupon code, everything. I was kind of expecting you to put it in the chat box. I noticed you didn't.
I can give me a second, I can do that.
All right. No problem. Put it
okay.
in, but it's just gonna pop up while the next presenter is going.
Okay. Yeah, I'll post them both in there here in just a sec.
All right. Well, it's been an information-packed event, and we're down to our last presenter of the day. He is a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, and provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. I know I've heard Mark call his name a few times. Here to present Auto Trading, powered by next-gen artificial intelligence, is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Hey, thank you, Rob. I really appreciate that kind introduction. I just want to, yes.
No, it's absolutely called for.
Thank you. I appreciate that. I'm humbled by it. What a great presentation you guys put on today. Really amazing information, extremely talented professionals that were on the panel today. So my hat's off to Traders Corner. Great event.
Thank you so much, Rory. We appreciate your approval on our production.
And I just want to confirm that my audio and my video, everything looks good.
None of it. I can't see your screen or hear you, I swear. No, they're obviously both working.
Okay, great. Wonderful. So I'll go ahead and get started. And listen, I have to agree. John Skelton over at Apex Trader Funding, these guys really changed the game. They put people into the game that otherwise, wouldn't be able to have a shot. Trading used to be only for the rich people. And John has really created a pathway, and these other prop firms for everybody to get into the game and provide a pathway to financial freedom, really. So I really love the event, and John did a great presentation. I'm going to follow up. He's a tough act to follow, but I've got some great information for you today. We have a system over at Right Line Trading that we've just released, just developed. It's called the AI Auto Trader, and it's based on mathematical modeling, and we combine it with some artificial intelligence. You're definitely going to want to stick around and see this. We've got a huge audience out there. I see 600 or 700 out there. Stick around to the end. I'm going to give you some great information. So let's go ahead. We'll get started. First, I just want to keep everything on the upper level. Legally, we do have to put up the mandatory disclaimer. We are not financial advisors. We do suggest that you consult with a financial advisor prior to making any trading decisions. You can lose your entire account, and you can even lose more than what's in your account. So just take a second, read over the disclaimer so you're fully aware of the risk that is associated with trading. Okay, great. First, I just wanted to introduce the Right Line Trading team that I'm a proud member of. Our vision at Right Line Trading is to develop innovative trading strategies that predict the future direction of price. That's what it's all about. The way we leverage that information can be used in a number of ways. And our staff is packed with professionals that leverage that information in a variety of ways in the financial markets. We have our prop trader, who is Mr. David Kushner, who is at the top right, has his own live trading room, meets every morning at 8 o'clock Eastern, and he leverages our software and trades the futures instruments. He also trades several prop accounts. On the bottom right, we have David Wyse, who also has our options live trading room. And knowing the future direction of price, he knows how to place options positions, whether it be calls or puts or spreads, that are going to minimize risk and maximize the reward on the positions that he calls out. We also have our Mr. Craig Emery, who's recently taken the place of Mark Sachs. Craig meets every morning at 9:30, and his expertise is trading the NASDAQ and the E-mini. Myself and Sergio are pictured here, and along with the leader of our team, who's Mr. Mark Miller. I've had the Mark Sachs, I just want to bring everybody up to date, recently sold the company. He's retired. He left us an amazing foundation to build on. And the team is now headed by Mr. Mark Miller, who's a military veteran. And he brings to the table an amazing amount of expertise and professionalism. You know, our mission is to build a community of traders that collaborate with one another on their trading journey, all with transparency and integrity. And I could say 100% that Mark Miller brings transparency and integrity. I've had the pleasure of getting to know him very well over these last few months, and he's headed the team at Right Line Trading. So we've got really a great future. Now, what brings us here today is we all have experienced problems being consistent, making money with our trading. And myself, I'm no different. You know, I happen to love traders. I feel the most comfortable talking to traders. In fact, over the last 10 years, I've probably spent 6, if not 7 days a week trading and talking to traders. And I feel like you guys are my family. So we all kind of share the same issues that we struggle with. And you know, I kind of love an underdog, and I think that's why I love trading so much, because the odds are stacked against us. You know, we deal with the emotions that go along with trading. We'll overtrade, we revenge trade, we make impulsive decisions because we have to. I mean, if you trade the NASDAQ, listen, that market flies, and you've got to make instant decisions on when to get in and when to get out with your hard-earned money at stake. So being consistently consistent, you know, especially if you don't have the proper tool set. I heard just about every one of the presenters today talk about having the correct tools. And listen, I've bought 100 different indicators that just didn't work. It wasn't my fault. You know, not everything out there is going to be something that provides you with consistency. And all of these things together combine to blowing out our trading accounts. And I tell you, I've blown a couple out myself, and I've talked to many other traders that have blown out their accounts, and you know, it's no fun. You know, it's I quit drinking a long time ago, but if I still drank, you know, after you blow out your account, you're ready for a good stiff drink. But however, today it is my commitment to you to bring this to an end. And the exciting part of this is that I have a solution, and I'm going to share that solution with you. As software developers, being able to predict what's going to happen regarding the future direction of price is really our mandate. That's our mandate. When you're at the right edge of the chart and you're seeing all the static and then of the candlesticks going up and down and not knowing where it's going to go in the next 10 seconds, it leaves a big question mark of uncertainty. And that's what we want to that's what we want to provide you with, a tool that's going to give you some certainty and some consistency and take away a lot of that stress and mental anguish. So there's two things that are going to create this type of trading success. Number one, we want to have the proper tool set. You're not going to be a carpenter going to the job site, you know, without your hammer and your screwdriver and your toolbox. As a trader, we want the best tools to get us into the trades at the absolute perfect time. We want to get in and we want to get out to maximize our rewards and minimize our risk. Number two, we need a software that can automatically get you in and out of the trades to maximize your profits. And we have some tools that'll help you do that. We have we call it's a self-directed auto trading system. It happens to be the most advanced auto trader that has ever been created. And the reason I could say that is I'm going to show you in just a few minutes the incredible equity curves that this system can produce. A great feature of this strategy is that it's completely back testable. So it gives you the ability to optimize. Our professionals on right line trading will optimize the templates for you and provide you with the training to optimize the templates yourselves. Our secret sauce is our powerful proprietary indicators. And I'm going to go into the main indicators that drive this engine that give you the ability to clearly see the future direction of price. Now, it's not a perfect system. No system is perfect. However, we can strive for perfection. We may never get there, but we're going to get as close to perfect as possible. So the optimization process is always something that's in motion. Now, another point that makes this one of the most advanced systems is the automated entry and exit trade management. What we have is a proprietary momentum-based trailing stop. And what it does is it reduces the risk on every trade and it maximizes your profits. When the momentum of the trade, when you're in a trade and it's in a long signal, long entry, when momentum wanes and it's kind of reached its pinnacle, once momentum shifts, the system will automatically take you out of the trade. So it definitely minimizes your risk. And what I like the most about it for myself personally is it maximizes the profits. I mean, how many times I've been in a trade that I'm up $200 or $300 and I'm really excited and I want to get my money out. I want to get out of the market with a winner under my belt, only to see it continue up and 3, 4, 5, $1,000 more dollars. And, it quite literally, it makes you want to get sick. So the benefits of using this AI auto trader is there's no more overthinking or hesitating on a perfect trade setup. We have the stops and the profit targets. They're all predetermined. When the system triggers a trade, all the conditions were met. It puts you into the trade with everything in place. So you're not going to cut your winners short and you're not going to mismanage your trades or overtrade. So I want to just take a few minutes. I don't want to take too much time, and I'm going to go right to the live charts and right to the performance. And I think, that's always what's made the most sense to me is seeing it in real time and seeing the numbers. That really tells the whole story. So our secret sauce, what triggers a trade, is number one, we leverage our indicator, which is called the market internals. The market internals looks for a disparity in uptick versus downtick. If there's a large disparity of uptick or downtick, it also looks at some declining ratios. It's going to give us that signal to go long or short. Now, we also need a second ingredient in our secret sauce. We call it our background bias, which is a multi-time frame assessment of trend. We want our higher time frames to be synced in the same direction that we're ready to enter a trade. And we've already briefly discussed our trade management tool that minimizes your risk and maximizes your reward. So everything is done automatically. which really eliminates human error and human emotion. Now, what I'm showing here on this slide is very important. The strategy that we use, that we're running I'm sorry, the bar type that we use in our strategy is we've recently changed to a minute bar. We use a 1 minute or a 2 minute. And there's a good reason for that. The reason being is NinjaTrader has a very powerful tool. The tool is called the Strategy Analyzer. And not to get off track, but while we're talking about NinjaTrader, they just did that update. And just when we started learning the platform, they kind of threw us a curveball and switched everything up. Some good things, though, don't get me wrong. You know, I had to pay, I think it was about $1,100 for that lifetime license of Ninja. And, you know, it hurts for a second, but in the long run, it was worth it. But right now, NinjaTrader's no longer charging that large upfront fee to trade their platform with all of the benefits and features that they offer. Some of those benefits and features that in the past we had to pay extra for were the ATM strategies, the chart trader, being able to run strategies. All of that required that additional fee to utilize and take advantage of those benefits, those features. However, that's not the case today. Today, you can get right in, open an account, and for free, you're going to have full use of these powerful tools that NinjaTrader provides to futures traders. So what I'm showing you here on this slide is we have on the right the back-tested trades, and on the left, we have the live account trades. And we actually did a pretty in-depth analysis of the accuracy of this. And it's probably about 98%. There's certain entries that you'll see here that give you about a tick of slippage that are off on the minute bars, where some other bar types that we've used in the past, it prevented us from taking advantage of these great benefits that come with NinjaTrader. So with that being said, what I'd like to show you is first I want to show you our trading chart that the system leverages. And I'm also going to show you the parameters of the strategy. And we'll put them side by side because I'd like to go over them just so you could see the way the system works. And I'm going to bring up my strategy analyzer. This is a tool within NinjaTrader 8 that gives you the ability to optimize your strategies. And whether you're trading a live account, a funded account, it makes no difference, okay? It's going to work the same. So with the strategy analyzer on my control center, I would have went to new and then looked for the strategy analyzer and selected that, and then it pops up. So what I'm going to do is I'm going to put in the back test, and I loaded the strategy that we're discussing today, which is our AI auto trader. And we always want to calculate historical data. And I've loaded my template in here that has all of the inputs already pre-formatted. So when you order the AI auto trader, it comes with 4 templates, 2 on 1 minute and 2 on 2 minute that you can run right now on either the NASDAQ or the Russell. And the reason why they're performing so well and why our traders are having so much success right now is due to this tool right here. It's given us the ability to optimize our inputs. So the conditions of the strategy, let's first go over the global parameters. The global parameters are going to be kind of the inputs of our indicators. We talked about our background bias. It looks at a higher time frame. In this case, it's going to be a 21 range. Mark Sachs was, you know, his master's degree was in mathematics. So these numbers you'll see are all based on Fibonacci numbers. The volume zone input, we keep that kind of right around our chart speed, and we have a sensitivity of 150. These are our areas, the volume zones are our areas of support or resistance. Market structure is a huge component of our trading methodology. We respect market structure. We only take long trades when the 15 and the 50 are green and prices above the 15 and the 50. And we only take short trades vice versa when the 50 and 15 are red. So these are our inputs of our moving averages. The moving average is actually an EMA of an EMA. I don't want to get too in depth with the minutia, but those are the inputs that work the best. We also respect our pivots. So our trigger is the market internals. That's our entry. The C2 input is a multi-time frame assessment, also of trend, that the system looks at. And we have our MI, our market internals input. And we've kind of sped that up a little bit on this strategy. Usually we put it right around the same speed as our bias, but in this case we sped it up because we want to be able to get into these trades early in the move. So we've sped up our MI input. The MI threshold, the market internals looks at all 5 cash market. Our MI threshold allows us to input the number of these we need in alignment in order to meet that condition for the trade to trigger. So in this case, we found that having 3 in there is really sufficient and provided us with the best results. So a really nice feature of this strategy is we can put our profit and our loss target in. If you have a problem with over trading, once this strategy loses $400, it will shut off and stop trading. If you have a funded account or a prop account that's imposed some rules that regarding drawdowns, you can always govern your drawdown using that loss target. Our profit target, we like to do a 2-to-1, but we really go by the numbers and what tests out the best. So in this case, we put our profit target at 800. Once we reach at 800, the system will automatically stop trading. Next is our trading hours. We can set exactly the hours of the day that we want this system to run. So I talk to a lot of people that are professionals or that have jobs that just doesn't allow them to be in front of the screen during the whole trading session. They might talk to clients, they might see patients, whatever it may be. This kind of puts it in auto drive for those hours and will automatically stop trading in the hours that you put in these inputs. So our MI entry, the way we have it set up is we don't use a delay. Like I mentioned earlier, a delay would, if I put in for example, a 2 here, once the market internals fires off the green arrow, it'll wait for 2 bars before it'll get into the trade. And in this case, we've left it at 0. We enable our bias signal. We have to have background bias. We have to. Excuse me. You know what? Let me shut off my Skype. Okay, sorry about that. So the background bias, you know, what we found using that as a filter really increases our odds. It really, the trades, the entries with the least amount of risk associated with them are the ones that have the strongest background, the up, up, down, down. So our bias signal is enabled. We also have the ability to trade in low volume environments. We get a lot of questions about trading overnight or the European session or the Asian session, whichever it may be. With the fear being if they trade it, there might be times that there's low volume. So we can enable that volume threshold and put a minimum contracts per minute crossing. And that will be one of the conditions before the system fires off a trade as well. We put it right now at 0. We found that that's giving us the best results at this time trading this instrument. Now, market structure is a huge component of our methodology. The 15 and 50 signal, we have to have on my chart, you could see the green line, the thick green line is our 50. With that signal checked, our 50 has to be green on a long trade, or it has to be red on a short trade. And so likewise for the 15 EMA, that 15 EMA is that dotted line that you see just under the candlesticks. Once we have our market structure, our background bias, our market internals, we've met all those conditions in order for this algorithm to fire off a trade. Again, a market structure being the 15 above or below the 50, whether it's a short or long trade, a huge component of our methodology. What we're gunning for is the basis of this system is we're following the flow of institutional money. We're following like a bloodhound where big money is going in the market. And with that disparity in the uptick and downtick, we kind of have our thumb on the pulse of where these institutions are either pulling their assets in, putting their assets in, or pulling them out. And we're kind of riding in their coattails. So that's a huge component of our strategy, is to trade in the direction of institutional money. So we want to respect market structure since they're the ones that create the trend. Now, another huge component of our system is what we call our MA diff. The MA diff, in this case, is the distance that our moving average, our trend line, the distance from the trend line to the 50 cannot be over 40 ticks. What we found is that once a long move, like you could see in my chart right here, once it gets overextended, price always wants to revert back to the mean, back towards the 50, and then it might continue in the direction of the trend or who knows, continue going down. But we don't want to enter a trade when momentum is waned and it's overextended. So we've kind of set a boundary that we'll only take a short trade or a long trade when our moving average is within 40 ticks of our 50 EMA. And that really is a linchpin of this system to keep you out of these losing trades. These high risk entries, it'll I'll tell you what I really love about the system. I'm about to run the test. Is a lot of traders talk about over trading be a problem. This system will sit on its hands like I've never seen an auto trader in my life. It will wait for everything to be lined up absolutely perfect, and it will efficiently get into the trades, the entries with the least amount of risk defined by our software associated with them. So we never want to trade into a VWAP or areas of support or resistance. We've coded our own ATM right into the strategy. A lot of other strategies, you'll be able to pin it on your chart and it'll run off your chart. This one is totally separate. Our developer, Sergio, you've never seen anything like him. He's just a master. He developed the ATM right into our strategy. And our strategy is, let's go over it really quick because I think it's, if not the most important, one of the most important features of this auto trader. In this example here, we're trading 2 contracts. Now, I have the ability to change this number according to my risk tolerance. If I start building some equity on my account, I always have that ability to scale up my risk and increase the number of lots that I want to trade, the number of contracts. Now with the NASDAQ, we could take a trade with 25 ticks of risk. Our stop is 25 ticks on target 1 and 2. However, our profit target for the first contract is at 20 ticks. So 20 ticks with 25 ticks of risk. Once we hit that first contract, that first target, our stop is automatically going to go to break even. We're going to lock in those 20 ticks of profit immediately. Our second contract is at 100 ticks. Now, a lot of people tell me, they say, oh, Rory, 100 ticks, good Lord. You know, you see your trade go 20, 30, 40, 50, and you're like, let's get out. Let me tell you something. We did an analysis of this. 33 or 34% of our trades that hit the first target go on to hit that second target at 100. And what that does is it brings our risk to reward ratio in our favor. And that's the big problem we have as futures traders. If we don't have that, what happens is we'll do great. We'll get three winners in a row. And then we'll take a fourth trade and wipe out all the three of those winners. I can't tell you how many times I've done that. It's just, it's just trading, just how it works. However, this eliminates that. And I'm going to show you on the results that we run here. So this is a data series of the NASDAQ. We're running it on a 2-minute bar. And we're going to run it from January 1st to the 29th. And let me just make sure my calculate historical is checked. So now we can run this here. And the results you see will come up right up on the strategy analyzer. Now, those results are, almost too good to be true. Okay. So what we do is if we come down here, we could find that we could put in slippage. So if we give it a tick of slippage on a minute bar, which is very fair, and we'll see how much it affects our results. Not much. So let's give it 2 ticks of slippage and play the devil's advocate. And you can see we're still getting outstanding results. Okay? If we look at the results and break them down, we have a profit factor of 12.78. Okay? This was run from March 1st to the 29th. We had 40 long trades and 20 short trades. Our winning percentage, that's 60 trades of 2 contracts. So in reality, over that month's time, my system had only executed 30 times. 30 times. Okay? That's efficient. That's efficient. So 30 entries of 2 contracts with an 85% win rate. What I really like the best is the average winning trade is 254. The average losing trade is 112. So our risk to reward is a little bit over a 2-to-1. So I like this strategy. So what I do is I take my template and I want to save it and I name it like I did yesterday. And I distinguish it from my other strategies and I save it. And then I can put it on my control center and I can run it in a live market. So if I go to my control center, another really nice feature with this, and we can see if I enable my strategies, and I right click on the RTY strategy, and I go to strategy performance, real time and historical. This template I know not to put on my live account. That RTY template is not doing well this week. So I go to my next one, and on my 1 minute on my NASDAQ, I'm going to check the real time and historical. Now this one's doing very well. So this week on this template, on the 1 minute data series on my NASDAQ, I had a 70% win rate. My average winning trade was $172, where my average losing trade was $123. So not too shabby. And it took 24 trades or 12 entries with 2 contracts each. Pretty incredible. Here's the NASDAQ on the 2-minute. This one's done a lot better. This one here is, has almost an 80% win rate. $198 is my average winning trade, and $130 is my average losing trade. So the results are incredible. And what's really exciting about this, auto traders, the ones that I've, used in the past, they might do well for a month or two. And they're very exciting for those few months. But what happens is after a few months, the market conditions change, something happens, and all of a sudden the thing goes dead on us. And it no longer is it producing those great numbers. So having the ability to be able to go into that strategy analyzer and putting these templates in and playing around with our inputs and running different parameters and different triggers and different conditions. There's hundreds of different variables, if probably thousands, if not hundreds of thousands. So earlier I mentioned our vision, including our community of traders. And our community of traders, we've opened a beautiful server in Discord. And if you decide to join us and become part of our community, you too will be a part of that trading community. And there's some power in numbers, where we're going to all work together to produce the best results. Now, I know this only appeals, probably to half of you. There's, half of us that we kind of want to dig in, get under the hood, and get our hands dirty. And then there's the other half who just want to load it and enable it and collect their profits. And let me tell you something, this is going to appeal to both of you. It's going to appeal to both of you. We're going to do the heavy lifting. We're going to always be sharing and updating these templates in our Discord chat group. Our settings are not going to become stale. And that is part of my commitment that I'm making with you today. So it's very exciting, very exciting. The equity curves that we've shown in this, that they've produced, have just been outstanding. So let me go back to our slideshow. And this shows my actual performance running this strategy on a live market. I ran it from March 1st to March 23rd. Okay. This was an annual back test. I can't guarantee that how accurate it is going back that far, but it's showed that it was extremely consistent. So right now we're in the process of building out the Discord chat group that I had mentioned. And this is where our community of traders will be sharing their results. We're going to have a resources channel that's going to have all of the templates when we update them. And you're going to be part of an interactive community of traders that are all on the same journey that, we're in this together. And we're all going to be there sharing ideas. One of the first things that people say to me when they hear about an auto trader is they get a little nervous about tech support. You may have had a bad experience in the past. Some companies have email support. I know NinjaTrader right now to get tech support can be a little difficult. But I want to tell you that our tech support is top notch. We have people that are calling us that have purchased the software from 10 years ago that we're still providing free tech support. We absolutely stand behind our products. If you purchase a product, you're always going to get a free update if there's an update to that product. And we're always going to provide you with the tech support and get the system updated and up and running. So the special offer that I'm going to make today, we did a special offer just for Traders Corner, and we're offering actually what makes it so special is not only are we taking $100 off either the monthly rate, which would come down to $299 a month, but we're also knocking off $500 off the annual price. So that would come down to $19.97 a year, which is really your best value. $19.97 a year. I think if you break it down by month, it comes out to I don't know, $150 a month, something like that. Less than half of what the monthly rate is. So those coupon codes are good through Sunday. However, if you're one of the first 10 orders today, what we're going to do is we're going to take it a step further. We're about to release new templates on a variety of numerous markets and instruments. We're very close to releasing an ES template. We're very close to releasing the Dow, which is one of my personal favorites, crude oil and gold. So if you're one of the first 10 orders, if you sign up with us, you're going to receive all additional markets at no additional cost. Okay. So the coupon code for the monthly is save $100. For the annual option, it's save $500. I'm going to put the link in the chat box, and then I'm going to go over the questions. Okay. So let's start at 4 o'clock, right about the time John stopped. Hey, Paul. Yes, Paul. The system runs on NinjaTrader 8. NinjaTrader 8 now is a free platform. NinjaTrader 8, you don't have to pay anymore. You open an account, you can start trading this system instantly. There's my daughter. Hello. Give me just a moment. Okay. I have a 4-year-old. My wife and I, we recently had our second, a little girl. So the family's grown. We've got 2 little girls. One's 4 and one was born March 1st. So just under a month old. What happens if you hit the trailing threshold? Oh, I'm sorry. That's not for my question. Yes, this actually runs directly on your computer. You wouldn't have to, it's not on the cloud. It runs directly from your computer. Yes, you can override the trades. The trades are going to show up. The system comes with 2 chart templates, 4 strategy templates, and the workspace. If you order today, you'll have instant access. You'll just open up the workspace and everything will be there. And the only thing left to do is going to be to enable the strategies. Yeah, Paul, Mark is still a contributor here at Right Line Trading. Listen, Mark will probably still be a contributor with Right Line and until the day he dies. He absolutely loves the trading community. And he still is a contributor. Adrian, I showed you the March results. Does this system have any issues with a trade copier? No. Great question, George. This system is great to use on a trade copier. If you do have prop accounts, if you use a trade copier, your leader account It will have no problem. We'll put the leader account right in the strategy, and it's going to give you the trade copy, or is not going to work perfectly well. Yeah, well, Sean, wait a minute now. Sean said that I use Unorenko bars in my testing, which is not true. Let me just go back, because that's a really good point. I don't want you to be confused. What I showed on Unorenko bars, for our visual pleasure, the Unorenko bar is beautiful. It takes away the static and the noise. If I was a discretionary trader, that is what I would want to look at. There's nothing more beautiful than seeing a chart like that rather than the static of a 1-minute chart. However, when I pulled up that strategy analyzer and ran the back test, let's go back for a minute. That's the performance. When I ran this back test in my data series, and I added a few ticks of slippage, in my data series, I have a minute bar. Okay. So although my chart is looking at a Unorenko, it has nothing to do with my strategy. I could put my data series here on, for example, a 2-minute. And regardless of the bar type that's on my chart, my strategy is going to still get me the same exact results. Okay. So that's a good point. I'm glad you brought that up, Sean. Can this be used with Apex? There is a semi-auto option, yes. Now listen, if you're trading live money, I think ideally you'd want to be in front of it. If there's news reports or something like, well, during a news report we recently made, had a $3,200 session. But if you see that it's trading into a huge area of support or resistance, you can always override the system. There's absolutely a semi-auto option to this, and we actually guide you through that process. Yeah, KK, you had the same comment as Sean. We're not running our tests in Unorenkos. We learned the same thing. That's actually why we switched. We've kind of done our due diligence with back testing minute bars, and they're extremely accurate. The recommended funding, that's a great question, John. Since the system can trade both micros and the E-minis and the full contracts, what we recommend starting with, our ATM strategy does call for 2 contracts. So if they're micros, if you have $1,000 or a couple $1,000 in your account, that would be more than enough. You don't want to underfund your account. You don't want to have any issues with margin calls. If you're trading 2 contracts on the NASDAQ and NinjaTrader is your brokerage, the margin requirement is $1,000 per contract. So if you're going to trade 2 contracts, I would put $4,000 or $5,000 in there, just to be comfortable and to make sure that I don't get an error message on the margins. Oh, thank you, Tim. How many computers can you? We do give you two licenses, and let me tell you, there's no other company that does that. Very few. If you want 2 licenses with normally it would be ×2, or they might give you a small reduction. However, listen, we recognize people have laptops, and some people travel, and some people have a desktop or an office computer. We want you to have access to the system. That's why you're spending good money on it. So we are going to provide you with 2 licenses. Okay. Now listen, there's a whole lot of questions, and I want to be able to respect everybody's time. If I didn't get to your question, and you have a question that you'd like to speak with me, please talk with the Traders Corner staff. They're going to provide me with the names and numbers. I don't want to go too far over my allotted time. Put your name, put your number in. If I don't call you today, it'll definitely be by tomorrow. It's kind of getting late today. I know everybody's tired. It's been a long event. But put your name and number in, and I'll answer your questions, and I'll do the best I can to answer your questions. And I just want to say, take a minute and thank you for your time. This is being recorded. Traders Corner assured me that we will get a copy of this recording. So we are going to send out a replay. And listen, again, I know a lot of you in the room here for going on 10 years now, and you're part of my trading family. And I'm excited about this system. And it's producing great results. And that's the bottom line. So I hope that you'll join me in this journey on this mission, because I'm ready. I've made my commitment, and we're going to go at it. So thank you very much. Thank you for joining me. I consider you part of my trading family. Thank you, Traders Corner, for having me. And I hope that you guys have a very nice evening.